but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Thursday to you both.
Hello.
Morning.
Good morning. Good morning.
We survived the Super Bowl.
The Super Bowl of earnings.
Yesterday.
Yeah.
Everything.
Oh, you did?
J-Pow
Yeah.
speaking.
I ain't going nowhere.
One single tear coming down the...
And I am telling you, I'm not going. No Dreamgirls fans? No? Okay, that's
No. Good rendition, I think.
Cleaning up on
No, that's J-Pow. That's you just didn't drop the mic, but we'll talk about that later.
Good job.
Yeah.
Super Bowl of earnings, J-Pow, the guy who wrote Take This Job and Shove It, passed. So can't sing that anymore.
Who was that guy? You can still
Somebody
say
like
it.
that.
That's
I don't know.
not
I always think of like something Allan Poe or something, but it's not. I mean, it's
Edgar Allan Poe?
like Edgar Allan Poe. He's got like three names
Oh,
or something
sweetie.
like that.
Oh,
three.
sweetie.
Yeah, I don't know.
Okay.
I don't remember exactly, but yeah.
Okay, well, R.I.P.
Some of my gold and silver.
Ooh, you're already trading?
Yeah. Well, gold's up.
He's got the bug.
Finally, gold is up. Yes, it's been getting hammered, but it's up 2%. All assets are up right now today, right?
Yes. Can't miss.
Can't miss buying assets.
Except for Meta.
Yes. Yeah.
Yeah.
Right. Meta didn't
Do
meta.
it?
I know. But it was kind of crazy day.
Yeah.
Crazy week.
Finally got some whipsaw, but it was all overnight.
Yeah.
You're getting GDP today. Woo! This morning.
Ooh.
But it's just January, February, March, so it won't really include any Iran stuff because it
course.
just like
Because it's impossible to put that in right now.
right, yeah.
Well, it might not make it look good.
Yeah.
So-
Well, no, but it just the war started like later in March.
I'm sure there's a great
it's a
excuse for all
component,
of it. It's all BS, you know.
So
I know.
you're getting that
people live on
today.
it.
We got Roost for lunch.
Ooh, that's a good one.
It is a good lunch.
We haven't had roost in a while.
I know. I think it's top tier.
They're gonna ask you guys for something. They're buttering you up right
Seriously.
now.
Yeah.
You know, that's what that is.
Yeah, roost. It's been a while. They moved to. They have a bigger spot now.
Oh, I didn't know that.
It's just
Is it right
down
there,
the
like
block.
on Damon and like Milwaukee? That's right up there, or
Yeah, Milwaukee
and
Halstead.
Halstead.
They're right at the corner there,
Yeah.
but they used to be at the other corner. It was just like a tiny little shoebox.
I hate that corner.
Yeah,
Yeah, it is a bad corner.
Yeah.
yeah, you got to avoid that one.
All right. Did you play pickleball last night, Nikki?
No, today.
Oh,
Today I will.
okay.
Yes, today I get my exercise. Yes,
Today.
Yes.
How's the back?
Better.
Okay, good.
Yeah, it's better. It's better. For now. I can tell.
Are you stretching?
Yes, stretching. Lots of stretching.
Lay on the floor, lift your knees to your
Yes.
chest, kind of thing.
Oh, yes. It's really sad. You know that's like you've peaked. Like your peak is actually behind you at that point. You know that's when it's down.
It's in the rearview mirror
Yeah.
by that point. I mean, it's not like it's just behind you. It's in the rearview mirror, far behind you.
There's still a lot of tread left on that tire.
I like to think so. Sometimes I get humbled,
Yeah.
but yeah. What did the tread on the tire trigger you?
Your poor back.
How about you, Bat? You're looking all jazzy, snazzy today. Like,
Really?
You're gonna go hop on your boat after the show.
Not in this 40-degree weather. You're not going to.
It's so cold.
Yeah, you'd be freezing. No, I think. I mean, usually I sleep like a log. Last night was the first night I didn't get my 8 hours of beauty rest.
Oh no, what happened?
I don't know.
Are the animals okay?
The mushroom pills. You need.
Yeah,
the
you need
mushroom-
No,
Gummies.
I don't want that crap. No, I don't know. I was just restless last night. Maybe, I don't know.
Maybe the 4 gallons of coffee you drink a day?
That's
I'm just
true.
spitballing. Spitballing here.
No. I was good. I don't know. Can't figure it out. I mean, I'm entitled. I mean, 99% of the time I sleep.
Well, you are entitled.
I set you up for that.
You did. You can't.
I set
sorry.
you up for that. Do you really think I'm entitled? Oh.
It was a reflex. Like you set up and she was
I
like,
get it.
I know.
I get it.
No, not really. Not
All right.
really.
All right.
But
Yeah, but no. I didn't even watch any hockey last.
I was going to ask. That was my next
No.
question.
There's too much. There's too much of it.
Yeah, I'm.
Yeah,
Well, I didn't know if you're doing basketball though.
No,
Now,
hell
no.
no.
Okay, I don't know
that product.
basketball.
Yeah.
Oh.
Maybe because the Bulls are just never good. Anyway.
Yeah.
Wimby is good.
Yeah.
Like he's putting on a clinic.
Yeah.
I don't know. I just repeat things that I see on Twitter.
I haven't watched basketball in a while, but yeah, playoffs are always fun.
Yeah.
But yeah,
I know
Playoff hockey, if you're a big hockey guy, I imagine is awesome. As a casual hockey fan, there's there's too much going on.
yeah. I mean, I don't consider myself a big hockey fan. I'm a casual hockey fan
Yeah.
too, but it's enjoyable to watch, and it's always exciting when you do watch it. But I'm like you. I've had a little bit of enough. I took a break.
I have
Yeah.
something for you because even I forgot because I think this will appeal to your degeneracy.
Oh,
Kentucky Derby this weekend.
Oh, I had no idea. I didn't
So
even
you
know
want to hear
that.
the horses? You want the odds? You want the horses? The odds? What do you want?
Is it, I mean, is it a
horse.
square pool?
Okay, hold on, no, you guys are alive now. You're like, oh, we are locked in.
Is there a
Vanetta.
square pool we can win? Is there something we can do?
no. No.
All right, so you want to start at I'll do the top 10. How about this?
Okay.
Top 10 horses. Coming in at number 10, 20-1 odds, Wonder Dean. We have a Wonder Dean here.
Yeah.
He works in graphics.
Okay.
Wonder Dean is there. That's the number 10. Number 9, oh, I like the name, the Puma. The Puma at number 9, 7-1 odds
That's good.
for the Puma. So for that, number 8, So Happy at 6-1 odds.
Can't do that one.
Okay. Number 7, Dannon Bourbon. Ooh, I love that. I love a Kentucky straight bourbon. Dannon Bourbon, 14-1 odds.
Okay.
There. And then coming in at number 6 for the religious commandment.
Oh,
Thou shalt not miss this parlay.
Yes.
Yes, commandment, 7-1 odds. Number 5, love this. Right to party.
there you go. There you go.
You got to fight.
Yeah.
At 30-1 odds, though. 30-1 odds there for right to party. Number 4, litmus test. Oh, interesting. Little litmus test.
Yeah.
40
They do
to
that
1
in school
odds.
anymore? I doubt.
Number 3, I might butcher this name. Intrepido.
Intrepido, so-
Intrepido, I
okay.
think. 59-1 odds for Intrepido. Number 2, Albus at 49-1 odds. Albus. And the number 1 horse, Renegade. 5-1 odds.
Right.
So, Nikki, are you going to make some bets?
I guess.
I twist your arm.
Yeah. I'm gonna look and see the gray horses. So
Okay.
if there's a gray horse, we'll put some cash on that one.
And these odds were as of
My buddy
yesterday.
Sonny used to do that, gray horse.
You're the eye that I learned that from you. I mean,
Yeah.
I don't know horses. I will say when you get to like the, dingy, like you go to like what's the horse? Arlington.
Oh, yeah.
Like you go to Arlington.
Sure.
The gray horses do perform.
What is
hit
what's a gray horse?
like a gray
Great color.
Gray color.
Oh, just a
Great
gray
color.
color. Oh,
Yeah.
I thought it was a
No,
metaphor.
nothing scientific.
Okay,
Nothing
okay.
really researched here. Just
yeah.
a gray horse.
Usually they're all like brownish.
Oh,
Yeah.
I
Like
see.
you get a gray one, and it like stands out. You can actually like follow.
Oh, I
So,
see.
Yeah, but when you
Okay.
get to the lower tier horse races where it's probably a lot more random,
Okay.
those are fun. We did like a boys outing there. Like 10 of us got
Fun.
a box and did all the
Oh, that's fun. Did you dress up?
No, this is Arlington.
Oh, okay,
this is
well
just,
then-
like kind of normal.
I haven't. Do you ever have your picture taken with the winner in a circle?
I've never been to a horse track.
We gotta get you. We gotta get you degenerated up.
Where would I have been to a horse track?
No?
Yeah, but you can't be at a horse track and not bet.
Yeah.
Thing is, you have to.
Yeah.
It's just part of the.
I mean, my friend grew up on Long Island, and her dad would take her to Belmont.
Used to go to Belmont Aqueduct in the morning, Belmont in the afternoon.
Yeah, but I did not grow up on Long Island, so.
Yeah, fun time.
But yeah, so good luck to all of the horses.
Yes.
But that's something for you
Yeah,
guys.
something to do.
Yes,
See,
all
I
right.
had nothing to
Excited
look
about?
forward to. Now you have
Yeah,
something to look forward to.
thank you for adding to my degeneracy.
Yes,
You know that was, like a part of this. I appreciate it.
I'm
Thank
looking
you.
out. I'm
Thank
looking
you.
out for you.
Yes, thank you.
So there's that. I just like to see all the fashion, like the
Yeah.
hats and the dresses and the guys and like.
Is Tay-Tay going to be there?
Actually, she is. So you opened the door. I wasn't going to say anything. So she and Travis Kelce have actually invested on a horse. So he'd actually invested in a horse called Swift Delivery. Love it so much because he's obsessed with this girl. But now I think they both have gone in on a horse together. So the streets are saying, chat is saying that they might both be there. And
Wow.
gagged.
I mean, shoot,
Yeah.
how the hell are the rest of us supposed to, survive out here with just flowers when he's getting horses? you
Right?
know?
Right?
Jesus.
If he wanted to, he would.
Yes, exactly. If you wanted to buy you a horse,
he
he would.
raises the bar.
When is the wedding? Is it?
I don't know.
Oh, they don't have a date for it yet?
No, they do have a date.
they do have a date.
It's not public information. Like,
Oh,
there's
so they said they have a
assumptions.
date, but they haven't sold everybody.
Right. No,
Oh, gotcha.
it couldn't.
Have you tried?
I wasn't being a jerk. I was asking
No.
a
It's not.
question.
No, and also,
Usually
like,
I'm a jerk.
Also,
not what-
I want people to be aware that I'm
are in the industry.
I'm not delusional. Right. Like she's my best friend. I'm not her best friend. No. But like, I don't know anything that another regular.
No, but you
person
know
doesn't.
more than I know.
Sure,
I
that's
mean,
true. That's true.
That's all.
Yeah,
But-
you're on all the Reddits. I
Yeah,
mean,
that's
you
true.
know
That's
where-
true.
Yeah,
You know
yeah,
what's
yeah.
happening.
That's true.
Have you tried like emailing or like reaching out to like one of the promoters or managers and just kind of give them like almost like a phishing email, like the phishing emails where it's like, hey,
We get those.
yeah, hey David, like I lost my invitation to the wedding. Can you send out a new one, like that sort of thing?
No.
Good.
No.
Good. Then you'll get everything, all the
Yeah,
information.
you can
you need.
try.
But could you just imagine, like, how, like, it's so unfortunate and sad that, like, because of like the mass number of people, like you can't like just live a normal, life. But I know that's part of like fame or whatever. But it just sucks because like she was just a guest at a friend's wedding and it became like total chaos.
Sure.
And it wasn't like she
Sure.
was just
I
a
get
guest.
it.
So
Sure.
like, that's not.
I'm
cool.
gonna do you a favor. I'm supposed to talk to the great one, the old great one, Saz, this afternoon.
Oh, that's-
I'm gonna find out what his top 3 horses are. For
He goes to the Derby sometimes.
Yeah,
Like,
yeah. So we can eliminate those because they never win. Because I always know.
Okay.
So we eliminate those, and then you'll be 3 horses you don't have to worry about.
You
can make
need
a
to
better,
call
more
Jules.
Intelligent bet.
Yeah, Jules probably has.
You
some
need to call
insight.
Jules.
Yeah,
Jules,
that
is true.
Yeah, you gotta go to the old time degenerates
Yeah.
for horse racing.
Yeah.
I mean, like you can't go to these young kids for horse
Yeah,
racing.
no,
That's
no,
what we're gonna do.
no.
We'll do that.
Ooh, there is a horse, number 15 horse. His name is Emerging Market.
Oh,
For the
not
traders
bad.
out there,
Yeah.
little EM, a little
15
emerging
to 1
market.
I'm seeing here.
Well, I'm seeing. Well, yeah.
Yeah, you're-
I have
might be-
odds from yesterday. So
Yeah.
yeah, emerging market.
Oh, I like that. I like
Uh-huh.
middle of the pack odds. That's a good one. Okay.
Okay, so if this cashes, Nikki, I for sure get Chick-fil-A.
For sure. Yeah, my $25 bet. You got it.
Anyway, we got a great show for you today. If you want to make a run for the roses, a lot of great content headed your way. It is a thrilling Thursday as we end the month of April. Right? How many days are in April?
30 days has September, April, June, and November. I had to do that this morning myself.
I was like,
Figure out if
wait, I was
have
like,
to
how
change
many
my
days?
Watch or not?
Okay.
Yeah.
Yeah, make sure you pay your bills.
Yeah. May 1st tomorrow.
But it is a thrilling Thursday here at Tasty Live at the top of the 8 o'clock hour. Fan favorite that you definitely want to bet on. That's trades from the research team. They're going to present their trade ideas to the bats this morning. And then at 8:40, we have Johnny Trades, our own Nicholas Batista, with a neutral, bullish, and bearish trade that he will present for you fine folks. And then 9 o'clock for market measures, why SPY dominates our research.
It's pretty much just a breakdown of why we use SPY. So we're going to talk about liquidity, strike selection, just overall volume and open interest that trades and notional value that trades in SPY every single day. Just kind of we get that question all the time of like, why do you use SPY and not Apple or Qs or something else? And so we're going to kind of talk through that.
I mean, it seemed pretty obvious, but what do I know?
Well, yeah, it is obvious, but we're going to give you like the reasons.
I do like the reasons why. I'm a
Inside
why.
obvious.
I'm a why person.
It's a basic one. Sometimes we go real deep into the weeds with stuff, and sometimes
Yeah.
we just kind of
Okay.
Do an easy one.
I respect that.
Market's making a run for the roses right now. I mean, S&P's trading to the highs.
Ooh, thank you, tech companies. Then we have live from the trade desk. We have Quentin in the house.
Yes.
Q counting down all the top trending tickers over at Tasty Trade, and Glenn, Mr. G Money on the FX side of things.
Yes.
So, super.
Yes, I have to take off my Euro Japanese yen. My short Euro, long Japanese yen FX.
The yen's got almost a 3% move to the upside. That's
I know.
never happened.
I know. This is good. I get my
You get back to March.
my quick $90 on that one. Let me do it one
Ew.
click. It hedges some of the long US dollar short shekel that's out about 500 there. So we're close. We're getting our money back.
You're moving. You're grooving.
Nice.
Yeah.
Hey, you guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story,
today's
breaking
headlines.
news, across the wire. Our leading story, top story, just in.
In today's headlines,
Breaking news.
All right, everybody. Today's a thrilling Thursday. It's April the 30th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
What would you name a horse? Didn't you own a horse?
So
You own a horse, yeah.
I own a few.
This is the fun thing about working with traders, like all the random side businesses and quests. But go ahead.
We had, I mean, the one that ran that was actually a winner, Blue Royal, was.
Did you name it though?
No.
Okay.
It was a conglomerate.
Okay, sure.
I named Sibo. I had a Sibo. I named the horse Sibo.
That's a good name for a
yeah.
horse.
Yeah, I named the horse Sibo.
And
we
like
had-
SEEBO.
Yep.
Okay.
Yep. And then we had another one. Your mother loved it. Explosive Affair.
Oh no.
Ooh, that's good.
Okay.
That came with its name, though.
Okay.
Yeah.
How about you, Nikki? If you
Margin call.
margin call? I'm sure. I wonder if there's ever been
Why
one.
not?
I'm sure
Why
there
not?
is. Or like crab trade. I thought crab trade for you.
I've never really. This is it. You've got me on the spot. but
I know.
I think a margin call would be good name. Margin.
Yeah.
Mm-hmm.
I think that would be.
Okay.
That'd be good. Yeah.
That's so funny.
Yeah.
I was just curious.
What would you?
If you're making the call, if you're receiving the call, it's not a good one.
That's true. That's true.
Obviously, I don't know. It would be something Taylor Swift themed, like obviously, or something.
Mm-hmm.
I don't know.
Like what's your favorite song? You could-
Oh, honey, that's like how we don't have
Oh,
time for this.
Sorry. I'm so sorry.
It's a very personal question. It just really depends on the
Can't
mood.
pick one. Are you?
I can't pick one. I can't.
Yeah.
Hey, but this is the part of the show we like to call the Daily Dose. Are you ready for the news?
Sure.
Earnings for tonight, Mr. Bat.
Oh, you still got Apple in there.
Okay, I've heard of them.
Moderna, if you're still in that one, it's a $47 stock, so it's had
I
some
think there's some this morning.
SanDisk. Oh, some this morning. Yeah, I mean, you had like
Eli Lilly, Cat,
Lilly. Lilly was up big.
Mastercard, VLO, Royal Caribbean,
Yes, Lilly was up like $50 or something like
Apple, SanDisk, Reddit, Western Digital,
that. Amgen,
SanDisk, Western Digital, memory stocks. Those things have been flying around.
XOM, if you're in the oil
Roblox
field.
in there. Roku, I haven't talked.
Okay, so what
First
isn't
Solar.
having earnings then today? I know.
I think
Over
this-
the last 2 days, I know.
This week, I think is like
Yeah.
the meaty
60
part.
or 70% of the S&P 500 report.
You're right.
So today, yesterday was the biggest day, but today will be the second biggest day.
Right. They also ran.
Yeah, this will be another big day. So.
Jerome Powell says he will continue to serve as Fed governor and calls Trump's criticism unprecedented. He will stay on the board of governors for an indefinite period, while a probe into the renovation of the central bank's headquarters continues. The Fed came back with their decision yesterday. Of course, they're leaving rates unchanged, but it was an 8-4 decision. And the last time the Fed had been split like that was all the way back in 1992, I believe. So... but let's talk about bonds.
I actually sold a put in bonds yesterday. They made.
Well, you are the world's worst bond trader.
Yes, I am. But I haven't tested no fortitude. I sold them when the bonds were around 112.25. They're 112.29 right now, but they're up 7 ticks. They traded lower last.
Hey.
So they've been going lower, but obviously I sold puts, so it's time for them to stop.
Okay.
Yeah. The currency positions are working a little bit today. So on the other side of the bond move, like euro is up, Japanese yen is up, the dollar is generally weaker. You got a bid in gold and silver, which is helping here too. So that's kind of a surprise given the move in the bonds. Because you have bonds much lower.
The next story comes from oh no, that's real sad. That's real terrible news. Bill Ackman's Pershing Square USA
good, right?
flops in its first day of trading. Oh no, that's terrible.
It's a weird name too, like
Pisus.
all right.
It's PSUS.
Yeah, that's more like Pussusus.
Pisus and then PS. So PSUS and then P. So after years of working towards a U.S. IPO, billionaire investor Bill Ackman finally kind of sort of achieved his goal with the public listing of Pershing Square USA, a new closed-end fund. Wants to be on that Berkshire-ish, but it did not go exactly as planned. Shares of Pershing Square USA fund sank 18% as soon as it hit the market. Way to win. Although the listing price was set at 50, shares traded as low as 40. Dole his.
I hope it goes to 0.
Right?
Yeah. I mean,
He did call into the show. I mean, he's the only one who ever called into the show. So I mean, I give him a little. I don't want to go.
what'd you guys talk about? Remember?
No, it was a while ago.
Probably Herbalife.
Yeah. I remember. It was a kind
I don't remember.
conversation.
Was it?
Yeah.
Yeah, it was a
I don't
kind
remember.
conversation.
Oh, that's good.
Yeah, it wasn't confrontational or anything like that.
Yeah.
It was good.
Okay.
In other news, Bitcoin is having the best month in a year, but the retail crowd is
Doesn't
looking
feel like it.
elsewhere. It doesn't feel it. Did you know? Did you look at this? Do you want to guess how much Bitcoin is up for the month of April?
Oh, I mean, off of its lows, I think it traded
Off
down to
of
65, and it's maybe
20%.
12,000.
Yeah, 20%.
12% so far for the month of April. For
Okay.
this,
Oh,
so
yeah.
for the month of April. So, but it's its biggest monthly gain since April of 2025 when it rose 14.3%. Bitcoin has been trying to claw its way out of a
Yeah, I was
bear
going to say,
market.
but that's probably from higher highs.
Sure,
The first
yes.
time. This is from
We can all be right.
recent
right.
lows.
Yeah.
Yeah.
You're right.
Yeah.
So it doesn't feel as good.
But nobody's talking about it, and I don't.
Yeah, which I think is good. Like, you know, if it gets too
Yeah.
much hype, then the move is probably over. So let it stay in the weeds
Yeah.
for now.
What are you doing in coin or?
I have not been trading coin. I mean, I'm long IBIT, which has helped.
Coin
I've
hasn't.
traded MicroStrategy a handful of times.
Yeah.
Why?
Yeah.
I'm a
choice.
glutton for pain.
Okay, cool.
Not the sharpest tool in the shed.
Our Bitcoin trading has been mostly long IBIT and then
Yes.
selling calls into rallies. We've done this via call ratio spreads, adding extra calls, extra units.
And it's worked.
And it's to a small
Degree.
You know, the meat of your position is the long
Sure.
spot, and that is down, 5%. And then you make like a 1% buffer on the short calls, just kind of scalping them month to month. So
Yep.
that has been.
It's allowed you to hold on to
It's
it.
allowed you, yes, it's made it more digestible for sure.
Nice.
IBIT's up about 50, 60 cents, so you put that in your pile.
I sold a tiny bit of E-minis here.
That's an
Tiny
opening
bit.
trade.
Tiny bit.
The silver and gold were closing trades. This is an opening trade.
Yes, just a tiny bit.
Got it.
Hey, let's get to the crap ton of earnings that came out last night. Meta beat on revenue, but showed disappointing user numbers, which they promptly blamed on Iran. Like, Meta, how much of your revenue depends on people in Iran? Like, it didn't really make sense to me, but I was like, go off, I guess. So they had disappointing user numbers, and their CapEx was below the estimate. Meta said CapEx for the year will be between 125 and 145 billion dollars, up from 115 to 135. Meta's revenue did come in at 56.31 billion versus 55 expected.
It's probably the only one that moved outside the expected range.
Not by much. I mean, it was a $50 expected move.
Yeah, it's right there,
It's
$50. It was
yeah.
down 60 a moment ago. It's down 50 right now. I met it back into its most recent move here from around 525 to 675, and now to be 600, 610.
Yeah. I'm a little surprised.
You thought it was going to do better?
I mean, I thought the bad news for a Meta and a Microsoft was already baked in. At least the reaction.
Yeah, but then they released this photo.
That's true. But this photo, that could be Vinny. Like that, you know what I mean? Like
Vinny wouldn't be quite dead looking like that.
Vinny's got those glasses. Like he's the Pit Vipers.
Those are so 2 years ago.
Was it?
Yeah, last summer or something like that.
Zuck's
yeah.
just trying to blend in, you know.
Yeah.
He's
It's the preppy look
shifted.
now. They're going that direction.
Oh.
Yeah, it's the Peter
Back to-
Law, golf kind of
Vineyard Vine.
vineyard. Well, Peter
That
Law.
was-
Vineyard Vine's a
is
little
it?
too.
The
Peter Millar.
Oh, Peter
Yeah.
Vidal.
I thought you were saying PBR.
Yeah, I was like, okay, all right.
Yes.
They should raid Todd's closet.
Yes. They are all trying to look like Todd when he
Yes,
gets older.
more
That is correct.
T-Max.
That's what the
Clock
boys are
it.
doing.
Clock it.
Yep.
Okay.
Yep. That's what they want.
Hey, in other earnings news, Microsoft beat on top and bottom lines on the Azure cloud growth. The company said it had over 20 million paid seats for the Microsoft 365 AI. Microsoft brought in revenue, this is crazy, of $82.89 billion versus $81.39 expected. Microsoft's revenue grew 18% year over year.
Microsoft is going to be a home run today.
Oh, for your position, yes. I mean, and now the stock's actually rattled a little bit. It's down $4. It's down $10. This is
Yeah, but
Even
this
better.
was the highest vol of the group.
Oh,
Yeah.
it was?
Ivy ranking 98.
Okay,
Ivy
yeah.
rank wise, I mean,
Ooh.
the May 1st expiration had 137% implied volatility. The May expiration at 51%. When you look at something like Tesla has 46% implied volatility in May. So, you know, a Tesla as a stock that historically goes bananas in both directions,
Has relatively low volatility.
lower volatility than Microsoft, which is
Bonkers.
kind of unbelievable. So
The big gorilla in the room. Yeah.
anything you did here, even if you did like, because I have diagonal spreads that I put at when the stock was a lot lower, so they're at the money / in the money, so it's been, you know, a good ride up. But if you sold premium against in the weeklies, that is juicy premium. We're talking about, you know, the 450 strikes at $5. Those are going to be $1.
Yeah.
You know, like you might have a little bit of bid for today just because you have Apple earnings after the close. So maybe you kind of price in a little bit of a continuation if Apple earnings are good. But if you did anything here, you are definitely going to make
Yeah,
some.
if you sold premium anywhere
Like
around.
volatility
Stock's up
is just so
down $4, I mean.
And Microsoft's CapEx, they were like, yeah, we're going to spend $200 billion, deal with it.
But here too, though, I would have thought inside up if it was going to be anything, not inside down in Microsoft myself.
Yeah.
Yeah.
But I thought that in across the board,
Yeah, okay.
which is what we kind of saw except for Meta.
Right.
And I thought Meta was the most likely inside up. Just
Google, Alphabet, whatever you want to call it, beat Wall Street expectations for first quarter revenue. Google Cloud topped $20 billion, growing 63% over last year. The company also updated their full year CapEx, and they're also going to do $190 billion. Everyone gets $190 billion. Google brought in revenue of $109 billion American dollars
Unbelievable.
versus 107, which was expected by analysts. That is just a crazy number for these
And that
times.
crazy number is going to be rewarded in the stock today. 377 is up about $27. That's be a new, as you say. All-time
Yeah.
high.
But it's interesting because like all of these companies now, like literally I make jokes that the entire global economy is based on NVIDIA because everyone needs these chips now. But as these companies start to make their own chips and then send those chips out to other companies, so Google is in that.
Yeah.
So like if you believe in that, you know, maybe get behind it, but do whatever you
Yeah.
want. But
Yeah.
Yeah, I mean all of these companies, Amazon is in that bucket too, where
sure.
you know they're big enough to where if they start making a usable chip, and
Right.
they are, the fervor that you're seeing in the memory stocks and in the chip stocks, you know, you're talking about a company that does $75 billion on other stuff. If they're doing another 25 on chips in these.
Synergy. I mean, it goes to the bottom line is all
Yeah.
I'm going to say.
Yeah.
What a time to be
Unbelievable.
alive. Speaking of Amazon reported first quarter results that beat Wall Street's expectations. Revenue in its cloud computing segment, AWS, expanded 28% year over year. Amazon's revenue came in at $181 billion. You're welcome. Some of that's for me. Versus 177. That's just a crazy amount. Just the web services part brought in $37 billion, another 17.24 from advertising. They're doing CapEx tech stuff. They're making chips. What did you do in Amazon?
New all-time high.
It traded the first move was like 150 or 250. It was down like $10 or $15. Which is,
and that's when you saw those futures on the NASDAQ futures last night go from up 150 to down, back up again, then down.
That was right after.
There was some big whipsaws
right
last. Yeah, right after the close. Yes.
Yeah, because you had them all. They all come out within the first like 5 minutes. Apple is at like 30 minutes after the close.
I think it's like 3:30.
Yeah. But a lot of them had, the first move was kind of unched slightly lower. Even in Google looked like it was basically unchanged, and then it kind of just grinded higher. But all of them looked like for a moment it was just going to be a buy the rumor, sell the news, but not so much today.
In other earnings news, Qualcomm shares surged as their CEO said they would begin shipping data center chips to a large hyperscaler within the calendar year, if that means something for you. Also adjusted their revenue range to $9.2 to $10 billion. And their revenue was in line with expectations, came in at $10.6 billion. So Qualcomm's revenue was less than what Google makes for YouTube ads. What?
They're in the wrong business.
Right.
Qualcomm 172 up about, I don't know, you want to say $15 or so.
Yeah.
Not at new all-time highs, but significantly off its low where it started the month, about 125. What's that? About the expected move.
Around the expected move to the upside. But it's one of the chip names where you throw a dart at these at the board here. It's about the only one that you could miss on is Qualcomm, because the rest of the chip stocks are new highs. Qualcomm is like just grinding back to like the middle of where it's been trading.
Okay, but we like a couple months ago we were saying that about Amazon though. Like it was so like
you're
100%, 100%. Yeah,
markets move.
Yeah.
Interesting little surprise. Chipotle posted surprise same-store sales growth in the first quarter, an initial sign it could be starting to break out of its slump. The restaurant chain maintained its comparable sales outlook. The burrito slinger brought in revenue of $3.09 billion versus $3.07 expected.
Vinny is participating in this. Stock up about $1.50 to 34 and change. Still on the low end of its recent range.
I'm closing the rest of my silver.
Silver up almost 3%. It's a huge move. So good job out of you.
Nice.
Look at you. Buying low, selling high.
I'm getting to like the dregs of their earnings, but also Carvana, their stock popped as they reported results
too, didn't it?
That topped Wall Street expectations. Yeah, the stock's up like $30.
Yeah.
Carvana stock was up as much as 10%. They brought in revenue $6.43 billion versus $6.08 expected. And yeah, their sales was a 40% increase of vehicle sales compared to a year earlier.
Because they had a sale this year. Carvana 424 after closing under 400 last night, like you said, up $30 or so. 25, $30.
I missed it because I was closing my silver position, but we did sell a put in CMG.
Oh.
I think this might be the first time I ever make money on CMG because that stock is
love that for you.
Such a dog.
Now you can afford extra guac.
There you go.
Yes,
there you go.
Yes. It'll go towards
Guacamole's pretty good, though. I'll give them that.
Yeah, the guac is good. I like Chipotle.
And the green salsa is pretty good, too. I'm not gonna lie.
Yeah.
All right.
Salsa
I give some
verde.
props.
Did you do anything in Carvana, Nikki?
I did not.
Okay.
That's a tough one.
Yeah, I have my fill of the, Momo type face ripper stocks like your B's. I put this in that bucket of just like
B up another $7-8 this morning too.
It'll be 300 today and then 350
I
tomorrow.
thought that was Intel that was going to be 300 today.
No, Intel will be
100
today. It was
Sorry.
100 pre-market.
Got it.
Yes, of course.
I missed this yesterday, but we'll talk about it now. But Ford, their earnings were really good. Ford and GM had like good earnings. So because we talked about Carvana, I was like, oh, I didn't know if you guys were doing anything in Ford. Ford is raising their 2026 guidance because they're going to get a fat check from the government because of the tariff refunds. We will not be getting a check, but Ford will be getting a fat check. They're going to get a $1.3 billion tariff refund benefit.
Nice.
What are you doing in Ford?
Ford down though, right down to
it's down
1170 or so, down around 50 cents or so. I don't know. We don't do any. I don't do anything in Ford.
Yeah, I know. And this was yesterday, so I just missed. But anyway.
Yeah. I know Jenny loves trading Ford.
Yeah.
Jenny's a bit.
She's been, selling calls again. Like she's had that stock for a while.
Yeah, I think she said was there a Ford pit?
Yeah, of course it was a Ford pit. Yeah.
I think she said yesterday she was in the Ford.
Frankie will correct me, but I think it was in your grandfather's pit. I'm not 100% sure. Well, I know he traded ExxonMobil, but I thought Ford was in there too, because the pits would have a few stocks in them on the equity side. Some of the fringe ones would be with some of the bigger ones, so they can get quotes in all of them. I don't know. I can't remember. Frankie will remind me.
All this news with the tech stocks definitely sending the market higher this morning, especially on their promises of just more capex, just hundreds of billions of dollars. And that's benefiting Anthropic this morning. Anthropic is now in talks with investors about raising cash at a valuation of $900 billion. Because, they're going to get like $40 billion from Google. So why not, girl? Funding at that level would push Anthropic past OpenAI, which was most recently valued at just over $850 billion. What are we doing?
Oof. The numbers are getting huge. They could just go to market and put that out there, but
I know. I don't even know what series of funding this is. Like X, Y, what round? What round are you on?
Probably have to go to numbers.
X 2.0.
Yeah.
I don't even.
X2.
I don't know.
Yeah.
Yeah, that's
it'll be fun to the good thing about all of these companies is when they do become public, it's going to add to the basket of like really tradable underlines.
Yeah.
You would expect Anthropic markets to be penny wide. Like it's going to be traded like Nvidia, like Tesla, like an Apple.
Sure.
But it's going to add another stock to that batch that we're always going to have a position on it, I feel like.
Also, your GDP came out. GDP grew 2%. Core inflation hit 3.2%. We didn't even notice the number came out at 7:30. So
market.
Even the S&P sold off maybe 10 handles or so. You sold them up at 72.07 or so. There's 7,200. So I didn't move too much.
I don't know if this is right, but in this story it says Anthropic was valued at $380 billion in February.
Yeah. February.
Nice.
That was February.
That's like $10 billion a day.
Come on, what's wrong with you?
What? Oh, it was okay.
That was February.
Cool. Uber is Uber is partnered with Expedia to begin offering hotel bookings through its app. The feature which is only available in the U.S. at the moment, includes more than 700,000 accommodations. Filters will be available based on pricing, ratings, hotel class, and amenities. So if you want to book the equivalent of a 2015 Nissan Altima of hotels, why do I need Uber to book a hotel? I'm being sincere. I don't feel like that's a friction.
Because obviously the stock can't do anything without you booking.
But I don't feel like it's a friction point. I feel like people have ways to book hotel. Like a friction point is, hey, how do I get home? And if I live in an area where there's not cabs, yes, that you solved for that.
Seems like a crowded space.
Right.
Yeah.
Doesn't seem original.
Right.
I agree with you.
I was like, you're going to give me a hotel with your crazy Uber markup?
Right.
No, thank you.
Right. I agree.
Yeah.
I agree. Or your surge pricing on your hotel.
Right, but maybe I'm not.
You need a hotel? I see you've checked 5 times.
Right.
We have
maybe
surge
I'm not
pricing, but I can get you
vision. But what are you doing in Uber?
I have not traded Uber in quite some time. It's been languishing in the 75 handle. It got caught in the SaaS apocalypse. Because it is kind of in that software grouping.
Sure.
I couldn't imagine keeping my focus on Uber right now when things are popping off.
There's so many
Agreed.
other things.
It just
Agreed.
hasn't been a focus here.
That's a good point.
I don't have a big, I don't have a bone to pick here, either direction.
Okie dokie.
I have something that could disrupt the fabric of society. As
Oh
a-
no.
Oh,
No.
the UFO files?
Shake Shack
Damn.
making a McRib.
Oh
No.
Well, yes.
Oh, no,
they're,
Shake
they're
Shack,
taking
shame
us.
on you.
They're
Have you jumped
shots
the shark?
fired. Yes. Yes. The reviews are out. Like people are clocking it. It's a boneless barbecue sandwich. It's a real deal barbecue sandwich. It's got like a slaw on the top of it, and they're reviving their smoky barbecue menu for the summer. So you can get the smoky barbecue rib sandwich. You can get a barbecue burger, a barbecue chicken sandwich. Ooh, that sounds good. And you can also get spicy fries with ranch.
I say yes.
SHAK is Shake Shack.
Nah.
So I'm not sure, but I don't eat pork, but this at least looks real.
Yeah, I
Does.
haven't looked at Shaq in a while.
It's got a good IB rank of 87. It's been hanging out right here at 100. It's there today, maybe unchanged. Earnings are May 7th. I've traded Shaq from time to time at lower numbers on a kind of a bullish play for it. I haven't traded in a long time.
The ribs are slow cooked for 9 hours and marinated in a proprietary barbecue spice blend with apple cider vinegar that
Yum.
delivers flavor in every bite.
All right, so they're not like rib and rib
They're not
byproduct.
right.
Yeah.
Right.
All right.
Riblets.
And it's actually probably put on a griddle.
Yeah.
You
Yeah.
can actually get like a
Okay.
little-
Yeah.
All right. Maybe,
I wanna-
maybe something there.
I'm
I love
for
everything
it.
Shaq does.
I want to try their barbecue chicken sandwich. That looks good.
Yeah, the chicken sandwich is
chicken
very
is-
underrated there.
Their chicken
It
is
is good. It is
I
really
agree.
Yeah, all right. All right, Shake Shack, come through.
Yep.
Hey, finally today, for my viral video, sometimes when you rescue a dog, you're not quite sure because they're like, oh, look at his paws. You could tell, how big it's going to be, or look at the ears, or like whatever. But this family adopted or got a Labrador, or did they? Watch this.
Oh, that's good.
The comments are like, that's not a lab, that's a limo. Like you got the crew cab edition.
That is so good.
Yeah.
Good. That is good. Oh my god.
That's not a pedigree.
No, it's a Basset Hound. It's from a
That's not a show dog. No.
That's
From
not
a
a shit.
rescue, and she is a Basset Lab mix.
Okay,
So
that makes sense.
her name is Ellie. Aw.
I'm very cute, but that's not a pedigree. All right, we're going to take a quick, that's not Italian. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with a look back at yesterday, confirm and send, a whole bunch of stuff, trades from the research team. We'll be back in 90
Yes.
seconds with Tasty Live.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide. When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets. But now I just kind of think of it as that little line of information on your screen when you're watching your financial news outlets and seeing what all the different products are currently trading for.
What's a Johnny trader?
A Johnny trader is defined as Nick Batista and myself. We are smaller traders, smaller accounts, mid-sized accounts where we can't sling anything we want. We can't do multiple contracts of anything we want. We are really defined to specific parameters in trading in a small way. So a Johnny trader is just someone that might be doing one lots, one contract here and there, or trading smaller price products.
like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
First thing about tastytrade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform, so I love that.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with tastytrade. Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with tastytrade.
Niggy, we are back, son. And you know what that means? We got a nice little tasty extra. Look back at what happened yesterday as we look forward for a moment.
What did you think of yesterday? How did yesterday feel to you? How does it make you feel?
Volatility stayed bid.
Yes. Oil was up $8.
Oil was up $8.
Quietly
up $8. It was up the day before, had no effect on the market. So we can just throw that all out of the picture. I mean, it's random like we always talk about.
Matters until it doesn't. All right.
Right.
It doesn't matter until it does.
Yeah, exactly. But volatility had been telling you all day long that it wasn't going to matter in OVX /CGI was.
Yeah, well, it got to 75.
Which is
it's not exploding.
From a low of 70 and a high of 90, let's just call it. I'm going to throw out the highs in there. But it hadn't. If you saw a $6 to $8 move in oil, you would think that volatility was through the roof, and it was nowhere near that.
Correct. Yes.
Okay. All right.
Yes. I think we've talked about the kind of ceiling in oil volatility.
Yeah.
It seems like we've put a ceiling there.
I'm disappointed in gold and silver. You took advantage of it. I have one small gold position. I should have added more to it. I didn't. The one more bullish gold position that had been down and now will be up. I kind of missed that one.
Yeah.
But I thought it was kind of a quiet-ish status quo day. I was not overly bullish. I think the best thing that we did for our viewers was not say that we were going to sell into this, like, you know, you got to bang this all-time high. We talked about the path of least resistance, at least in our opinion, which is all it is opinion, is you don't sell kind of a creeper, and it seems like we're creeping. I mean, at 7,200 here and change, I mean, maybe we can use a little bit of a pullback like we did last night down to that 7,150. We got down to 7,133 or so.
Yeah.
So I'm cautiously optimistic, but it's still kind of a creeper. We got a little bit of a surge today. I would expect us to sell off sometime today.
Because the earnings, FOMC, it's all a big event, right? And usually after the event is over, assuming you don't have a big move to the downside, volatility usually gets smashed. We've had a pretty nice volatility contraction over the last couple weeks.
Yeah, we have, most definitely.
I kind of think moving forward, we've had sort of this thing to look forward to. We have these big tech earnings.
All the earnings,
They're printing money. Their demand is off the charts, the memories stocks, the semiconductor stocks, everything. And it's been realized. Like, they came out, they're printing money. Fact. Mm-hmm. Now you don't have anything really to look forward to at this point. Like, you don't have anything to put as a bullish, the talk was, we've got these earnings coming up. The market's going to go higher because these earnings are so amazing. Now, if oil starts...
We had Jay Powell talking to...
Yeah, where he's
some more volatility. So
now,
if you think volatility is going to get crushed, which it's 1990, VIX is under 18.
Yeah, it's happened. What I'm interested to see is what volatility does today and into tomorrow. And the market, if we chop around here, but if volatility starts to kind of increase a little bit into the weekend, I'm interested to see if some stuff happens in the Middle East, how that reaction is felt next week, because now we don't everything's out there right now. You don't have that kind of unknown that can keep you, optimistically bullish.
Yeah.
Like what happens next when you have a little bit of craziness.
You just trade price, right? I mean,
Of
it doesn't.
course,
We
of
haven't
course.
had.
I'm just digesting my thoughts here. This is my therapy.
How many times have you said to me in the morning, "I got to stop thinking and just trade"?
100%. That is
Stop thinking and just trade. It's just price.
I'm thinking, but I'm trading.
Okay. All right.
But sometimes you think too much.
Yeah.
I agree.
Don't get yourself into a box.
Yeah.
Just trade the price.
No, I know.
Trade the price action.
Yeah, I'm right.
Get a little bit of two-sided action, hopefully.
Yeah, it's gonna be a good
Today
day.
we've got a 0.5% move on top of everything that we've had. Maybe we get a little bit of kind of capitulation to the upside. Volatility in by 35 cents right now, /VX, not signaling it. So just take an eye on that. Maybe if it gets bid, maybe you lean.
Also, just a quick PSA for tomorrow. Vanetta's going to be out, so we're going to try and do some stuff in the morning.
We're going to have a party. We're going to have
We're going to have a party.
Cake.
Yes.
Balloons. No.
But if you're in the chat early and you got some questions or you just want to talk about some stuff, please post in the chat tomorrow morning. I'll be watching, voyeur-esque, watching and throwing stuff out.
And Frankie did confirm, he posted it to somebody else, not me by mistake, in our Teams chat here, that your father-in-law was in the Ford pit. So I was right.
Your father-in-law, my grandfather.
Sorry.
Yes.
Yes, that person.
Yes. All right. I come from a lineage of traders.
That's right. Your mother's mother was a mother. It's an old Three Stooges bit.
He was a good trader, right? He was good.
Art? Yeah, for sure. It lasted decades. You cannot be a good something if you last decades in a place where you don't have a paycheck. You make your own. You eat what you kill. Go.
Quick look back.
Yes, index
Let's do
performance, April 29th, 2026.
Yesterday was a funky little day. You had NASDAQ continuing to outperform the rest of the group. E-minis basically unchanged. The Russell on the weaker end and was weak throughout the session. You had a big move in bonds getting to kind of the lows that we've seen in the last month or so.
Yes, 112.11. Much to my chagrin, I sold them around. I sold puts. I got bullish on them around 112.20.
I think they got below 112 yesterday, didn't they, or today?
No, 112.11 is all.
No, that was low.
Okay. Yeah, 112.31 right now. So I've had some heat of about 10 ticks. I've had some profit of about 7 ticks or so. So right in the middle of where I did it. So we'll see.
Dow has been funky too. Has not hit. It's the only one that hasn't got back to all-time highs, which is
you're right about
a little bit
that.
interesting there. When we look at the Mag 7s leading into the Super Bowl of events, you had Amazon, the strongest of the group. Everything else relatively flat there. There was, Microsoft basically didn't move the entire session. It sold off a little bit into the close. Google was basically unchanged the entire time. Even into the short period of weakness, it was kind of up on the day. All these numbers will be a little bit different this morning for sure.
Yes, they will be.
So this will be an
Although I think Amazon is up again too this morning.
Yes.
Up $10.
Yeah. So that should be a good one. It should be a good day for the good kids for all the Mag 7 earnings.
Beautiful.
When we look at the sectors, so energy was really, really strong yesterday, or has been stronger. It's energy and semiconductors. They've been the two kind of bellwethers of the market the last, month or so. Tech broadly has been very, very strong. You have financials kind of choppy, whippy, back and forth. Metals and mining were very, very weak yesterday. Metals have been just getting spanked. Gold is kind of near the lower end of where it's been trading or was yesterday.
Yeah.
Silver as well was down to like 71, 72.
Ivy ranks have been kicking up in there too a little bit.
Yeah. So definitely been a choppy market here.
Yes.
Biggest movers to the upside here. a lot of the chip names, NXPI had earnings after the close. It was up like $70. It's unbelievable.
All you got to do is look at these daily return numbers.
Are unbelievable.
They're unbelievable.
Intel cannot.
America.
Yeah, Intel won't go down ever again. STX up 11 after earnings. You had Light bouncing back. You know, SanDisk isn't on this list, but it was up, you know, $60. You had Visa.
And it has earnings today after the close.
Yes,
SanDisk.
that should be an interesting one. Visa, an absolute face ripper to the upside after earnings. That stock was left for dead. It was getting taken over by Anthropic. It's no longer being taken over by Anthropic. Not takeover, but their business was going to be.
And SanDisk, just because you went quick, I'm sorry, up $50 pre-earnings announcement.
Why not? I don't understand what you.
Which will be a new all-time high. I mean, it ended March around. I'll round up and say 600, and now it's 1,100. It's almost doubled.
Yeah.
In the month of April.
Unbelievable.
Agree, and that doesn't tell you the whole story. I mean,
gotta have it.
Yeah. I mean, this was a $100 stock a year or 2 years ago. Unbelievable. Go ahead. Sorry.
To the downside, not as interesting here. Teradyne had an earnings.
Big percentage moves too, though. I mean, equally on a percentage basis.
I meant from like the batch of stock.
Gotcha.
It's less interesting.
Gotcha.
Certainly big moves.
Mm-hmm.
I mean, you've seen some big moves from earnings. The Mag 7s have been the most vol crushing of the group.
Mm-hmm.
A lot of the other ones have been vol, expanding events in either direction. Move like NXPI, which doesn't even have weekly options, is not really that tradable. But on a move like that, volatility expands, even though it's an upside move.
Correct.
Teradyne down 20%. Robinhood looked awful. It's down to like 70 and change there. Coinbase has been really weak. I could kind of put that in the basket of the Robinhood there. But across the board, it was it's still all about the chips.
Mm-hmm. Still about the chips is right.
Quick little heat map here. Very flat day, very mixed bag. Energy stronger, tech kind of mixed here. Financials pretty mixed, mixed across the board.
And his mother was a Seinfeld episode, not Three Stooges. I'm going a little senile, so I apologize for that. Even the S&Ps regain their strength. I mean, they sold off about 4 handles there. They've regained that. We'll be back in 90 seconds. We'll talk about that a lot more. Confirm and send.
Mm-hmm.
What we're looking for the rest of the day. Trades from the research team. We'll take a quick 90-second break and come back. We got more Tasty Live right after this.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with, confirm and send on this Thursday, April 30th, the last day of April. And what a month of April for the market it has been. Even the S&Ps, if they close around here, it'll be flirting with new all-time highs. They're up 37, but you can see here, starting the month of April Fools here, closer to 6,500. We're 7,200. 700 handles on what was probably a 200 handle expected move. NASDAQ up 200, Russell up 4, Dow up 300 and change. You can see here that the Russell is the weakest of the group. The Dow has been the weakest of the group relative on this extremely strong move higher. As you can see here, the Dow has really been going sideways, a little bit lower the last week or two. Volatility, well, tried to keep its head above water. 2067 last night. Traded right around there for most of the day, under 20 right now, 1985, just making a new low a moment ago. Yesterday, volatility sold off early in the day and then caught itself a bid all day long. We'll see what happens today. Bonds up 10 ticks, 113 makes my put sale look a little bit better. Sold puts went down around 112 and change. But you can see here, certainly didn't catch the bottom. They were almost 3/4 of a point lower last night.
Look at you. Bond trader. Good bond trader.
Not my first foray into the bonds. Not very successful usually when I foray in there. Yeah, I've had a couple of recently for option trades today in the bond options that have worked out. We'll see if this one works out too. Bitcoin up around $900, rounding up to 76,700. Ethereum doing the same on a percentage basis, a little bit better, up 36. Oil. Probably the weirdest of all the markets here, trading up to almost 111 last night. 110.93 is a high, about $5 lower than that right now, a little bit more, $6 lower than that. 104.87, just about a buck and change off of the lows, but still high relative. 105 or so. You were talking about.
If we stay around here, I got a monster of a position.
Because you had some upside butterflies that you've been.
They're all right here. The middle of my butterflies are 105.
But you're in
CL futures 14 days.
14 days, I was going to say, yeah. Mm-hmm.
So we stay around here in monster of a position. And the USO, like 1x2, 1x3 trades that I've been doing where I'm long June. You know, I've calls in USO that are $30 in the money.
Right, long June, short May.
Yeah, and the Mays are 170.
Right, so if you have calls for these are diagonal spreads. These weren't short. These are short premium plays, but diagonal, where you were buying the in-the-money option, selling it out of
the money. Buying the at the money,
selling it.
2 or 3 of the out-of-the-money options.
Mm-hmm.
You've had this vol crush, which has helped significantly on the shorter duration trades, which are, you know, some of them are being tested, but my net is around 160, let's say.
Hold,
which is right, you know, like we hold here, and it'll be really good. You got a little bit of time left. I took some off yesterday, which was a good. I mean, it was a positive trade.
Sure, you're ringing the register. Yeah,
ringing the register because you got, you know, the thing with diagonal spreads or anything calendarized like that is you have the delta exposure into the up move, but you're also short the volatility in the short term. So if you got both.
Mm-hmm.
Like that's as good as it gets.
Yeah.
a little bit of a move higher, especially a stir step higher, and a vol contraction from 100 to 70.
What were you waiting for?
That's about as good as it gets. Now it's a question of do you want?
How long do I hang in there?
Yes, exactly. That is the question. So I took some off just because it was getting big.
Gold's your big move to the upside, a 2% move. Silver, almost a 3% move to the upside. I mean, the earnings, we've talked all about these, but you got Meta on the downside, down 60. Microsoft down around 9. And that's it on the downside that I looked at. Qualcomm up 16, Amazon up 7, Google up 25, CMG up $1 or $2, Carvana up around 35, 40 bucks, Lilly up about 50, Caterpillar up around 40. Go.
Let's do it. Confirm and send.
For a position like a strangle, do you wait to be breached before moving the untested side?
Really depends. Are we talking about a normal stock or are we talking about like an Intel or a Bloom Energy?
That you have no.
Where they
face strip you?
The testing is day one and then you're 40 points in the money day two.
Sound a little salty.
I tend to be less aggressive with my roll-ups in general. I like to be a little bit more directional. I find my delta, my reduction in delta via other positions. So I try to look at my overall portfolio more so than each position itself, just because everything is kept relatively small. Some of these things, they grow teeth and they become very, very big. And so it's a tough question to answer. The mechanical thing is reduced by 25%. Sometimes when something goes 30 or 40 points, like 30 or 40%, in one direction in a week, there's just nothing you can do but be directional. Like you can't roll up an Intel put for $1 and be inverted. You might as well just close the position. The selling a put, one single put for $1 against a call that's $30 in the money, it's kissing your sister. You might as well close the position, start something new, and just eat the loss. That's some of those positions have gotten to that point where you have to either be directional and lean and hold the position, or you close it and move on and lick your wounds.
Well said. Next one, please.
Something that's at the money and you roll up and you collect a couple dollars, sure.
Next one, please.
Following an earnings announcement, how long does it take for volatility to collapse? Does it happen right on the open or does it take time? I'm trying to decide how quickly I should close earnings trades based on volatility collapsing.
Nobody knows, but if you want to bet, right on the opening or shortly thereafter, within the first couple of minutes, when the markets tighten up, volatility will collapse. That's usually how it happens. Now, if it has a 2, 3, 4, 5 standard deviation move, then no, it's not going to collapse right then there on the open. But around 80% of the time, maybe a little bit more, usually get that vol collapse.
I usually like to wait a little bit just to market.
Because it collapses and it collapses more. Markets get a little bit tighter, especially if it stays in its range. Sure, I agree.
Agreed. Next one, please.
I understand that with the equities, volatility tends to increase as price falls. But sometimes I have seen volatility so high that the expected move being priced in would mean the stock would have to go below zero. I guess we're talking about volatility. It's like over 100 in some of these stocks. How can that be?
Yeah, so that can be. It just means that there's a bigger distribution than what the current price of the underlying is. When you have over 100% implied volatility, it means that the stock can zero or more than double. And so you tend to see
in a year, though, usually.
In a year.
Yeah, it's not for that. Now, you'll get volatility of 100, 100 plus 200, 300 in the front month. But you'll notice that the options, the put side, is not priced that the stock goes to zero in that time frame. It has some value to it.
For sure. So, I mean, it's an indication of a stock that, is priced to move. That is the main takeaway.
Okay. Fair enough. Yeah, I mean, high implied volatility, take advantage of it with the strategy. If it has high implied volatility, it doesn't mean you have to be naked, but it means you can go a lot further out of the money and collect the same premium as if you could be at the money or closer to the money. So take advantage of it.
Yes.
That's the way to look at this.
For sure.
Next one, please.
Sometimes you guys will talk about being an inside
of it being an inside day? Does it being an inside or outside day influence how you trade the next day?
Sure. I mean, you have to have an assumption on what you think is going to happen in the future if you're trading for the future. Now, that future could be one day long. It could be just this day, like we did the SPX 0-day trade yesterday. We were talking about how, you know what, nothing's been going on. We think it's going to be an inside day. Volatility is a little bit more expanded because you've got Jay Powell talking, blah, blah, blah. We put that assumption fit trading the 0-day. Now, it happened to work, but when you put it on, it had about a 60%, 65% probability of success. You put the cards in your favor and you go with your assumption. So, yeah, I mean, does it influence? Sure it influences. Just like anything influences. Numbers coming out are going to influence, not because I know what direction it's going to go, but it's going to move the market, and I want to react to that movement, whether go with it or fade it. I mean,
yeah, and just quantifying inside versus outside is usually just looking at the E-minis, or you could use this SPX if you want to. You look at that expected move going into the day, or right now, like ES. I mean, it's hard right now because ES is moving, but the expected move here is 33 points. So if we were up 60 or unchanged, you know, we would say that's an inside day at this point, just because you got a $30 expected move through the end of the session today. That's how we quantify it, just day to day, and that prices in everything: volatility, the news, whatever.
Yep. Cool. Good job. Good job out of you. Let's take a quick 90-second break and come back. I got much more Tasty Live with trades and the research team. We'll be back in 90 seconds. Tasty Live. Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words. Really do appreciate it.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Nikki, we are back, son. You know what that means. Time for more Tasty Live trades from the research team. Who is our first researcher?
Dun, 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 dun,
Proof of life for his dad.
Yes.
Shark, what's up, my man?
The weekly checkup.
How are you? The weekly checkup. How you doing?
Doing good. How are you guys?
Doing good, doing good. No complaints. Everything well?
Everything all good?
Good. The Uber Eats being delivered fine. Everything's good.
Oh,
No
that's
problem.
low blow. You got to go there. Come on.
It's the same joke every single week.
I know, but it works every time for your dad. It just drives him nuts, and then he'll text message me
It
16
makes
times.
so little to make him happy.
Yeah.
Yeah.
Cooking is quite the hobby, though, I will say. And the ladies, they enjoy it.
No, I'm learning a little.
Yeah.
Okay.
Nice.
It is good.
I feel like I can assemble food pretty well. Cooking I feel like is when you have your own recipes.
Yeah.
You can add spices, you can do your own thing,
Yeah. But
My thing is like a recipe, I can kind of follow it. 80%,
What about the grill?
80% of it.
What about the grill? You okay on the grill?
I've not used it too much, unfortunately, because
you gotta get
apartment living. Okay.
Yeah, but you got to.
I know I can go up to the to the rooftop bar. Yeah.
40 degrees and raining.
Exactly.
Not right now, but the summer's coming. You got.
All right, in the summer I'll try it. Okay.
Yeah.
Yeah.
All right. What trade you got for us today?
So instead of doing bullish trades at all-time highs like I did last week, I'll make it nice and simple.
Okay.
So
okay.
it's actually a post-earnings trade. They had earnings yesterday, right?
Yes. Yes.
The IBR is still fairly high. It's like
Yeah, we'll see how it is today, but I think it's going
gonna-
to be high just the same. I mean, it's a 100 IV rank. It'll probably be up there. Go ahead.
yeah. So iron condor. See what happens.
Classic $10
Classic
wide something here.
Yeah.
The earnings were okay. I wouldn't say they were
The
particularly.
reaction
great,
was
but-
certainly okay.
Yeah.
I mean, it's well inside the expected move. Microsoft had almost $30 expected move, and it's down 7.
9,
Yeah.
10, yeah.
So it'll be interesting to see where volatility kind of settles in today. I think this is an interesting trade if you get it on early, because you're probably gonna get a nice volatility contraction over the rest.
Nice. Get in early, get out early. That's the hope.
That's the name of the game. That's what we try to do every single time.
Yes. All right, good job.
I like it.
I think classic mechanics. I like it.
Yeah.
Good job, buddy.
Or we could put on a put spread and hope it goes to the moon. Okay.
Which is probably the thing to do. Good job out of you, my friend. Who is our next researcher? Cool Breeze himself. What's up, my man? Gad.
I'm good. Living my dream.
Doing good. How about you? Everything well?
Love it.
Yeah, living the dream.
Awesome.
Living the dream. I like it.
Yes, I agree.
Are you living the dream?
I believe so. Yeah, all sincerity. Yeah. I got way more than I deserve.
No, you live in the dream.
Yeah. Thank you, man. Appreciate
I didn't mean like of all time. I meant like just just me.
Oh my God, absolutely.
Oh.
I mean, working with you has. I mean, I hope it's my legacy. I
It's
mean,
like the second time we've had family counseling with.
yeah, no, it's one of my proudest things.
Oh.
Yeah. Because I thought you were going to struggle and be in the streets. All right, Gad, what do you got for us? I was able to save you. Go ahead.
I got IBM.
IBM.
Yeah,
Not the greatest markets, but go ahead.
Yeah, I'm taking a little bit of direction on this one. So, given that this IBM had the earnings 8 days ago, that means the IV has been already contract or crashed already, and this trade it's already down a little bit.
Yeah,
and then I'm hoping to go up. So then for that, being bullish into this and put put spreads, but also be small because you never know what's going to happen.
Yeah. I mean, it's a smallish credit there.
Yeah, you got the 210, 205 short.
Yeah, 210,
They're a little foot there. Yeah, IBM.
And it's funny, IBM doesn't have like single strikes either. It's such a
IBM is is building a quantum
computing
place in Chicago. Like a mega compound.
They just need an address. They just need. I'm
No,
just
I think
kidding. I know. I'm just
it's
teasing.
gonna have like 1,000 employees or something.
Yeah. No, I know. I'm just teasing. I'm making.
On like the south side kind of.
But IBM on its butt, not participating in this rally. Part of the Dow. Kind of.
I like this.
I do
like
too.
it.
I do.
I'm
too.
gonna look at IBM.
Good.
Right. Maybe even something for the Johnny trades too.
Johnny trade. It's a small one.
True.
Yeah.
I didn't think about that.
You can go in that too. So
Okay.
maybe wait on that.
All right.
All right. Good job out of you, my friend.
Thank you.
Who is our next researcher? All right, my friend. How are you?
I'm doing
Mr.
great.
Kai
How are you?
in the room.
Yeah.
Again, as always.
Yeah, as always. I'm gonna give you a trade. You have to like it.
I have to like it. Okay.
Yeah.
All
And
right.
you will like it because that's your trade.
Okay.
It's a diagonal.
Okay.
Yeah, earnings diagonal Apple. I'm learning from the master.
Ooh.
I am no master. I am no master. I am just simple servant. What are you
It's
looking
okay
at?
to be
here?
a servant. I've been doing that my
Apple.
entire life.
Apple earnings. So selling tomorrow expiration.
Okay.
And the long June.
Okay. 280. Yeah. So.
Yeah.
It's tight.
I know. It's because
tight.
From months is not that expensive.
Yeah. This is a cheap shot.
Or do you have
This-
any other
this is-
better strikes to select?
I would probably go. You're going to use a little bit more capital, but I would move this to the 75. You do the You do the 275, 282 and a half, and you can do it at like $7.70 is what it's marked at right now. Probably be a little more on the open because the stock is up $1. But that way, if you print 285 after earnings, you'll make some money on that trade versus this one where you'll kind of be, scratch, maybe small winner.
Do you like to pay less than the width?
I try to
of the strikes
in something like this where you're buying 49 days out and selling one day.
Yeah,
you have a little bit more wiggle room because even if you got something crazy like the 290 strike move, you're gonna have this one is a little bit tighter, but if you move to the 75, you'd have $7.50 of intrinsic value minimum, plus whatever extrinsic value is in the long option. So if that long option has like $2 of extrinsic value, which would be low, I mean, even the 250 strike put in Apple in June has $4 of extrinsic value. So if the stock were to go $25 to the upside, $300, you probably have $3 of extrinsic value on that trade. You make $3 on the trade.
What do you say? What do you say about you want to pay the debit smaller than the width of the wings? That's not.
I mean,
so when you use a 275, that's not possible.
Here, I'm usually buying a 40-ish delta option and selling a 20-ish delta option. So I get 20 deltas. Put side, it'd be short deltas. Call side, it'd be long deltas. Let's say that spread is $10 wide. I like to pay $7.50, something like that, just to give my.
But this one, you don't get it. You get
this one is more.
But I'm not doing a 1 day. You're doing a 1 day.
Oh, you're talking a month.
I'm doing more like 45, 25 day kind of thing.
So when you think about intrinsic value on this trade, on this spread, there's a time component here. So that long option is going to have some sort of extrinsic value. We're just going to ignore that for now. If something crazy were to happen, Apple opens at 350. Something crazy, or you have an incredible move like Google over a period of time, or Amazon, that sort of thing. This spread intrinsic value is $2.50,
right,
plus whatever the extrinsic value is in the long option. So if you have this sort of tail type move in your direction, and you don't have enough width in between the long and the short, you get into this position where you might be a scratch or a small winner, but you're
it's
like
very difficult to make money if it moves too fast.
you were right, but you didn't make money, which is like the worst. That's worse than being wrong and losing money. When you're wrong and you lose money, I'm wrong.
You expected it. You were wrong.
When you're right and you don't make money, that is the worst feeling ever. So that's why I try to make them a little bit wider.
Makes sense.
Let's let you go so we have time for my friend.
I like it though. I'm gonna look at something in Apple.
See?
I'm gonna do it a little wider.
Awesome. Who is our next researcher? And our last researcher. What's up, my little black cat?
What's up, Julia?
Amazing. How are you guys?
All right, awesome.
So good.
No, so good. Yeah. Nice. All right. Well, what do you got for us since we're all good?
I mean, since we're all good, get ready to yell at me. I don't know. I decided to put on a put spread in the Russell because I added a call. I know.
It's okay.
I know. But, okay. 261, I don't want to jinx it, actually. 261 is a long way to go in 49 days. Historically,
261 was here last week.
Yeah.
I was at the money.
Yeah.
That's actually true. But I don't know. I've been holding out some love for some small caps. We did have quite the rally, but the Nasdaq just shot way past it. In the last month, the Russell's up like almost 10%. The Nasdaq's up like closer to 15. So it's like kind of lagging behind if you want to call it that. That's a bit of a stretch. I don't know. I just kind of, to be honest, wasn't comfortable putting the call sign on this one. Kind of did that in the trade last week, and I just felt more comfortable, higher probability of profit trade, just putting the vertical put spread on this one. So I went with the 261, 253 strikes, a little bit tighter than $10, just to kind of like keep the position size a little bit lower, collects 187 in credit for 613 in buying power. So was reasonably high, but again, where this thing has been moving, I just went with defined risk, kept it a little bit smaller, and hoping for the small caps. I don't know. I've been a believer in the small caps for a while. It's been lagging behind the other indices so much, and so had a rally, potentially a little bit more to go.
The higher volatility of the group.
Yeah, I don't hate the assumption.
I don't hate it.
All right. Good job out of you. I'm going to let you go so we can catch.
That's all I got.
It's okay. You did good. We're going to catch the opening bell. The whole team did great. We'll be back in 90 seconds. Tasty Live. Opening bell's next.
Cool.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day 1, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions and there are only 2 still left open. That's how open interest is different from volume, and both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Nicky, we are back, son. And you know what that means. Time for a little bit more Tasty Live. Well, the opening bell here in just about a minute. Even the S&Ps haven't really moved since last time I quoted up 32. So we'll take a look at some of those stocks that had earnings that maybe we didn't get a chance to earlier. Qualcomm was up around $16. It looks to be up around the same right now. Meta was the bucker to the downside, $6.19, still down around $50. It was down around $60 a moment ago. The other one that was to the downside was Microsoft, 410, now down 14. It was down closer to 9 earlier. We're set to open here in just a couple of minutes. Net gas, 2.64 in change. That's about as low as it's been. I mean, obviously it was lower, 2.6. I'll round up there on the lows, but net gas.
As everyone would have thought when the LNG facility in Qatar got put offline and 15% or 20% of the global production got taken offline for the next 3 years.
Yeah.
Of course you would think natty gas would be
down
at lows.
Right.
Of course. Unbelievable.
That's why you got to. Anyway, I'm leaning a little long net gas. That's why.
Yes,
Right about here, not near the bottom.
I was making a little joke.
I get that. Gold is no joke. It's up 83. Silver's no joke. It's up $1.98, almost $2 to 74 and change. Finally catching a bid. All of these after about a week of sell-off. Even the S&Ps up 28 now. Nasdaq up 120. Russell up 12, and the Dow up 240 and change. Volatility over $20, but down 23 cents. Let's take a look at what's going on here. We'll go from top to bottom. Meta down 52, trading right near its low for the day. Microsoft down 12, so Meta was down a little bit more earlier. Microsoft is down a little bit less.
Scalped out of my micro ES
that you sold this morning, around 72.07 or so. Just bought them back at 92. Good trade. UNH down around 4. XOM and some of the oil-related stocks all lower, with oil going a little bit lower. I mean, I didn't think I would say $105 is lower, but it's lower. Tesla down 2. Coin down $1. You got the rest. Netflix down $1 or so. WFC down $1. Let's see the upside. Lilly, which had earnings up 57.909, trading near its highs. Caterpillar also had earnings this morning up 53. SanDisk up 44. Light, which has been a very hard trade for options, has been just going higher and higher every day too, up around 36. Google up 24. Carvana up 15. Carvana was up closer to 40 a moment ago, but the markets in Carvana are not that great. WDC up 13 or so. Qualcomm up, AVGO. Anyway, looks like, what do you think? Buy the rumor, sell the news here. All these earnings have come out. That's kind of what you've been leaning with a little bit here today, and you sold them from, first trade was from the short side. Seems, I mean, at this point, seems right. We'll see how this holds, right? I mean, okay.
I closed out of my Amazon like crab trades. Those were mega beautiful trades.
Yes.
I'm closing out of some of my Microsoft. I have so many.
Yeah, markets are a little wide right after earnings, so be careful with your pricing. Go ahead.
Yeah, I have so many Microsoft positions on that I'm just closing them. They're all diagonal spreads.
Yeah, these were all earnings trades too. You did good on them.
So I am just taking the money and running.
Okay.
Flattening out this position.
Let's see what SMH is doing. I think it was rallying earlier. It's up $1 in change right now. SMH semiconductors trade up to 505, 501 now, up $2. What do you think here?
I'm just going.
Look at you, scoopy, banging them out, doing.
Yeah, I'm sorry. They're all
your groove on.
They're all kind of
This
jumbled.
is your Microsoft trades. I mean, you had a lot of earnings of all the stocks that we trade.
Yeah, and I had multiple trades on, so I'm just.
The first thing you should be doing is to look to close some of those trades. Right?
Yes, but it's too hard for me to go through and look at this trade was entered in this pair. I'm just trying to take them off in batches.
I gotcha.
A lot of them were diagonal spreads, so I'm just taking off like one long with a short and not really kind of thinking about it.
Meta back down over 60, 64 now, back down to 605 or so where it was pre-market.
We did a
Even
strangle.
the S&P's up 14.
Yeah. Oh, CMG too. Look at this.
CMG was up $1.
Gotta be the first time I've made money in CMG. Maybe ever.
CMG traded as high as $35.10. It's $34 now. So it opened on its highs and sold off a little bit. You close your CCL. You close a lot of your Microsoft.
Yeah. See if I can get out of this.
Even the S&Ps have had a quiet 40-handle move so far this morning in the first 4 minutes, top to bottom, trading up to around 72.11, now down to 71.80. Volatility hasn't really moved, down 17 cents on this 20-handle move in the even the S&Ps. Bonds are up 9 ticks. They trade over 113, 113.03.
Sorry.
That's okay. That's okay.
There's
some of my own positions. Amazon, it looks like they really crushed volatility in there because I have a little bit of short delta in there, and it's making money today in Amazon. Markets are a little bit wide in there too. Let's see what else we've got.
Let's see.
Okie
Mm-hmm.
Give me some more.
I'm looking. I'm
I'm sorry.
I'm with you. I'm with you, brother.
I know.
Come on.
Even the S&P's up 9.
If I take off this butterfly I had in MU.
You certainly could.
Let me see. I mean, this thing's. Where's it gonna go?
Mm-hmm.
You do have SanDisk earnings after the close today, so
yes.
Okay, I took that. I did that at 298 and just got out of it at 580.
Okie dokie.
That was a little sympathy play, so we're gonna
close some of your meta calls that are worthless.
Yeah.
You're just freeing up the buying power. Trying to use that there. Mm-hmm.
Okay. These are just more Microsoft positions.
Okay. Amazon unchanged. I closed a $20 wide iron condor that I had on for 4. It's not that great. I mean, it's been a struggle. I closed it for 460. Up there for you. I closed it for 460. It's trading at 445, 435 right now as Amazon keeps going down because I had a little bit of short delta to it, about 20 short deltas. Only made like $1 on it, but it was a $2 loser, $3 loser at one point. So that's been a nice reversal in Amazon.
Yeah.
Let's see what else. Bond trade sitting right there, making a couple of dollars this morning. Gold has worked out good. GLD up $7. Got a little bit of Nvidia down $1 or so. Got a little bit of long delta in there. Hasn't worked out. Palantir unchanged. SPY up 75 cents. NASDAQ just went red for a second.
Wow.
The
move. Wow.
Yeah, wow.
I mean, you got oil going higher too.
Yeah, oil almost 106 now.
Yeah, does oil finally matter?
I think it always matters, but I don't think it matters for direction. That's for sure. Amazon opened at 273. It's trading near its lows of 261. That's over with.
Oracle.
All right. You ready to take a quick break? You can get your bearings.
Sure,
over your
yes.
account. I mean, I know this is a day where just about everything that we've traded.
There's just a lot going on.
Yeah, all of them opened on their highs. It seems like Qualcomm opened at 171. It's 166. Meta, even one of those that went lower. Opened on its highs. Looks like it got up to 620 in Meta. Amazon, I already told you about. Google was up 25. It's up 21 right now. It opened at 277. So it looks like everything opened on its highs and has sold off a little bit so far. All right, let's take a quick 90-second break. We can come back. We got more Tasty Live after this. What comes up next?
We got
Johnny trades. We're going to look for smaller size trades, maybe a lot of post-earnings trades too. We'll see what's going on there. We got more Tasty Live right after this.
Cool.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs. 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nicky. That noise can only mean one thing. It's time for Johnny Trade. But before we look at that, even the S&Ps up $5. Make you holler. NASDAQ down 17. Volatility had just sold off by about 10 cents, but it's over 2016. Dow, which has been the weakest, is now up 330. The leader in the clubhouse with the Russell up 14. I've talked about this often. When the Russell and the Dow are your two leaders, it's usually the time where I say, I'm not going to buy this opening. Although we do have even the S&Ps up 6, right where they kind of were for most of the day yesterday, sitting at 71.75. I think this opening we talked about, you traded from the short side right out of the chute, really not kind of buying it. Maybe it's a little bit of a blow off kind of top. I don't think we're going anywhere. I said maybe back down to 71.50 or 71.77. Let's take a look at volatility and keep our eye on that. It's sitting right here down 20 cents. Maybe this if you consider this a down move with even the S&Ps up 10, maybe it's going to take a little bit of a breather here for a little while.
Yeah, maybe.
All right. Well, let's get to Johnny trades.
Let's do it. So, Johnny trades, we got a couple things that we can do today. So we had
and you made almost 20 trades in the first 15 minutes of the day, all pretty much closing trades and adjustment trades from earnings that were.
So we got a Microsoft position. We sold an Iron Condor. I think we did this last week. Into earnings. We'll take that one off.
Sure. Free up a little capital. Try to ring the register. Microsoft down 13.
There we go. All right. So we got filled on that.
And you push those through. I'll be able to send them through for you.
Closed out of a handful of positions yesterday as well.
Kidoki. Close that Microsoft for $1.80. Good job out of you.
I'm trying to look at some of my other stuff.
You're trying to go through.
Trying to remember and go through all my stuff here.
Sure.
Okay.
So I usually look at P&L when I'm doing that and see which ones are helping and hurting.
Yeah, but
Yep.
I got to track them all because I'm doing some for life cycle and all this other.
I understand.
I'm a little all over the place. So
I understand. Do you want to look? You said IBM. IBM traded down to about 224, 225. Let's round up. It was 24.90. It's 227, so it's caught a little bit of a rally here, but it has not participated in the market. A good IB rank of 31. No earnings looming. June markets are not great.
Yeah. What do you do here? You do a diagonal spread, or do you?
I don't think the markets warrant the diagonal spread. I think it'd be too hard to price on entry. Like I just think the width of the markets, $1 wide in June. If you're going to go as tight as May, you got 80-cent wide markets in May. I think you just look at
I got a
classic vertical spread.
I was gonna do that, but I think gives you a little bit more upside here. I'm thinking we go July, June. I mean, this is it's almost like a poor man's covered call. But you can go into July, you buy the 40-ish delta. I'm looking at the 240 here. You can move this to the 235 if you want to, do the 235, $600.
235. So let's say mid price is $10.
$10.
Okay, go ahead.
And then on June, you're selling, you sell the 250 at 325. So this is right here. It should trade at 650. Around here, six.
Around. So you go in.
Actually, have to go up to like 670.
Maybe
$10 and 330.
Maybe, but I go in at 645 and move it by nickels until I get to.
I don't think you're gonna get filled anywhere.
I don't think so either, but that's just how I would do it. I mean, you took a mid price of $10 on those calls. I mean, who really knows what that mid price is? You got NASDAQ down 14, EMI S&P's up 8, volatility in by 18 cents, hasn't moved.
All right, we're gonna 660.
You go in at 670 and then you're done. But I mean, I walk it up is all I'm trying to say. So using $670 in buying power on this trade, and it simulates 20-ish long delta. It's a classic spread that we would put on. And I just sit with that. I mean, IBM was...
I'm working this at 675.
Okay, perfect.
I'm going to move this to 680 and hope I get filled here. That's where I think I should be filled. All right, I'm going to let that work for the...
IBM's down 25 cents. It just rallied off of its lows of 225. We go down 80 cents here, which would still make it $1 off its lows. You'll get filled.
All right. I'm thinking you want to pull down your platform just real quick.
Oh, I'm so sorry.
Yeah, you're good. So that's our bullish. What do you think on a neutral trade? Maybe something. I'm thinking a stock that's gotten beaten down.
Which is?
I'm thinking the Hood.
The Hood, yeah, I don't hate that play at all. You're talking about Robinhood is up $1 and change right now, but it has definitely gotten beaten up. And I like the Ivy rank of 42. I was going to do something there for option trades today. So good job out of you.
I'm thinking of a slightly long delta strangle here. Oh,
in June with 49 days.
Oh, there's my IBM.
Oh, see that? Let's take a look at what IBM's doing so we can see if we were predictive in our prices. There you go. Look, down 76 cents. I said maybe 226.
Yeah.
About 40 cents off of that. So good job. Good job.
Hood.
You have to go in at your price when you're in a Johnny Trader account, first of all, and also when you're trading markets that aren't as liquid as you would want. And by liquid, I mean the difference between the bid-ask being a lot tighter. All right, let's go. What are we looking at? Hood.
I'm looking, dude.
A bullet. I know a bullish. No. I'm just saying a bullish strangle. So you're going to sell your put closer. You're in between the two strikes of 70, 75, right? So you're going to do the 70 put, which is going to give you about 40 deltas. If you go out to the 90 call, that's going to give you your 18 to 20 long deltas.
It uses like 1,000. It's a little bit capital intensive.
So then buy the 60 put and buy the 100 call, and you'll cut your buy. You're doing that for $4. You'll be using $600 in buying power if you had to.
I think I'm going to just go.
Well, your quandary is being in a smaller account is what you're saying, right?
I don't think so.
Just sell a put spread.
The 90-100 call spread at, I guess it's at almost $1. I guess it's something. So just
sell the 70-60 put spread. You'll be using the same amount of buying power. You just won't have.
What about the 70-60 put spread and the 85-95 call spread? It's more like, it's almost like a long delta price wise, because you're closer at the money on the put spread. But it's a neutral trade. I mean, you could see my delta's 8 here, but it's
how about the
neutral / long.
How about the 70-65 put spread? Just do a $5 wide put spread, $1.92 in credit for $300, $310 in buying power.
I got my long one though. I got my IBM long.
You were going long. You were trying to, but you said
this
delta
is my
long.
Neutral trade. Neutral / slightly bullet.
Okay.
It's like an iron fly. This is a iron condor / iron fly because of how close
50-50 shot, pretty much.
Yeah.
Yep.
If you move this to 65-55, it's 1/3 the width of strikes, basically 0 delta. This one will skew slightly long.
Okay.
Let's see if I can get filled above. Price wise, you want the stock to go up a little bit.
Yeah, price wise, you want the stock to go up. You want to manage it a little bit quicker.
All right, we're in.
Beautiful.
So that's our neutral.
So you did a bullish, you did a neutral, now you need a bearish trade.
What do we get bearish on?
Maybe one of these earnings that kind of sold off here. What do you think about that?
You want to go to the mother of all earnings and sell a call spread in Google?
We certainly could. Google up $20. Trade as high as $377. Out by about $7. You got a gap fill here.
Oh no!
There we go. We talked about that not too long ago.
How about
Google correlation? Not as high as you would think it would be.
I mean, who sells Google?
Nobody sells Google.
What do you think about like the 290-400 call spread?
Google in June?
In June. Trades at 280, 275, 280.
Sure. Go in at your price. Go
about a 30 delta for the short option.
Yeah, delta on the whole position is about 8 or 10, something like that. Yeah. Pop of 68%. That's what I look for on any type of premium selling trade.
Yeah, let's see.
You're going to need a little bit of a rally, but you could get that.
We'll buy the rumor, sell the news. 270.
Okay, nice. On a 260 mid price. So to my point about, go higher, go lower, work the order down, work the order up. Don't just go in, basically.
Gunslinging.
Basically at the market, gunslinging, as you would say.
Yeah.
Volatility in by 17 cents. E-mini S&Ps are up $2.25. Let's see what the Intel market is looking at. Intel, INTC, if I put in the right symbol, I can get it. Down.
Oh my God.
Intel down $2.40. It certainly looks like buyer
getting a little bit of a breather on
around everywhere
on some of these positions. Like my Bloom Energy is down 22. That's a nice
after trading up to almost 300.
Yeah,
it's 260.
Yeah,
right.
So that is a good
buy the rumor, sell the news on this earnings, as you talked about. Hard hold. I mean, you basically sold it 4 handles off of the highs. And you covered, 15 handles lower. Don't blaming you, just telling you that.
I still have some left too.
It's a hard hold when you have had nothing but one-way movement for most of the last 2 weeks or so, all to the upside.
So we closed out the Microsoft earnings trade. That was a good one.
Mm-hmm.
We got long IBM. We got short Google, and then we got neutral on Robinhood, selling some premium there. I would say pretty liquid across the board. IBM, as you watched, not the most liquid. So to your point, I think price discovery is pretty important there.
Sure. Yeah, totally agree there.
Cool.
All right. You ready to take a quick Amazon down on the day? You ready to take a quick 90-second break and come back?
Yeah, sure.
Let's take a quick 90-second break and come back. We got a market measure for you. Even the S&Ps are down 2, NASDAQ down 83, Russell up 6, and the Dow up 370. Got a mixed bag of tricks. Volatility in by 14 cents, catching a very small bid. Bonds are up 9. Bitcoin's up 1,000. Oil 105 and change. Let's take a look at oil volatility for just a quick second. OVX CGI to 75, where you mentioned it was yesterday after it rallied on that rally in oil. Hanging in there, only down small right now. Gold up 62 after being higher by about $30. Silver also higher, so good sales on those gold and silver that you were long, selling them near the top. Good job out of you.
Yeah.
All right. Cool. I'm ready. Let's take a quick 90-second break and come back. We got more Tasty Live after this with a market measure. Back in 90 seconds. Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nicky, we are back, son. And you know what that means? Time for a little bit more Tasty Live. That's right. What do we got coming up next? We've got market measure. E-mini S&Ps. Let's take a look at what's going around the world here. Basically unchanged, down 2 on the E-mini S&Ps. Hold on one second. NASDAQ down 85. Russell up around 6. Dow holding up 400. Volatility in by 19 cents. Really not moving. Bonds are up 6 ticks to 112.28. Bitcoin caught itself a little bit of a bid trade up to 77,000 at 76.7. Oil was catching a little bit of a bid, 106 at one point, 105 and change, still down $1.40 or so. Gold off of its highs by about $30 or so, off of its lows by about $70. Silver up 136 or so. What'd you do?
I just bought back some calls in NVIDIA. I'm long delta net, but I've been doing like 1/2 ratios and butterflies. I'm all over the place. So, but stock is down $15 from high.
Mm-hmm.
So those calls I sold at $3 or $4. I'm closing them now. Just taking some risk off the table there.
You're doing that in Meta?
No, in NVIDIA.
Oh, in NVIDIA. Sorry. Okay. My bad.
All good.
I hear you.
Love is not having to say you're sorry, right?
Love is not having to say you're sorry.
Yeah.
That's true. There was an old cartoon from the newspapers back in the before time when we read newspapers.
Yes. Intel move is good. BE move is good.
Which are all lower, right?
Yeah. I'm just trying to go through my stuff because we got some movement today. We got some things moved.
We do. Apple for earnings today is up about $1.20 or so. SanDisk for earnings today is up around $28. So those are still keeping their wings up.
Yeah, but that was up like 60 pre-market.
Mm-hmm. NVIDIA, you close those calls at $1.41. I got it now. Sorry.
Yeah. Okay, cool.
All right. You ready to go?
Sure.
All right, let's do it. Why SPY dominates our research?
Cool, let's do it. Why do you think?
Well, I mean, liquidity, it is the market. Back in the day, if I can go so far as to say we used to talk just about the Dow, like what the Dow 30 was doing. And then the NASDAQ kind of took a little bit of precedence there too, or in the NASDAQ and the E-mini S&Ps, but it's widely, if you're talking to anybody in the business, or even if you're talking to your neighbor, and they say the market is up 5% or down 5%, or today the market was unchanged, they are talking about the S&P 500. They are talking about SPY, SPX, same product.
Yes, for sure.
They're not talking about anything else. They're talking about the market is SPY. So if you're going to do any research, you probably should do it there.
That one you're going to laugh at.
That's your MP you did, right?
Yeah. Government portfolio.
Up $1.
Has earnings coming up too.
It does have earnings coming up. It's got earnings coming up on May 7th, talking about MP.
Okay.
All right, ready to go.
Yes. Why SPY dominates our research. Let's talk about it.
Cancel crash, by the way. It seems like volatility in by 30 cents now.
Yeah. They almost had them. Look at Bitcoin. Bitcoin's having a nice little day.
Bitcoin was up to 77. It's 76.9 right now.
Most of our research that we do, we usually use SPY to display different trends. We talk about behavior, relationships, and correlation among trades and strategies. Recently, we got emails from viewers asking similar questions of why do you use SPY as an underlying in most of your research and segments? Why not Qs? Why not IWM? Why not Apple, Tesla, whatever? Today, we're going to talk about it. Tell you kind of why we use SPY in our research.
All right.
So we are going to do a study with other things. So we're going to do SPY, Qs, TLT, XLK, XLF, and XLE. So you've got SPY, NASDAQ bonds, tech sector, XLK, financials, XLF, and then energy, XLE. We're looking at data from 2015 to 2026. We recorded that daily. We recorded daily volume over time. We looked at the one-day standard deviation of daily percentage changes and the number of option expirations that were available for each. We're going to compare the liquidity of all these ETFs, the price, stability, and risk of these ETFs, and the availability of data over time. This is the important one. SPY, of course, is going to have the most data.
For sure. And clean data, too. A lot of times, you'll get in an individual stock, you go through some of these charts and stuff, they get like a bad print somewhere else and then try to get it removed by one of the providers. It's an uphill battle.
And just from a P&L standpoint, like when you're looking at your positions, you're going to, when something is illiquid because you'll see swings in P&L. I get that email all the time. Like, I'm showing this position is $100 winner, but it can't be. What gives? And it's just, you have to look at the options and that'll tell you the story of what you're seeing. And all platforms, you have to do something. Like you can either market at the bid price, the ask price, or right in the middle at the mark. The mark is usually a good spot to be, the mid price or the mark. But those when you're talking about an option that's $1 bid at $5, that price, who knows where you're trading at.
Correct.
So you're going to see that swing. So even when you consider data for the last decade, SPY has the highest daily volumes on average over time, which shows that it is the most traded product in the market. So you can see just from an average volume standpoint and even a max volume, none of these other products even come close. I mean, you're talking about the Qs at about half the daily volume as SPY, IWM is about 25%. When you get all the way down to even something like gold, which is very, very liquid and very, very tradable, it's only a fraction of the volume here. And even, now, what are gold markets looking like? Probably like 20 cents wide.
GLD you talking about?
Yeah.
Yeah.
GLD is probably like 30 or 40 cent wide bid-ask spreads when you're looking at June.
Yeah.
So it just tells the story of like, this is the most liquid spot that you can be in the market is SPY. From a volume perspective, that's just one of our metrics here.
Agree.
So we found that SPY has the lowest standard deviation of daily percentage changes relative to the number of underlyings in its composition. This highlights that the most representative of the overall market while its daily volatility remains low. So, there are pockets, and we've kind of been talking about this in the market, your SanDisks. Like SanDisk is not indicative of the market as a whole. It doesn't, it's moving 20 or 30% a week. That's not typical for markets. When you look at markets, and even when you think about, broad-based markets over the last 20 or 30 years, 7 to 12% is your average per year. You're seeing some stocks move 7 to 12%
in a day.
Per day.
Yeah.
And so that's not, it's not normal. You can't do studies on stuff like that when you talk about the broad market, because for every one of those 12% up moves that you see like a SanDisk, you'll have other junky stocks that are 12% to the downside. And so using a basket tightens up that volatility of the outliers. It gives you something that's more consistent and more reliable, more tradable on a day-to-day basis.
More consistent. I mean, here, you mentioned SanDisk, and I think it's a good analogy. I know the markets are wide in there, but forget about that. SanDisk at all-time highs, market at all-time highs.
Yeah.
yes, SanDisk, and by market I mean the S&Ps, among friends, SanDisk correlation is actually negative, and negative by a lot, 0.42, which means it has gone higher. It's at all-time highs, but it's done it on days random to what the market SPY has done. So you could look at a SanDisk and you would extrapolate out, say, oh, it's at all-time highs, market's at all-time highs, it must be following the market. No, it's not following the market at all. Matter of fact, it's random.
Yeah, it has no correlation. So
it has no correlation.
Doing a strangle study on SanDisk versus SPY is going to show vastly different.
Yes.
Like there's no, it's apples to oranges.
That's right.
And so here, we obviously give you a list of all of the number of assets in each basket, which, these are all relatively high. I mean, gold is just gold. That's pretty self-explanatory here. Mm-hmm. But here we'll look at the standard deviation as a percentage move. You'll see that, and historically gold has been relatively tight. Even bonds have been crazy recently. But gold is a generally lower volatility than SPY. Has not been the case recently. But you can see across the board, these are all relatively tight ranges, but SPY is kind of your most consistent in the batch.
Agreed. SPY is your most consistent in the batch. And you got to come up with something, right? I mean, you need a benchmark. Right. You need a benchmark. Definitely need a benchmark.
So SPY expanded the most. It added Wednesday expirations. And when we talk about just from our liquidity and availability of strikes, it added Wednesday expirations in 2016, Mondays in 2018, and then Thursday and Fridays in 2022. It was the first one to have daily expirations of the batch here, ending up with daily expirations, which is 250 a year, roughly 252 trading days. QQQ was a little bit slower to add those, so it stayed Friday only until 2021, and then we added Monday and Wednesday expiration and finally reached daily expiration in 2022. TLT, XLF, XLE, XLK, and Gold have mostly stayed the same. They've had the Friday expirations for most of this period of time and haven't added any other weekday stuff. I'm sure, in the future we're going to have dailies / midweek in everything, but this just gives you an idea of just how many expirations you've had. The SPY and now the Qs are the only ones that have daily stuff. And when we do studies, we use, a bat. You don't just do one trade on a specific day, because there is no 45 day, 45 days only happens perfectly a handful of times a year. You're looking at 42 days, 43 days when you're rolling and moving positions, because not every month has the same amount of days. So there's a variable there. So the way we do studies is we do, whatever that trade is, let's say 20 delta strangles in SPY. We do them every day. And then you take the cumulative position and smooth it out. So you're not looking at we can't just say, oh yeah, the trade was entered May 30th. That was the trade entry. We're doing one every single day and batching them together and smoothing them out together. Those trades the difference between doing the trade on April 29th and April 30th is negligible. But you need the added occurrences so that you're not stuck in a situation where that exact parameter of IVR above X and this perfect time frame of 45 days, that only lines up once a year.
Right.
You need to have kind of a variable in that. And so you batch them together and you do the study as, hundreds of trades. And so you can put it all together. Smooths it out.
You're also looking on the slide, the evolution of the 0-day trading here in SPX as you look at what SPY did to add these daily expirations, weekly expirations that they had. I mean, that slide right there is everything that you want to know about how long it took and how things have come full circle, where, we traded quarterly expirations, and now you go to weekly expirations, you go to midweek expirations, you go to daily expirations, and that only happens because of the volume from the customer. If there was no volume from the customer to warrant these kinds of expirations, you would never have had them. It's amazing how it's really kind of evolved.
For sure.
Which, by the way, we haven't done an SPX trade, just to give you an idea on what I know.
It was a fast market this morning. We got up.
You still have a $31 expected move in the 0 day, where yesterday at this time it was closer to $24. So you still got elevated volatility, even though it's in by 35. What's that?
Want to do something there?
Yeah, that's what I'm thinking. Yeah.
Yeah, let's do. You want to do a little tighter spread?
Sure. Sure. What do you want to look at? Why do you want to go tighter? By $10 wide?
Yeah, like
That's what I
$10
mean?
versus.
Yeah, sure. So like, let's say 71.30, 20, just to go to the 20-ish delta on each side, or the 19 and 205, 215.
You're looking at ES.
Oh, I'm sorry.
Do this. You're such a.
I do this all the time. I apologize.
It's okay.
Well, it's because what I look at for the.
I did 7100 and the
7090
and the 7170 on the upside. 20 delta on either side.
Oh, you did 20 delta. You didn't do 10 delta. $3.30.
Yeah.
Beautiful.
Yeah, the 1/3 the width of the strike's just a cookie cutter. I mean, that's what we do every time. Just a little bit tighter on this one.
Yes, you went $10. Yes, I
Yeah,
apologize.
because we've already, we're 45 minutes into the open. So
Yeah, I got it.
Put a little bit less risk on.
Understood. Good job.
So just a couple takeaways here. So when we research, we need to satisfy the following requirements for our studies. So you need plentiful and reliable data. You need tight markets, which means that you have to have lots of volume, lots of open interest, lots of strikes, lots of expirations. You need an underlying that is reflective of the broad market, right? So you can't look at a SanDisk and use that as your study because it's just so specific to itself, its sector. It's a very news driven type thing. You have to look at something that's very broad based. We need an underlying that has moderately low risk profile to make a conservative best case scenario. So the study in SPY is not something that you can go and put on a strangle in SanDisk. You know what I'm saying? Like you're talking about completely different products. Well, the mechanics of it and the management and all that stuff, you can relate to other specific underlyings. But just because you see something in SPY doesn't mean it's going to apply to a stock that has binary risk, that has market risk, that has a variable that isn't the same as a basket of 500 stocks. SPY has ample liquidity. It includes lots of stocks in various volatilities. You have some very high volatility stocks, some very low. It all averages out and gives you a nice little basket here and a low risk profile that enables it to be a base for studies. It's just from a liquidity standpoint, from a volatility standpoint, it's a good benchmark, but it doesn't necessarily apply to one-off stocks. You can't just say, because I saw this study in SPY, it's going to work in SanDisk. It's just that is not the same. And you should know that it's not the same. Because SanDisk,
I think it's a lot of common sense.
Or Apple or Microsoft, they're binary. They have their own risk profile.
Totally agree. We have an extra second or two here. You've got earnings in Apple. You have an existing position in Apple. Stock's up $1 and change. Anything you want to do to your existing position, or do you want to look at a new trade in Apple?
I have the 275, 280 diagonal spread. I did at 295 on May 15th, the May monthly, and the May 1st expiration.
May 1 day, yeah.
The 1 day. Does that scare you? It's a small little Johnny.
It's a small Johnny trade. It's a directional trade.
Yeah.
I was wondering if you want to do anything.
Maybe towards the end of the day, we'll take a look at it.
Put it on your list just because you have a position there, XOM.
I did want to look at Shaq too.
SHAK.
Yeah, that was Vanetta looking.
Vanetta with the new Shaq McRib.
Yes, I kind of like that vibe.
101.5 up 95 cents. Shaq today has been as high as around 102.5, as low as 100.
Got earnings coming up.
It does have earnings coming up. It's got earnings coming on May 7th.
Markets aren't great. I mean, they're not horrible, but they're not great.
We've traded worse, but yes, I agree with you.
Some of them,
You looking at June or are you looking at May? What are you looking at?
I'm doing
May is a lot worse.
Yeah, May. Why is May
May options are horrible.
Why?
I don't know.
What gives? What gives, Dad?
Yeah, I don't know. It doesn't look.
Yeah, I don't know. I don't know if I could do that.
Okay. All right. Let's take a quick 90-second break and come back. Even the S&P's basically unchanged, down $1.75. NASDAQ is your leader of the clubhouse to the downside, down 125, although it's been about 40 handles lower than that. Russell up 16, Dow up 490. Volatility in by 35 cents, staying depressed today, has not really caught a bid at all, even with the move lower. Bonds are up 7, 112.29. Bitcoin hanging out at 76.5. Oil 105, down almost $2. Gold up 7.
That's an interesting move.
Oil?
Yeah, like a little bit of weakness in the market. You would think oil would
catch itself a little bit more of a bid.
Yeah.
Yeah. It seems like oil has all of a sudden lost its
luster.
Yeah, or at least its market movement to the market. I mean, effect
it doesn't
on the
matter.
market, I guess.
I mean, oil volatility is it's 75 right now, which is still high, but
holding on to yesterday's gains on volatility. But I think you would expect that if I told you oil was trading 105.
All coming in here
in market, yeah. Volatility is down.
We're gonna rally
43 cents. I said
Did you buy the
crash.
NASDAQ here?
I said cancel crash.
I'm gonna scoopy a little micro NASDAQ here.
Look at you being a two-sided trader.
I'm always on both sides.
I know, just teasing.
I'm not. You're
not one-dimensional.
I'm certainly not dogmatic and
dogmatic. I like it.
Like that?
I do like it.
Yeah. But I think that you have. I mean, like you. Wait.
What was that?
What did I get filled on? The other thing. Oh. Wait. Did you?
I didn't do anything.
Did I double click?
You may have.
Sold
it.
Am I flat?
Yeah.
Okay, that was. I don't know what happened there.
It was a good fat finger. You made 10 ticks.
Yeah, I know, but I.
Let's see. Yeah,
that was weird. All right,
It was weird.
I'm gonna get back in here. I think
you're gonna try.
I think I did.
Oh, you? No.
I think I did an opposite order when I was
when you were putting in your close.
Yeah.
Got it. Oh, that's good. You caught it right.
Yeah, I caught it for a couple ticks. Now I'm back in. You don't put that.
I won't.
Just the buy.
Yeah.
That was just me being
a Johnny.
Yeah, a Johnny getting a little fat finger mistake there.
Even the S&P's up 2, NASDAQ up down 115. Russell.
I missed the Qualcomm position too. I blame you for that because.
What do you mean you missed the Qualcomm position?
I should have closed it earlier in the morning in the session. We didn't. I forgot that it had earnings and we had that butterfly and.
I mentioned it 100 times.
Did you?
Qualcomm?
Yeah.
It's at the top of my list. Let's take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next?
We got the boys.
That's right. Tasty Trade World Headquarters. We'll be back in 90 seconds. Let's Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates.
Nikki, we are back, son. You know what that means. Time for a little more Tasty Live as the E-mini S&Ps meander around up $3. NASDAQ down 95. We've got these guys. Tasty Trade World Headquarters. That smiley face could be only one person to queue. All right, my man.
Fellas, how's it going?
Good to see you. Good to see you. Did you put away your winter coat?
Yes, it was beautiful this morning. Oh, it was so nice out. So nice out. Very nice, pleasurable walk to the office this morning.
45 degrees.
No, okay. It was like a sunny, like not very many clouds.
I get here before
degrees.
the sun comes up, so I wouldn't have known it was
I mean,
hot,
you are just so hardworking, Tony.
So hardworking. Oh my God. Pat him on the back.
Yeah, that's a great job out of you.
Yeah.
That's a great job. Yeah, see, I come here when the sun is up. You know, I was walking there. I actually brought my coat with me, but then I put it in my bag.
Wow.
I was like, no need for that because it's pretty nice out today. It's a 45, but like a sunny 45.
Nice.
You know, so it's
Yeah.
really like 50 something. And a beautiful day out.
Yeah.
Very nice.
Much welcomed.
Had I known, I did not know. Even the S&P is now unchanged. What do you think about that? How you were very busy yesterday on the desk, you said, correct?
Yeah, we had a busy day yesterday. Desk is still pretty busy today.
With all the earnings, I would imagine.
Yeah, and then also because a lot of these symbols still have like pretty high IVRs, a lot of people are like, okay, I can still do something after earnings. And like
Sure,
some
I
of
like
these-
post-earnings trades to be
Yeah,
quite
and these
frank
are
with you.
like very, liquid symbols that you can trade and then start to speculate on. And so, yeah, we've seen a lot of customers like placing trades this morning after earnings because they're still in play.
Mm-hmm. Yeah, no, I agree with you. I think sometimes for earnings, especially in the stocks like the Mag 7 stocks and all these stocks that we've had here, I think the volatility sometimes is rough to trade. And after earnings, it's even a better play, especially if you have a little bit of directional bias on some of those. So, yeah, I like that. I like that a lot. Quick question for you on the desk. I know we've talked about pad and day trading. Has there been any change in that, or we're all good? Still June,
Yeah, June 4th.
June 4th.
June 4th is the day. And we plan to be good to go on day one, on June 4th.
Right.
Don't say plan.
Well, some of us, have a
Will.
reputation to protect. Okay.
Will.
I got to make sure, I'm not getting the brokerage firm in trouble. All right. But
That's
we do
true.
plan to be ready on June 4th. And so if you're restricted due to pattern day trading, equity maintenance call, like you're below 25,000, if you're restricted due to a day trade call, so day trading more than your starting day trade buying power, you'll be unrestricted on June 4th and able to day trade as freely as you would like. So as long as you have the buying power to do so, which obviously our system already accounts for, we're not going to allow you to put yourself in a margin call on an opening position. And so, yeah, as long as you have the buying power, you can day trade as many times as you'd like.
You mentioned in the release and the art card and everything else like that, maybe even emails you've sent out about intraday margin. A lot of people don't know what that means. Can you conceptually go over that?
Yeah, so the intraday margin rule, that's like the making sure you're staying out of a margin call when you're placing these trades. So as long as you're not in a margin call with the new day trade rules, then you don't have to worry about being put into a DT call, because DT calls will still exist, but not like the standard DT call where you have to stay below your starting day trade buying power, or the starting day trade buying power is just what your like
Cash.
maintenance was. Not necessarily cash balance, it's your maintenance excess.
Isn't it like flip? It's how much. Yeah. So how much you start with, you can't go over that currently.
Correct, exactly. Yeah,
You can't
so
trade that
Yeah.
more than it's notional.
Yeah, to like give an example, what we'll see a lot on the desk is like there's two common scenarios. Let's say you have like a $10,000 account, but it's all in positions. And then so you sell those positions and then you make a $10,000 day trade, for example, then you would get a day trade call for $10,000 if you didn't have like any buying power to start the day with.
The most insane thing ever.
So that's one scenario. Yeah, that's one scenario. And then the other scenario is, let's say you start off with a $10,000 account in another case, and then you make, $1,000 of profit on one trade, and then you put that entire $11,000 now into a day trade, then you would get a day trade call for $1,000 because that's in excess of your original starting day requirements.
And what if you were trading the 0 day with that $11,000 in your example?
Yeah, so like if you put your
If you
whole
left it
account-
on, it wouldn't matter.
Right, that's
correct.
that's
Yeah,
what
so
I'm asking.
okay, yeah. So if you leave it,
So
till
let's say I had a
expiration,
$10,000 account and
Yeah.
I'm trading in, and I know we're getting in the weeds here, and
that's where I live, so we can.
All right, good. Let's say you're trading a $10,000 account, you make $1,000, and you're trading 0 days, and you put all $11,000 to work the next day. You'd be in a margin call theoretically, but since it's 0 day, it wouldn't matter. It would allow you to make the position.
Well, so if you do it on the same day as you made that $1,000 and you do a day trade, if you do it for like the next day options or if you leave it on until expiration, it doesn't really matter.
Got it.
And then, so these are the old rules though.
Yeah.
Right. So this is what will still apply until June 4th. But then come June 4th, we've got the intraday margin rule, which is replacing 42.
So will that intraday margin be when I click and put my buying power up there? Is that showing me intraday margin, or is that showing me?
So we don't have like the options. You don't get like intraday.
There is no margin on the
or anything, right?
Intraday margin is on just stock.
You can get that on stock potentially. But what the rule is basically saying that, like, as long as you're not, as far as it applies to your Tasty Trade account, as long as you're not in a margin call, then you're good to day trade as many times as you'd like. And our system automatically accounts for that, right? We're not going to allow you to place, a 5-wide spread with like, $10 in your account, right? Because that would automatically put you into a margin call. So as long as you don't put yourself into a margin call, you're good to go with the new intraday margin rules.
The best part about this is in about 34 days, you're not even going to have to worry about any of that.
Yeah.
So you won't have to
more or
learn it.
less, yeah.
Yes.
There's a lot of intricacies.
Like there's going to be no questions about like any of the intricacies, right? Because it's more or less as long as you're positive, you're good to go. Which is, you should be positive all the time, right?
Right.
So everyone should just be good to go, more or less.
I like it. Good to go.
I'm closing more of those NVIDIA calls.
Oh, very nice. Good job, Eddie. NVIDIA's down today, isn't it? Down pretty
Big. It's down to 200.
Yeah, down around $8 or so. I mean, back near its old highs, right?
Yeah.
Yeah, NVIDIA.
Yeah. It's had a 20-point move in 2 days. I mean, it's skyrocketed to 217, 218 new highs. Now, yeah.
Earnings are May 20th after May expiration.
It's interesting that volatility is contracting into this too. Overall market volatility. You have
down
oil,
50 cents to 1975.
Yeah, it's the low of the session. This has been don't think.
Until
this has been as much of a don't think market as you can even imagine.
Yeah, I mean, I don't know what that was. I'm not gonna have fun when the macro guys come on and see what they have to say, because this is gonna.
Oh, their
head's got to be spinning.
It's mush.
Yeah.
I
No, I get it. So, like, I get the same thing. Like, when volatility is going the opposite direction of what the market's doing, I say, you know what? I don't understand, what's going on here. That kind of thing. So, I get it. I mean, about 15 to 20% of the time, it has to happen. That's just math.
Yeah.
Good job, Eddie. Let's do your list. I apologize.
All right, top 20 symbols going through the system, and their IVR. We've got a classic top 4 right here. Microsoft with a 56, Amazon 24, Meta 36, Google 29, Nvidia 50, Goog 28, Qualcomm 70, Intel 101, Micron 78, Tesla falling all the way to number 10 with a 6, Robinhood 40, Apple 60, AMD 85, SLV 31, GLD 37, SoFi 12, Bloom Energy 52, Broadcom 50, TQQQ 49, and Chipotle 40. Chipotle there, they had earnings as
They
well.
did.
Right? Rounding out the top 20.
First time I've made money in Chipotle.
There we
Chipotle
go.
goes down.
Because it's been going nothing but down. You're always trying to play it. It's a little bit of a price reversion to the mean. You finally got one. They didn't even hold on to their rallies. It was up like $2 or so.
Oh, is it basically?
It's up $1 right now. Yeah. I mean, no, it's held on since you put on the trade, but it's not trading on its highs.
No.
After not really being able to catch itself an uptick ever.
Yeah.
You like Chipotle?
I love Chipotle, yeah. Chipotle, well, like they come out with like this whole like.
They got the new hot honey chicken.
Oh, really?
Yeah, they brought it back. I only know this because my son did it, but he does combo hot honey chicken, regular chicken because he doesn't like it too spicy.
Okay, yeah, because like they've come out.
What he said, the hot honey chicken is the jam.
The jam.
They've come out with like this whole like
the jam.
their like
I'm a
protein
boomer.
menu. I mean, they've come out with like this whole like protein menu. I'm like, it's already.
Oh, he does that bowl.
We can get into the whole protein craze another time because I've got some things to say about that.
Oh,
for sure.
Pro, con, or in the middle?
I'm pro, but it's just like I hate when anytime there's a fad about anything, I'm usually like.
I mean, potato chips with protein in them. I mean, we've kind of jumped the shark a little bit.
Right.
You have to eat the potato chip.
Maybe we can get into it now. It's like.
Well, you want to know what grinds?
That's called baiting.
Yeah.
I just baited you.
Yeah. You got me. So it's like when you go to the store and you see it's like, pretzels with protein. Like, I mean, it's good for me because, I want to eat a lot of protein and stuff for like powerlifting and stuff, right? But it's like, it's getting a little ridiculous. It's like pretzels with protein, like popcorn with protein. And then it's also like, when it gets down to the testing of some of this stuff, it's like, does it really have as much protein as they claim? And because like I know with like, the creatine gummies, I don't know if you guys have seen those. It's like a lot of them do not have the creatine that they're saying in it. And so I'm sure it's very similar with a lot of the protein
don't burst his
supplements
bubble
as well.
Don't burst his bubble. He doesn't like to mix the creatine.
Man, no,
water.
here's what you
Too
do.
hard for him.
Put water in your mouth, take a spoon.
I do that too.
Keep the water in your mouth.
And just go the whole thing.
Take it down, and then you're good. No.
Yeah.
Gummies, come on. You don't need, you're not a kid.
Gummy,
you don't need
gummy. You know what the markup on those gummies are relative?
Yeah. I mean, creatine's such a cheap supplement.
A jug of creatine. You can get a jug of creatine that lasts you 6 months for $50. Those gummies are $30 a 20-day supply.
Yeah, I mean, it's a ripoff.
You know what I mean? Like you're getting gouged. But it's par for the course because you and the rest of the monkeys in your clan, they just swipe, click, Apple Pay, click.
It's amazing how I became so successful without the two of you being able to help me.
Well, we're just trying to help you.
Wow. I'm
trying to help you.
I'm just trying to bring you higher from where you are,
You're trying to elevate me.
Yeah, that's all.
He's trying to replace me. It's a difference. The difference coming from doing the same thing, just coming from a different angle.
Yeah.
I get it. I get it.
I never replace you. Although
New Daddy has a nice country club.
New Daddy does have a nice country club, and he's got a.
Don't say anymore. It's gonna hurt. Don't say anymore. It's gonna hurt me too much.
But I will say, I was gonna say you can't replace. You only get one dad, but you used to always say. You always know your mother. You're not so sure.
You always know who your mother is. Yes, correct.
The mother can't fake it.
But I didn't have the technology that you have today. We can test this.
That's true.
We can test it so we can prove it.
That's true.
I'm going to let you go, my friend, before I cry. But thank you for your help. I appreciate it.
Always.
Who is our next victim? Wow. Ooh, look at you swooping right in there.
How's it going, guys?
Hey,
I'm
nice
good. How are you,
Japanese
G?
yen.
G Money?
Few thoughts.
Few thoughts.
A
penny for your thoughts.
Roommate, over the moon that hot honey chicken is back.
I told you.
So excited. But I'll tell him about the split because he also, too hot.
Too hot for him? Too hot for him?
Spicy.
So maybe the half calf.
Is your roommate 16 years old too?
If you were to look at his diet,
maybe.
You would guess.
Maybe.
Second thing, I do the dry scooping creatine at the desk here. Everyone looks at me like I'm a monster.
You are a monster.
So gummies definitely a safer office play, presumably. But unfortunately, Tony, have to agree in terms of absorption. It's a lower beta option.
What?
Now, wait a minute.
Soup or for
No,
the gummies?
No, for the gummies.
Yeah, the
Wait.
gummies is nothing. The gummy is, and none of it's tested. It's fake news.
All of a sudden, you guys are doctors too?
Yes, of course. Yeah.
Awesome.
Yeah.
Awesome.
It's crazy what Twitter does.
Oh, I like that.
Turns me into
I
a
like
nutritionist, biologist.
Yeah. Everything.
Yeah. So
Yeah.
please come to me with any and all questions.
Yeah.
I got it. All right, I
We're
got
just
it.
trying to help you. We're just,
No, I know. I got the powder too, but the gummies are so easy.
Yeah, I mean, the dangerous thing, I do the melatonin gummies sometimes. and-
Okay, now that you shouldn't be doing at all.
What?
You should not be.
Oh, what are you, a
Melatonin?
doctor? What are you, a doctor now? You're a
Yeah, I
doctor?
mean, yeah, dude. Yeah, search it. Search it.
Okay,
We're gonna see nippleage on you soon. I'm telling you. I've been noticing a little change in you.
That's the creatine, not the.
No. That's the melatonin. I'm
All right.
telling you.
Well, we can do a full checkup at your pool this.
You want to talk about FX now, don't you? Don't you? You want to talk about FX? All right, let's talk about FX. I saw you going to your computer. Hey, you got to lead with the yen.
Yeah.
Holy smokes!
I mean,
yeah. Last night I left. Last night I left my cookies and carrots out for ECB President Lagarde and BOE Governor Bailey.
Why carrots?
Took in. It's just what you do to Santa and his reindeer, right? You gotta feed the reindeer.
I never did the rain. No,
and
never
it
did.
shows. You never got what you wanted, did ya?
Yeah, that's yeah. I just always wanted my dad to just come home. Santa never brought that.
But yeah, I mean, you gotta feed Dancer and Prancer as well.
I didn't think about that. That's why.
All's to say, was expecting a dual header price action in these European currencies this morning from those central bank decisions, but alas, lo and behold, the Japanese yen stole the spotlight early this morning, first by issuing a pretty divisive verbal warning.
That's a big move. Look at this thing.
Yeah, it's a 2.5%, almost 2.5% move, 2 and a third right now. But my question to you is,
yes, sir.
And I know it's just your opinion, just your opinion,
and not the opinion of my firms,
and not the opinion of your firm or any knowledge of trading, because I've watched you trade. Can it hold on to this rally? Because if it is, it would be the first time it's done it.
I think I'm actually going to fade that.
I agree with you.
So that's
in
absolutely.
my opinion,
that is the question to ask. Great question.
Okay.
And I think as technical analysis can get a little hairy, as we know, past performance not indicative of future results. But I am looking. We've stayed below 157 in the spot market this morning after dipping all the way below 156. With what you said, as much as a 3% move in this yen over a matter of 4 hours, which is remarkable. I'm looking at just above 157, 157.5, because that is a place of former resistance. And as you said, the recent 2-month range here has been dipping briefly below 158 and immediately snapping back up. So when we're looking at if a pullback comes up to that 157.5 range, that's where I start to get really interested to see if this is sticky or just an exaggerated move through the bottom end of the range. But what I will say is the Bank of Japan
Japanese finance minister. Those powers that be do have a proclivity to not only enter the currency market on a one-time basis, but really want to drive it home and sprinkle a little bit more yen buying over the course of a discretionary time. So, I mean, you're absolutely right to say that, one, this is an extreme move that could be exaggerated, but important to know the institutional buyer single that you are fighting against if you are a US dollar, Japanese yen bull here, trying to fade this recent move. So we'll see. Just like this wasn't expected on my bingo card today, it's all about the velocity of these moves. So obviously we've tested 159, got up to 160 earlier this year, but it was just as soon as we breached that previous high overnight that we started to get these warnings. Last chance to escape is what one of them said. And warning market players would know what I mean by that, which I thought was pretty funny. And then Nikkei coming out and confirming that Japanese yen buying here in the US session. So yeah, that's kind of the price level I'm looking for. But right now I'm more in favor of monitoring this market. It looks like for this
monitoring the situation.
Exactly right. Finger, pulse, you know how it is. Ear, ground.
Situation room.
And so it's still pretty interesting, but it looks like the velocity there taking place over the European session seems to favor more chop here in the hours since. But action not over, because if you look anywhere else in these US dollar markets, you'll see that we actually are getting a bit of a pop for other currencies, not the US dollar, on this GDP number that came out around 9 a.m. GDP miss in the advanced reading for Q2, I believe. And so that's interesting. U.S. dollar softer on that, despite equities kind of turning around here. But of course, that's NASDAQ led. Not as much price action in this S&P, but a healthy range, but kind of a non-event for these European currencies. They did exactly what they expected. Their guidance, ECB saying, actually saying, she said she knows what they want to do, but she's not going to tell. Not going to tell you. But they do believe that 6 weeks, the time until the next ECB meeting, will be enough time to have a lot more data in. We'll see if that's the case or not, but nothing drastic happening for the euro or the pound, aside from the fact that when you're looking at these US dollar pairs, we're now approaching on the bid in these currencies, we're approaching an interesting price level. In that pound yen, we're getting up to 136 in the spot market. That's been a level we haven't broke through since mid-February. So top of the range here for the past 3 months. And similarly for this euro dollar, though it's been a little bit more fluid, we have seen some prior resistance
The euro yen or the euro?
Euro dollar.
Just the euro.
Euro dollar, yeah. We're oscillating around this 117 level in the spot market, but it's definitely losing a little bit. It's lost a little momentum here before to end April on the run up. So that's what we're looking at. Other surprising move of the day, dollar Swiss franc down over a whole %. That move looking more like
you have that.
I'm long it.
You're long.
I'm now I'm loaded long the dollar. Dollar CAD, dollar shekel, dollar franc, dollar
you name it.
yen.
But yeah, that move much bigger than I would have expected. That one moving some on the intervention news as well from the yen, but also we're at a time where month end we are seeing some currency rebalancing with the equity performance in April. It's no surprise that you do get some of these more elastic runs, but still a surprise, a whole % from the Swiss franc today. So we'll see what's up for the rest of the week here, but
rest of the week, you got one more day.
I know.
Well, you guys go on
no
weekend.
No, 24/5.
24/5. You guys, because
for now.
For now.
Never know. But yeah, I mean, an interesting week. We'll see where we drift directionally with a lot of this event risk behind us. But it looks like we could have more kind of risk sentiment, weekend risk heading into this weekend, although those headlines aren't commanding market attention per se right now. You could see some repricing into the weekend if we are to start attacking.
Does oil move do anything to the currency pairs?
Yes.
Has it?
Yes, it's been more of kind of a greater beta proxy. As we know, its price movement has been more of just a risk barometer. And as we've seen in the equity markets this week, that correlation not holding as strong.
Right.
So you did see it at the start of the week in the New Zealand dollar, US dollar. That's of the popular US dollar pairs where we've seen the most of that play out, strongest relationship. But this week, like you said, everything's been wonky. Not too sure where we go from here, but nice to see some unique price action and a myriad of currency headlines to trade if you're brave.
How was the J-POW event? Did that
heartfelt?
Do you guys get like on the FX side? Do you guys get like a shrine sort of made for him? You get like a picture or something?
No comment.
With the purple tie?
Of course. No, but we were all high-fiving and
that he's staying on.
Hugging that he's staying on.
Yeah.
Just so good for the program.
Yeah. You need that. You need it to continue. I mean,
exactly right. The headline I was most jealous of was that he and Big Kev Warsh caught up over dinner and had a nice time.
Oh.
Never been more jealous in my life. That sounds fantastic. I bet they share desserts.
I don't
Here, Kev,
think so.
Here, Kev.
Nor are they taking
Kev, you
melatonin.
you have to try this tiramisu. You simply must.
Here, use my spoon.
You try saying no to this carrot cake.
I don't think so. I'm going to let you go.
Thank you.
We're going to take a quick 90-second break. Even the S&P's up 14, son. Volatility in by 50 cents.
I scalped out of my NASDAQ.
I saw you scalped out of your NASDAQ. You closed
successfully.
Some MSTR, I think, too, or something.
What kind of phrasing is that?
I'm getting smoked over here, so I need to update that follow page.
Oh, it's there. Oh, it's there. Yeah, it was successful.
Dang.
All right. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. Liz and Jenny next.
Liz and Jenny next.
Peace.
Peace. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Welcome to the Liz and Jenny Show. My name is Liz. Sitting to the left of me in the beautiful red shirt is Jennifer Andrews.
Happy Red Shirt Thursday, everybody.
The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love. People get to take a look at how our minds work as ex-floor traders now transitioned into self-directed investors.
You know what's hot? Earnings. We are right in the middle of prime earnings season.
Well, we've got a big dog, Netflix. Do you know what he did? And we've got those cards with us, and we're going to keep them on us at all times. He made us each certified badass cards.
He brought me the card, and I am no longer afraid to trade anything. Just try it, Liz. Any strangle you want to put on.
Certified badass. And you know what? When she gets out of her comfort zone, I'm going to hand her mine.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I'm still coming down from the weekend. Saturday night like we should. I know I should work a bit harder, but baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know that you worked a bit harder, 'cause baby, your love is too good. Touch me, hold me, love me. I'm still coming down from the weekend. Saturday night like we should. I know I should work a bit harder, but baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know that you worked a bit harder, 'cause baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know what I know, it's time that I go, 'cause baby, your love is too good. Baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good. Touch me, hold me, love me, know me.
Hello, everybody, and welcome to the Liz and Jenny Show. My name is Jenny Andrews. That beautiful blonde and red, you look like you're coming right off the set of Chicago, is Liz Deerking, and her daughter's in Chicago all weekend, one of the lead roles, and you look like you might have stolen one of the costumes.
She's Velma Kelly and all that jazz. Yes, it's awesome. It's gonna be a fun weekend. But yeah, they're all in black, Jenny. They're all in black. It's black or bust. But yeah, no, it's gonna be a fun weekend. But I'm gonna be. I said I've known this role. I know this show inside and out so well, and I've known it forever. So last night, one of the girls couldn't make it. I was like, "Do you need me to step in?" And I was like, "No."
You could. You could. And this wouldn't be the first time a parent steps in. I remember when your husband was Daddy Warbucks.
Oh yeah. But that was a planned event. But so that's what I said. One of the girls from Cell Block Tango couldn't show up, and I was like, "Oh, I got this." And it was like, "No, you're 50. No."
So funny. Well, I can't wait. I'm going to see it tonight. And
yeah, I can't wait to have you there. It'll be fun. A lot of our friends are coming, so it'll be fun. Okay, so Jenny, market. What the heck? These earnings?
Okay. So much for the tens of thousands of Amazon 300 calls people were buying.
Yes. So it was the 300. Go to Amazon real quick if you can.
Let's go to the platform. Let's go to the platform. I'm going to go to Amazon, AMZN. Amazon down 3. It was up after hours. It was up earlier today. Look at the open.
It was up a lot after hours. And it was up this morning.
It was up to 273. It was up to 273. Yeah. But, we have a long position. And I was like, 273, that's nothing. I'm going to let this run to 300.
So go to the trade page because it was the March 4th. So it's Fridays, right? Is that Friday?
May 4th.
I'm sorry, May 4th. May 4th 300s. And they were $1.
300s. No, I think it was.
No, it was the May 4th. It was the May 4th 300s. They were 90 cents.
No, because there was way more volume than 1.5 thousand.
Yeah, there were.
Maybe I think it was the May. I think it was the May 11th.
No, Jenny, it was the May 4th. Maybe they were closing them. It was 56,000.
Hold on. Let's see if we can find the volume. If it was a closing order, we're the biggest morons in the world.
We are morons. No, it was May 4th, unless it was the 0 day, but I doubt it.
No, it wasn't the 0 day. It was further.
It was May 4th. It was May 4th. May the 4th be with you. And that's Josh's birthday, I think, isn't it? Josh?
Are you sure it wasn't May 15th?
Yeah, yes, I knew it. May 4th.
Are you sure it wasn't the May 15th?
No, I think it was May 4th. I'll go back and review the tape because it was on our last call. It was last call yesterday.
So yeah, like thousands of the 300 calls were trading. Liz and I took that and ran with it and thought Amazon would be up like crazy. And it was up. And again, it was up to 273. The open was 273 and the high was just almost 274. So it was up, but I didn't close my position. Did you close yours?
My Amazon, I adjusted it. I closed my Amazon position and adjusted it this morning. I like Amazon. It's been pretty good to me this year. So I just reestablished with farther out in time. I know I could do the Bob on Fire here, but I didn't. I actually just reestablished my diagonal. Amazon's been pretty good to me, so I gave a little bit of it back with this bullish trade, but it's not the end of the world.
Wait, can you say it again? Did you say Bob on Fire?
I did.
Look who's back, Liz. Look who's back.
We missed you.
Oh my gosh, Bob, we missed you. You haven't been tweeting in a few days. We've missed you. He's back and killing it again with a Google Bob on Fire.
With the Google Bob on Fire. We're really trying to get it to stick. I love that you put the RSB, but it should be BOF.
Yeah, everyone's saying RSB, Ratio Super Bowl. We call it BOF, Bob on Fire.
Bob on Fire.
So you could see 4:15. What day is today?
So he did this yesterday.
No, 4:15 is a couple weeks ago.
Okay, so he did a pre-earnings trade.
He did it for $5, and then today closed it for $3.29.
Yeah.
Wait, am I reading this right?
I don't know. That seems very bizarre.
No, because it's closing. I think there's more to this. There's more to this than we. But anyway, here's what I know: $1,221 overnight on a leap BOF. On a leap BOF.
We're just gonna read it BOF from here on forward, Bob. So sorry.
And look at this. He's going all the way to March.
Yeah. That's awesome. Yeah, he's got a January and a March, so that's not a closing. Yeah. But that's super fun. I'm excited. I'm excited he's back. Number one, I really do like these trades. We like these trades, and I want to be very clear. I'm not loading the Flotola on them. I've got some in there. So, like I said, I switched my Amazon to another diagonal, but in Google, that was a good work on your Bob on Fire.
And yesterday was the one bullish diagonal I didn't put on the Google, because this was the one where I was like, okay, Google's market cap is bigger than anybody else's. Is the one I passed on. Now let's see where it is. Was 4 trillion yesterday?
5 trillion. Can I get another T?
4.12 trillion, Google.
Yeah.
Jeez.
I know Jenny looks at market caps, and I know you do, but for me, I never do.
It depends, especially like if it kind of depends. Like if I'm doing something, when I would do my American Eagle, Abercrombie pairs trade and looking at the two companies and their values, like I do definitely look at it, or if I'm looking at different car makers, or when I'm looking at certain trades. But here I just thought, how much higher could Google go? Apparently 6.88% higher.
Yeah. Yeah, there you go. I can.
Moving.
Can't stop, won't stop. I mean, SPOOs are up 26. It was kind of crazy this morning because it was all over the place, right? So, okay, hold on. We are, I'm going to keep an eye on the time right now, and I don't even think on my phone. Okay, so we have a couple things that we're going to do today. We are going to put on our market movers trade. We are going to be taking live tweets. We just did that. We're going to put the hashtag LIZJNY on there. We're also going to, later in the day, put on that SPX, Jade Lizard from the study that we did yesterday. We didn't place it in our account yesterday, only due to the Fed announcement or the Fed meeting, but we're going to do it today. I did it yesterday. I put mine on yesterday before our show because, like you said, it really doesn't matter the time.
But you always have one on. You always have. As soon as
I always have one on. No, I did I always have one on, but I did the 5-day, the $10, $30 yesterday, that was new to me. That was new to me. I usually do the 5-20. I did the 10-30. And the 10-30 is coming off right now for 50%.
Well, the study showed that comes off in about 2 days. Was it?
Well, on average, 2 days. You know, today you got the vol sucked out because the FOMC meeting, right?
Right.
And then I also got the directional move I needed, so I think I got out a little quicker.
Yeah. Okay, so I think in the essence of time, it's 10:09. It's 10:09 to make things easy on our marketing team. 10:09. I think it's time for the YouTube trade of the day.
Are you trying to change the name to the YouTube trade of the day? Because sometimes it's a study, sometimes it's a trade. But I like it, Jenny.
We don't have a study. We do not have a study today. So since
no, I know that's why we can't always call it the YouTube trade. Well, today it's a YouTube trade of the day, so let's do it.
Today, the YouTube trade of the day. I have ZB pulled up here. You can see bonds are in the 112 handle. They're pretty low. And so I thought of putting on a bullish trade in bonds, but not using ZB, instead using TLT. So today we're going to walk through a bullish zebra in TLT.
And a zebra is a zero extrinsic back ratio, and it is a synthetic stock replacement. So it actually works very well in TLT. It's a good product for it because if you go through and you're selling premium, this holds up quite a bit of capital for selling premium without a lot of the risk reward scenario doesn't set up in TLT. So this is a pretty good zebra candidate if you have a bullish assumption on it.
I agree. There's not a ton of premium in TLT to just sell puts. It's using a lot of buying power. Not a great return on capital. So I like the zebra or the zero extrinsic back ratio. It'll give you synthetic stock. It will replicate 100 shares of stock. If I bought 100 shares of TLT, that's going to use $4,292 in
a margin account.
Yeah, or $8,500 in a cash secured account. That's a lot of money.
In a cash security account. And so keep in mind, I trade a couple accounts, but one of them is an IRA. And in my IRA, because I can be bullish or bearish if I put a zebra on, I almost exclusively use this as a stock replacement in my IRA. Because cash secured accounts, if I'm going to buy TLT, it's $8,582.
For 100 shares. For 100 shares. So let's replicate getting long 100 shares in TLT. And we're going to do it for a fraction of the cost.
Pennies on the dollar.
So, okay, I'm going to jump in. I'm honestly, 15 days I think is too short. If May had over 20 days, we'd probably go to May. I think 15 days is just not enough time. And we want to stick with the monthlies.
I'm okay with June.
Okay, so this is going to be a 49-day trade. 49-day trade, we're going to control 100 long shares of TLT. So, back to the trade page, open up these June options. How do I set up a zebra? I'm going to set this column to delta. We're going to use delta, make it really simple.
We are going to walk through with a delta, but the crux of it is wash extrinsic value. So it's always going to be around about a 57, like 50, 70, but just keep in mind, common sense needs to kick in. All you're trying to do is wash extrinsic value.
Okay, so if I sell, I'm going to sell one 50 delta call. So here's the 48 delta, the 86 call. I'm going to sell one 50 delta call, and I'm going to buy two 70 delta calls. Here's a 70 delta call, the 84, buy two of those. What I'm trying to do is get this green bar or my break even.
Yeah, you got to toggle it. Perfect. Okay, good.
It's right. Yeah, it's right there. Oh, hold on.
No, with the zebra, sometimes you just got to move it because we aren't washing all the extrinsic value.
So, and that's what we want to do with a zebra. If I go to the analysis page, we want to start making money where the stock is. And here's the little red flag. That's where the stock is. And we are green. The stock goes up, we start making money.
Yeah. So look at this, and anywhere to the upside for the next 49 days. So instead of in my IRA using $8,500 to control 100 shares of TLT, I'm using $368. I need to be very clear. I'm not going to use all 8,000 and do the multiple of this zebra. That's not how I roll.
But, let me see. I'm going to pull out my calculator, and if we wanted to put $8,000 divided by 368, we could put on 22 zebras. But to your point,
That's not how we roll. That is not the use of this. What the use of this is saying this is defined risk. So I can control 100 shares of TLT with the risk of wheels fall off scenario. TLT drops to, I don't know, 60. All I can lose is $368.
I mean, I don't foresee TLT falling to 60. We got real world problems if TLT's at 60. The chance of it falling there is 0%. But even if it falls to 78, our risk is only this $369 that we're paying for this long 2 calls, short 1 call position. It will replicate 100 shares of stock to the upside as TLT goes up. Every dollar it goes up, this trade will make $100. So if TLT runs back up to 90, this trade would make $400.
This is a true stock replacement strategy that only smart options traders will know how to use. If you said this to somebody, they would be like, okay, you can control 100 shares of TLT. Let me give you the resume of this, Jenny. You can control 100 shares of an $85 stock for the next 49 days. It will be defined risk, meaning you can only lose $368. And you have 1-for-1 unlimited profit potential to the upside for the next 49 days. People would not believe that.
No, honest to God, Liz, to think for $366, that's what my dinner cost last night. Could have not gone out to dinner last night and spent $366 on a TLT Zebra. I'll choose that. Thank you.
I know. I'll go through the drive-through and I want a TLT Zebra, please.
So $367 to have 100 shares of TLT for 49 days. Great, especially since we're making, coming very close to lows that we haven't seen. I mean,
no, right, and we're coming close to lows, but we're not saying this is going to make money. TLT could stay right here and we don't lose any money. You washed extrinsic value. So if TLT stays right here, you don't make any money, but you don't lose any money. That's why the washing of extrinsic value is kind of important, because if it stays here, it's still no harm, no foul.
Now, if people are confused by this Zebra, this long 2, short 1, you can go to tastylive.com. So here I am, tastylive.com, and you go to shows.
Yep.
Right over to Liz and Jenny strategy series.
These are strategies that we created.
And here we have this 0 extrinsic back ratio. That is the Zebra. So this will go over in detail, very slowly, the mechanics of this strategy. A stock replacement strategy, you can do use calls and have a bullish trade. You can use puts and have a bearish trade. We go over that in this video. So the video's a little bit dated. We might look a little younger in it.
But 2023 is not as bad as I thought it was going to be.
No.
I can guarantee I will be blonder in it. That I do know.
My hair's shorter in it, but it's a good video on how to set up the 0 extrinsic back ratio. And we're gonna press this button and send this in TLT and have a 49-day bullish position in TLT. What are we looking to make out of this trade, Liz?
Whatever we get this question all the time, whatever you would sell TLT for. If I bought TLT at $85.79, where's my profit target? Personally, where would I take off a stock trade?
Right, where would I take it off? So if TLT opens up tomorrow at $86.79, this we'll have made $100 on the trade. If I'm okay with $100 on this trade, then I'll close the trade.
Yeah.
So we'll see. We'll keep an eye on it. But now we're long TLT for the next 49 days. And that is our YouTube trade of the day.
Because TLT is for you, Ashman. It's dynamite. TLT.
All right. On to something else. You know what, Liz? Can you monologue for a minute? I have to post a picture on Twitter.
Sure, I'd love to. What are we on right now, TLT? I will monologue because... I will monologue. Today we have a lot of earnings. Not a lot of earnings. Yesterday was a lot bigger of the earnings. But today we have Apple. I know we have Reddit. I do want to see what Royal Caribbean did because I didn't look at that. That was this morning. There's lots of other things that we have to do today. So please, like I said, put that hashtag LIZJNY on the tweets. We are going to go back and talk about a study that we did yesterday live from the trading floor, which personally was one of my favorite SPX studies that Jacob has put together for us in the 0 DTE sector, I will say, because this is 5 DTE SPX. Well, he did 5, 10, and something else. So it was kind of a different choice of where you can go with the shorter term SPX trades.
So I posted something on Twitter. I'm going to go to it. And Blue Wackadoo, love to see you here. Happy Thursday. I'm older, but am wiser. Is it your birthday? Happy birthday. I'm older, but am I wiser? IVR I'm right. I'm guessing it's his birthday. I'm going to say happy birthday.
Maybe he's just saying he's growing from his trading career.
IVR is so bonkers. Just missed my quick exit.
Oh, you missed your exit. That's okay. It happens. Blue Wackadoo is very clear with the concept.
No, but he's back in here. So let's see what he does here. Done for the day. Then he's done for the day. So that was how much time between 35 minutes, thought he missed his exit. 35 minutes ago, thought he missed his exit. 30 minutes ago, out and done for the day.
5 minutes, eh?
I had to post this last night.
You did it, Jenny. Was it good?
It was good. It was good. No, I was wrong from that picture. The other picture, it looked like there was some kind of cream in it. No cream. It was just Kahlua, vodka, club soda. It was delicious. The mind eraser.
Why would they call that a mind eraser? They need to call that something different because it does sound really good.
I had like full capabilities after I drank that mind eraser. I didn't forget anything. It was delicious, but it's nothing that's gonna.
In my mind, you know what it was? In my mind, I think I'm mixing it up from when we were in college, like the cement mixer. Isn't that a shot?
I can't remember what the cement mixer is, but I don't know. I mean, it sounds familiar, Liz. It sounds familiar. But this mind eraser was a lovely after dinner drink. It tasted very much like a espresso martini.
Did it? With the club soda in there to lighten it up.
Yeah, it did remind me a little bit of an espresso martini, but it was delicious. And so when I said my dinner cost as much as that TLT Zebra, that's because there were 4 of us. It's not like I was out on some crazy extravagant dinner.
It was just you. You and her.
Just me, my $366 dinner.
No, you took somebody out for their birthday. I didn't know that, and that's very nice.
And here so we were out with a few people, and this guy right here, that's Happy Ken. Our old, he used to tweet all the time until COVID was over and he had to go back to work.
Oh yeah, he was a watcher,
and he's drinking again.
Oh, he's back. I like it. He's always fun. He's always fun to hang out with.
Okay. So I had to show the mind eraser, and let's see what Mikey's up to.
Happy Right Trade Thursday. Mimi, oh my gosh, I love it. Mimi wanted me to tell you about her Ford trade. Played it up for earnings with a long call, but since that failed, I can't even stop laughing. It's an inside joke. We texted with Mikey, and so Jenny auto-corrected it to Mimi one time, and both Mikey and I were so confused. And so
I sent a text. I included Liz and Mikey on it, and I typed like Mikey, da-da-da-da-da-da. And everyone said, "Who the heck is Mimi?" Somehow that Mikey turned to Mimi on my phone. But now Mikey is forever known as Mimi.
I just said that's her pet name for you. I mean, we jumped in. Mikey is super funny. I love our text chains. But okay, so nonetheless, Mimi wanted me to tell you about her Ford trade. Played it up for earnings with a long call. Since that failed and she saw there is a dividend coming up, she sold an in-the-money put for next week to maybe put the stock and collect 4.9%. I love it, Mimi.
I love it, Mimi.
You'll always be Mikey the Polish Warrior, but that was pretty funny.
So Ford, we're short the 12 puts, 15 days. He mentioned dividends coming beforehand. And
move it up. Close that and move it to the 8-day.
Yeah. Okay. So if I take a look here, dividend 4.9%. That's what Mimi's playing for. He's going to get that in addition. We could.
Calling you Mimi.
All right. I'm going to close this. There's still 22 cents. I'll just leave that. Ford's cheap enough. We could have another position. What if? So
sell it.
He just said he was going in the money. Just going in the money here because he'll get the 19 cents, and if he gets put the stock, then he'll get the dividend too. Otherwise, we just get another 30 cents.
Ship it. I don't mind if we have 2 positions in there.
Yeah. Otherwise, we could just buy the stock, We could buy the stock, and after the dividend, sell this call. We get the dividend, we get the 22 cents. We're almost back from our short 12 put that didn't work out.
I prefer, I mean, this is a mental block for me, Jenny. I know you said buy the stock. I would much prefer to get that 30 cents and never get the dividend. If it comes up, if you go in the money in that 8 and you're selling one of them, and it winds up being out of the money, I'm happy as a clam.
And if it's in the money and we take the stock and we get,
then great.
However, I like what
in my mind, I would much prefer the put than the stock.
Yeah, if you can sell. So, okay, here, let's look at this. We've got 15 cents, right? So you're getting $15 on 100 shares. And $15 on 100 shares of stock, if I could get 30 cents every week versus $15 on 100 shares of stock, I'm way better off just selling those puts every couple weeks. Way better.
Correct.
But like you could also get the dividend and sell those calls and get them both. It doesn't matter.
It really doesn't matter. You're right. It doesn't.
Yeah. Mimi, there's nothing wrong with what you're doing.
No, Mimi did the puts.
No, he's trying to put the stock and get the dividend.
He says if he gets put the stock, then he gets the dividend. I'm with Mimi. I'm on team Mimi.
All right, let's clean up some messes, can we?
Oh yeah, we need to.
Okay, so cleaning up some messes. Microsoft mess.
Yeah. Clean it up, Jenny. Clean it up.
All right, we did a diagonal Microsoft, and it did not work out. Microsoft is down $20 on earnings. There's $240 left in this.
Let's close that and put on a new trade. So Microsoft still has a high IVR. We were kind of talking about this a little bit. It's still in play. It's still got a 49 IVR.
I just wanted to see if I know there's 230 left in this, which we're going to put on a new trade. I just wanted to see, we could kind of keep this. We have this 11-day. That,
I mean, you could keep selling until you get to the.
We could keep selling every week and hope Microsoft inches up and we're getting something, and we've got that long. And that would be a separate trade from a new trade that we put on too.
Well, when we get to that long, we can adjust, I think. So yeah, let's do a couple different cleanups. So
here, we could sell that 422 and a half, get 80 cents. And if we creep up
a lot.
I know. So if that's what we have. We have the 422. Oh no, we have the 425.
It's fine though.
Still, then we're getting something. And I could even move it to the 425 because then we have it. Then we have a calendar, but we can keep trying to sell against what we have. And if Microsoft creeps up,
that's a lot more than I expected it to be. Yeah, that's fine.
Yeah, this is from now till Monday.
Yeah, ship it.
Getting 50 something cents. All we're trying to do is chip away at that 240. We don't want that 240 to just evaporate. But if Microsoft comes back a little bit, can't believe it's right back. Oh no, it's not. I was gonna say it's nowhere near back to where it was a couple weeks ago.
No, it's not. Not yet.
Not yet. Okay, and then in addition to that, or what do you want to do? Do you want to go short term or long term?
No, it was pretty interesting. Microsoft, when I was looking at it, it was really tricky to go long term. We were kind of looking at maybe doing a Jade Lizard-esque position, just kind of on the heels of that study yesterday in SPX. When I went to June, it was hard. Open it up and I'll show you what I'm talking about.
Yeah,
go to the 30, 35 or 25, 30. Sell that call spread, $5 wide. I think you're getting $1, right? Yeah, $1.10. And then you can go down and sell something very similar to what we're doing there. It's not bad.
It's the same. It's like $20 wide by $5 wide, right?
It was in 49 days. That's what I think. This is where my conundrum came from, where I was like, let's try the 8-day, and it definitely brings your strikes closer to the at the monies. But I liked it better.
Okay. So
I mean, this is a standalone trade. Is not bad. It's a Jade Lizard-esque position. We're doing a $5 wide on the top. What is this? A $20 wide on the bottom. You're using $1,500 to make $5. That's not bad, Jenny. We should probably just stay here.
I mean, so I lost in Microsoft. This is what I was putting in. Lost in Meta. This is what I was going to put in.
I would press this button. We don't need to play with the shorter term strikes in Microsoft.
So it's not going to cover the $1,000 we lost. It's not going to cover the $1,000 we lost, but I'm hoping that maybe our little calendar can make a little bit of a comeback, and then we'll have this Jade Lizard on, which could hopefully make $250, and then we'll have to chug away, keep like plugging away at our Microsoft.
Yeah, agreed. Ship this. We don't need to play with the other strikes.
So now we have Jade Lizard on in Microsoft, in addition to what's left of our diagonal. I can't believe Microsoft down, Amazon down, Meta down,
Google up.
Google up. I couldn't have been more wrong. And look at Meta down $62.
Yeah, Meta's a full loss.
Well, we didn't do it in the show, but I did it and you did it, and it's a full loss.
A full loss. Microsoft still had some juice in it. This did not.
I know. And here, because it's a bigger product, well,
it's hard. I mean, you can still do $5, $20. That's SPX is massive, and you can always do the $5, $20.
And you've got a 36 rank, you get your break even around the expected move. You could still do this $5, $20.
Right. It's not a bad play. So Microsoft still had about a 50 rank. Meta's is 36.8, still decent, but not as good as Microsoft's. I don't mind it.
No, I don't mind.
We didn't put something on in this account. Go for it. We didn't put Meta on in this account.
So another Jade Lizard. Now again, someone said, why are you calling this a Jade Lizard? It's an Iron Condor. Well, if Liz said, Jenny, put on an Iron Condor in Meta, my strikes would be symmetrical, the same width, the same distance. But if she said, put on an Iron Condor, I'd probably do that $5 wide, $20 wide, because I know I have to buy a put. I can't just sell a naked put in Meta.
It's too expensive. Throw one put in. Throw just a show.
Here. $7,000. It's actually not as bad as I thought it would be.
It's not as bad as I thought it was going to be either, but it's still too much for this smaller account.
Because look at that. Meta's $560. You're using $740. Okay. $7,400 for the 560. And I'm just going to go to SPY and go to June and sell I just want to see. If I sell like the five just to be in the same handle, 595. Well, I guess it is about the same.
It's the same.
Felt like that margin was not bad on Meta.
I mean, it's not. I thought it'd be more expensive. It wasn't. I mean, it's not bad. It's not good, but it's not bad.
When are Tesla's earnings?
I think they had them. Yeah, earnings aren't for a while.
What did we have today? Today we have Reddit.
Let's go to the earnings list. Do you want to? Or do you want to put in the SPX real quick while we're on it?
Oh, yeah. Well, let's do that. And then we'll get to the...
We have to be a little bit careful in this account because we just used 1,500, and we're going to use 1,500. That's a lot. But I like the SPX because it's a 5-day, not a...
Well, then maybe I'll cancel Meta because we're not filled yet.
But you see what I'm saying? You can't... With the 5 days, it's easier for me because it's going to be churn and burn instead of on for 55 days or 45 days.
So I get it. And let's see if we could free up any capital. 2 days ago, we sold this TEM. This one is one of Dan Pizzarelli picks. And it's up $143 in 2 days. So do you want to take that off?
Yeah, sure.
Because that used a lot of buying power, I think. Yeah, 2,000.
Good job.
Okay.
I mean, I don't want to, we're okay with buying power. It's hard with the 45-day trades. $1,500 is a lot to keep on.
You know what? We made $140 in 2 days. Their earnings are coming up. We don't have to deal with earnings. We got $2,000 back.
Yeah, right.
And what else do we have here? We have 41% on this 80 put. I said we take that off.
It's a $90 stock that'll give you back a lot of buying power too.
So UL's up. Are all the airlines up?
But you were 6 cents away from your GTC anyway on that. Did you see it?
Yeah.
How much did that give you back? I didn't see it.
I didn't pay attention. So UL is gone. What do we have in Tesla? Oh, just this $10 wide put spread.
No, leave that, right?
Yeah. I want to see. So American's up 30 cents. American Airlines, it was up to $13.50 and then really fell.
Yeah, it fell right back down. Can I see where Royal Caribbean is too?
Yeah. Did you play that?
No,
$22.
Oh my goodness. I didn't play it.
I didn't either. Royal Caribbean. It's like we picked all the losing diagonals.
I mean, but they were all things that I don't mind being long. It's in full disclosure. I have a hard time at Royal Caribbean in the 200 level, even though it was almost 400.
I know. What else was on the list? Let me go. Let me go. I'm going to have to scroll. I'm going to have to scroll back to see it because we did last call yesterday. We posted for last call. Oh, look at Beth. Oh, look at Beth. And there's Frank's nephew.
Oh, Frank posted this.
Oh, yeah.
Jeff's going to love it. Frank, repost it when we're live from the SIBO. I'm going to pull that thing up in front of him.
And Beth looks so cute. Okay, so Meta, Qualcomm, Chipotle, Ford, Lily.
Caterpillar was up. I think everything was up, but the ones that we did.
Okay, now tonight we have, Apple, Western Digital, Reddit, Rivian. Riot, First Solar, Amgen, XM, Moderna, and Chevron.
Yeah. So we're definitely going to look at Apple. I want to look at Reddit. We have Rivian. I don't think I have Riot anymore, but we used to.
No, but I don't think, Riot moves. Isn't Riot like that pot stock?
I don't think so, is it?
Or is it the crypto?
I don't know, but I know we've traded it before.
And I feel like it's either pot or crypto.
It's Riot Platform, so I'm going to guess crypto.
Yeah.
And the symbol kind of looks like a crypto.
Yeah. I don't know.
51 rank. I just wanted to look at it. I know we have a Rivian position in, don't we? We usually have a Rivian position. I know I do.
I do.
Do we in this account?
And I will say, I've heard Tim Knight multiple times say the Rivian chart looks bullish.
What? The perma bear?
Yeah.
Oh my goodness. We're in it with Tim Knight.
So let's put on something bullish in Rivian. What do we want to put on? Let me see. Let me just see. What do you have in Rivian?
I'm long stock.
You're just long stock?
Yep.
Let's see what I have.
Which means I got put the stock at some point. Maybe
in Rivian. Oh man, I moved mine. I changed my position, and I'm just long in the money calls in the one day, just to get me through earnings, and then I'll adjust it after earnings. Because then it's like, right. It's $150. You're not giving it much extrinsic value. If it goes up on earnings, great. If it comes down, it's very defined risk. But you're not taking advantage of any premium. But there's not a ton of premium to get anyway. You sure? Right. If it doesn't move, you'll lose 20 cents just holding on to that 15. But
out spreads or something like that?
Something like that.
Yeah, Frank's got a name for that, where you're washing extrinsic value in a call spread.
Or does he just call them the ATM trade?
No, I think it's something else. Frank, tweet us what you call this, where you're washing extrinsic value in the spread. That's how we usually do them, but Frank's got like a cute little name for it.
Okay, so what do you think? Just one call? I just want to be bullish with Tim Knight.
Yeah, perfect.
If we wanted some premium, you'd almost have to go a little further out to get anything. Like here, I could get 50 cents on the 15 in the 15 day. That'll more than cover what we paid.
Well, when we bought the 15, right?
Yes, we bought the 15 in the one day.
Yeah, I like it.
So a couple of weeks out and sell the 15 and get 50 cents.
Perfect. We have no extrinsic value in that trade then.
Yeah. There we go.
Okay.
All right. That's Rivian. We do have.
I'm just saying that at the play last night, all the kids, they love it. It's their senior play, so they're all like excited. And so they all start singing in the lobby. One of the teachers like, okay, all right, we don't need a second performance. We'll be back tomorrow night and gets everybody out of there.
And yesterday was just for the parents, right?
Yeah, it was like a dress rehearsal. It wasn't it was their dress rehearsal, but each kid gets 2 tickets if they want to bring somebody to watch. There were stops and starts and lights and different things. So yeah, it was fun. Okay, but let's keep moving forward with this.
All right. Do you want to so we canceled Meta in order to do the SPX Jade Lizard.
Yes, I agree. Let's put it on.
We're going to just follow the study, the mechanics of yesterday's study.
And we decided for this account, we're going to do the $5 wide on the top, $20 wide on the bottom in the 5-day. And we're going to take it off at 25%. And then we're going to put another one on each day.
So I'm going right to around the expected move, 72.40, 72.45.
Correct.
Then I'm going to the downside at the expected move, or
the 80,
nearby. 80-60. $20 wide put spread, $5 wide call spread. We're not quite collecting $5.
I mean, like I said, you can cheat it up, cheat it down. I've been doing this for 2 weeks now, and I can say that a lot of times you're getting about 470. Yeah. I mean, if you want to go to the 85.
I shifted both up a strike.
There you go. Lock it.
485, lock it, ship it. I'll see if we get filled. So $20 wide put spread,
The
$5
hard part
call
is this isn't going to come to you for a fill. I mean, it sometimes does, but it's hard to come to you for a fill with both sides.
I know, but if we drop down, it will, because we've got a $20 wide put spread and a $5 wide call spread.
True.
So it's not like $5 wide to $5 wide. If this market pulls back a couple points, we should fill. It should fill. So we're gonna just the rest of the show for the next 15 minutes. We're just gonna watch it.
Sit in silence. These have been pretty good. The study yesterday, which you can find on, believe YouTube, and or if you go back and watch our live show from yesterday because they are archived, it was really fascinating to me because we landed on this one because there's less of a drawdown. Here we're only risking 1,500. He also did a $10 wide on the top and a $30 wide on the bottom, so you're risking a little bit more. Now you're not collecting the width; you're collecting usually around 750. So, but they're both really good. They were both good.
We should share that video on Twitter. That way, if people missed it, we'll share it on Twitter.
Oh, yeah.
Yeah. Okay, and speaking of, let's go back into Twitter. I'm going to go top down because we do have a lot of tweets coming in.
In and out call vertical. Yeah. Thank you.
For parity. So he's selling it, putting it on for parity. Basically, parity is
watching extrinsic value.
Like we were in Rivian. And in Rivian, if you buy this 15 call for $1.50, filled.
Cha-ching. I don't know.
15 plus $1.50 is $16.50. It's trading $16.25. If we wanted to put it on for parity, we'd have to pay $1.25. In order to pay $1.25, we'd have to buy this and sell that.
You're watching extrinsic value. You're getting it so there's no you don't need a movement in the stock.
This is parity, $1.25. 15 plus $1.25 is $16.25, exactly where the stock is. If I paid $1.50 for it, then I paid 25 cents over parity. Parity is just where it is with the stock.
Yes. But so the other way to say it is just don't pay any extrinsic value. Sell something for the exact same extrinsic value.
All right. Mimi is already up 36% on the in the money forward put. So she wanted to know if he recommends closing it out and meeting her for some mind erasers. Hey, Mikey, I'm telling you, those mind erasers were not bad. And I felt great when I woke up this morning.
Yes.
I only had one, but it wasn't bad.
It looks delicious. With a name like that, I expected you to be like Malort in the bottom. You know what I mean?
I know. They need to change the name of that.
Yeah, I think more people would drink it if it had a different name.
And I didn't even know if I said to the server, I said, ask the bartender if they know how to make a mind eraser. She came right back with 2 mind erasers.
So you didn't even tell them the ingredients?
No.
Well, people do have things called the internet nowadays where bartenders in the past would be like, what do you want?
It was good. All right, Florida 7, the cement mixer. It's a shot that uses a chemical reaction between Irish cream and lime juice, just like I was talking about yesterday, curdling, using a cream and a lime juice to curdle it. A curdled texture in the mouth, stimulating cement. It's made by taking 3/4 to 1.5 ounce Irish cream, followed by 1/2 to 3 ounce of lime juice, then shaking your head.
No! Florida 7 coming in hot with the cement mixer. I love it.
I know. Oh my gosh. Punish Pixels. Happy Red Shirt Thursday, ladies. As the rest of the world goes into Labor Day holiday tomorrow. And markets.
Oh, he's in Singapore, right?
Oh, okay. Labor Day holiday tomorrow, and markets are ATH.
All-time highs. Got it. Check. Keep going.
Let us do our downside crab puts on ES or SPX. Okay. Here he goes. ES or SPX.
Okay, hold on. You gotta go to Don Duke, and then we'll go to Punch Pixels because I need you to read it.
I'm not gonna sing.
Come on.
All right, lovely ladies. Liz, you got to sing too because I'm a terrible singer.
Okay, I want to see if you have the melody to it. Hold
No,
on.
I do. If you change your mind, I'm the first in line.
Honey, I'm still free. Take a bear's chance on NVIDIA. If you need me, let me know. Gonna be around.
If you got no place to go, if you're feeling down.
So we just changed. Take a bearish chance on NVIDIA. Love it.
I like it, Don Duke. I like it. We're gonna go to the bearish chance on NVIDIA, and then we're gonna go to Punish Pixels. Crab. 2 bearish trades in a row.
Dun dun dun. I mean, markets ATH.
Whoa, look at this. Down $8.
Yeah. You didn't see that?
No.
But I mean, when you put it into perspective, when you look at that chart, it's down $8. I get it, but it's right back to where it was, what, Monday?
Yeah. It's not. So NVIDIA had a run and now it's come back down. But he's wants a bearish trade on. Let's take a look. Let's take a look at how much a diagonal what do we have?
I'm sure we're bullish in it.
Well, yeah, looks like it. 210, 220. Ooh, 210, 220 call diagonal.
It's not that bad though.
It was $9 and now it's $6. We put it on 2 days ago.
No, but I'm saying it's still worth $6. It's not that bad. Sell another.
Yeah, we got to sell something else.
Yeah.
I'm going to do almost what we did in Microsoft. Oh, but you can't get anything. Because we have our long through earnings.
Make it a calendar.
Yeah, I'm going to try to chip away. Even if I take a little bit of risk here. So get 80 cents in 8 days?
Sure.
I don't know. No, there's too much. There's a lot left in ours because it's going through earnings.
Which I like having it through earnings. This is one of those where when I look at this, I don't mind. It's an earnings setup diagonal. Sorry, my phone's blown up.
But I want to, I agree with chipping away at the cost of this. 8 days will get us to next Friday. Let's pick a call for next Friday.
So let's kind of work backwards. We have the 220 long. The safest way would be like to get 48 cents for the 220 long, right?
Sure.
That's your safe bet. Now, every strike that she goes down, meaning 217, 215, 212, 210, you're getting more extrinsic value, but then you have a spread in there that there's some risk.
Mm-hmm.
If NVIDIA pops up too far too fast in the next 8 days.
Yeah, but we wouldn't really lose because that earnings option is going to maintain a lot of value.
Yeah, I agree. That's why when I looked at this, I was like, we're not in that bad a shape.
So let's go to the, what do you think? Next Friday? Let's split the difference. 60 cents on the 217.
Great. You're getting something.
We're getting something.
We've got that through earnings. Perfect.
Okay, so that's not quite a bearish trade in NVIDIA, but I'm glad you brought it to our attention.
Yeah, definitely not a bearish trade in NVIDIA.
Now, let's read me the Punish Pixels ES trade.
Hold on, I got to get to it because I'm having struggling with my Twitter right now. Hold on. ES Punish Pixels trade.
May what? May the 4th be with you. Coming up right around the corner. Josh's birthday.
I have to go to another second computer.
Here, I got it.
I cannot log into our account right now.
All right. May 8th, right? 8 May. Sell 2 7100. Sell 2 by 1 7100 7050. And sell 2 by 1 7100 7050 in the May 8th. May 8th. 7100 7050. Okay. So sell 2 by 1. So we're taking in, $41 credit. So it's half of that, like $2,000.
I mean, we're looking at this. We probably won't press the button because we usually will do it in MES.
Well, okay, then buy 1 7150 on May 11th. 7150 on May 11th. So it's a $10 debit, only $5 debit. This isn't bad. This isn't using a lot of buying power because we're only paying what we pay for it because it's like a butterfly,
Yeah, because it's symmetrical. So it's 7050, 7100, 7150.
Yeah.
All you can do is pay for it.
Yeah, $500.
Sure.
And we risked way more than that on a bunch of earning diagonals.
Yes, you did.
All right, 1070, so $500. 7150 in the May 11th, short 27100s in the May 8th, and long 17050. So it 7050, 7100, it's a symmetrical butterfly. We're paying $500 for it.
Yeah. Yeah, that sounds good.
Punish pixels. Let's see if you can go 5 for 5.
Yeah, and then go to bed because it's late there.
Yeah. Yeah. All right, it's 10:48. We've got a little bit of time. I want to make sure we got to everyone on Twitter.
Twitter was funny today between Mimi, the cement mixer.
Bob on Fire's back.
Bob on Fire's back. It's a great day.
Oh, earnings. Apple.
We did Rivian. Oh yeah, we have to look at Apple. I do want to look at Reddit. I don't know if we're going to put anything in, but sometimes we look at Reddit.
I mean, we've been doing these diagonals. We've been wrong every time. What's the chance we're going to be wrong again?
50-50. Let's do it. How much is it?
43.40. I'm going to go to like 527, $10 wide. That's not good.
No, it's not good.
That's not good. That's not good, Apple. That's not good. And that's Friday, right?
Mm-hmm. Well, here's the problem. As the weeks go, or as the days of the week go on, it's going to get closer and closer to 50% the week when you're selling is less. Ooh, we're filled in that.
We're filled on the ES. Okay, so $8 expected move. Everything has been, I don't want to say everything, but we've had a lot of, beyond the expected moves.
We have.
And I'm going to get crazy, Liz. I'm going to get absolutely crazy. And at $255, I'm buying the at the money straddle.
In Apple?
That's what I'm going to do today.
Sure, go for it.
And then I'm going to sell it at $830.
Ladies and gentlemen, she's just saying she's not going to do it right now. She's going to do that in her own account.
At $255 and buy a straddle, and at $830 tomorrow, I'm going to sell it.
When I said sure, go for it, I meant in her account, not this account. Sure, go for it.
I don't know what you want to do in Apple.
The diagonal didn't make any sense. I honestly, Jenny, I don't know. I mean,
I don't know either.
I'm not. So it's interesting. Microsoft, I was bullish. Meta, I was actually bullish. We didn't do Google because we weren't necessarily bullish. I don't know what I am here in Apple. There has been a lot of things that are outside the expected move. The only thing that I think that wasn't was Microsoft. I think Microsoft behaved itself.
Yeah, Microsoft is within.
Yeah, it's within the expected move.
I wonder if there's any, I'm just curious if we go to unusual activity in the equity options and if there's like what is going on today in Apple.
I don't see Apple on there.
We see a lot of NVIDIA and a lot of NVIDIA.
I hate to say that. I hate to keep correcting you. It's not unusual activity because it's most active.
Most active.
It's a totally different skill set.
I think I just have I can't stop for listening to the shadow traders for so many years, and they always were looking at unusual activity. It's just I can't get it out of my head.
And there is some way to get unusual options activity, but this is just most active.
Most active.
But I do not see. There's HIMS on there.
HIMS puts. Must
and calls. Yeah, and calls.
So you've got 8,400. This is a spread or a roll. May to June roll.
And it's a May to June. It's a May to June rolling.
Yeah. Isn't it weird? There's no Apple on here. Updated 4:30 at 10:51. So it's updated.
Yeah, it's updated.
Weird.
Mm-hmm.
No Apple. Maybe everyone's waiting until $255 to buy the straddle.
I bet they are, Jenny. I bet they are.
I did. All right. We didn't look at Reddit yet. Reddit, 145.
Look at that.
I know. But I when Reddit IPO'd at like 40, 50, I loved trading it. Then it just got too high to trade.
Well, in the 200 level, it's way too high. 45 is not that bad.
I want to see with the Bob on Fire. I'm going to go to Jan with Bob on Fire. I want to see how far, because that's what he did in Google.
Yeah.
38.
200. Yeah, there you go.
So $19. Yeah, you're like at the 100 level. That's not bad.
It's using quite a bit of capital, but it's not bad. So take a look at the 100 level on the chart. We're not going to press the button because it's too capital intensive for this.
No, this is why I like the Bob on Fire.
Well, and because it smooths out your losses. So you're so far out in time that it smooths out your losses. Could Reddit be 100 at the before the year is out? Sure. But the chances of it getting there are very slim, and it's going to take a little bit longer.
And let's talk about like risk here. So let's say I do this trade and I have to get long 200 shares at 100 in January, and Reddit goes all the way back down to its IPO price of 50. So each 100 lot is out $5,000. So if it goes all the way back to 50, I'm out 10 grand. The chance of that happening, the chance of it going back to 50 in January is 2%.
2%, right? Can you, I want to keep an eye on the time. Okay, we have 1 minute. Can you stay in this cycle? Clear this out. We're not going to put this in here.
Yeah.
What is the long-term buffer? Buy the 45 put and sell the 100. You're getting $20. And then, there's not nearly as much profit potential. It's not bad. And it's one put.
Oh, right, because then it's only 4,000. It's only like 3,700.
Mm-hmm.
But you know what else isn't bad? It's just here's $1,000, 100 put. You know what I mean? Like here's $1,000, 100 put.
I know.
Takes your break even down to 88.50.
Yeah, I know what you mean.
It takes your break even to 88.50, and you're getting $1,000 using 2,000, so you're getting a 50% return on capital in 260 days.
Yeah, it's not bad. I mean, we do like the fancy dancy trades. I do. I love them. Because we're complex options traders, but sometimes the simplest is the easiest. It's pretty funny. You're like, how about this one?
I don't know. So we're out of time. We are out of time. I don't want to run into the boys' time.
Oh, yeah. They're going to be live from the SIBO. I'm very curious to see how they like the pod.
Oh, the new set is amazing over there. They're going to love it.
I'm trying to get it to stick. What are we calling it?
The pod. I don't mind. I'll call it whatever you tell me to call it. It's a beautiful new set.
It is a beautiful new set.
Okay, we are out of time. Thank you, everybody, for tuning in today. We'll be back tomorrow.
Everybody out there, remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
See you tomorrow, everybody.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Baby, your love is too good. 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 Baby, your love is too
up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name's Mike. I'm here with Jamal. And we are live from the new set on the SIBO floor. And I got to say, they did a great job with this in a quick turnaround.
It's pretty dope. It's pretty clean. It's a nice little set here. New set, same floor though. Same floor.
Yep. Things are happening behind us. Things are happening in the markets. Hopefully had some good earnings trades. Last night we had Microsoft, we had Amazon, we had Meta, we had Google, and Microsoft brought a tear to my eye yesterday. I was telling Jamal, I was rolling around in my chair in the office, my hands up, celebrating when it was at 440. And then I heard Gus say, "Oh no, oh no." And I said, "What do you mean, oh no?"
Oh, that's never good when you hear oh no.
Rolled back very quickly and saw that it was down to flat and then down 10 points. And now we're down 20 points. But there are some other upside trades. Qualcomm leading the way here, up $25, 16%.
Amazing.
And that was one of those where I'm actually really glad that we saw that trade in the YouTube chat. Someone brought up the 170 calendar, and that was like a $400 winner overnight. Absolute smash. But I think we should have, it's up big, but Intel had a big rally and Qualcomm had a sympathy rally off that. And Qualcomm is moving just as aggressively as Intel did. So sometimes you see that, like similar products that are in the same space. One reports before the other. You see a big move, you see a sympathy move, and then you see the same kind of result with a big move after that. So something to think about for the future with other earnings trades. Like airlines are a great example. If Southwest Airlines crashes, maybe you don't place a massive bullish position in United or something like that.
Yeah, that's been the play, man. We've seen it across the board, honestly. When you look at Schwab and Robinhood, both had down days. I know somebody asked us about a hood trade prior to earnings, and we talked to them about maybe holding off on getting short the put at the time when I think stock was like closer to 80. It was like, you might want to wait on that one. Schwab went down on earnings. Maybe hood might do the same thing. Sure enough, that happened. The Qualcomm thing, Texan is the first one that I can think of. Texan on earnings, moonshot, took off. And it was like, well, I think Intel's going to be next. And Intel, same thing. It's like, well, Qualcomm is probably going to end up doing the same type thing. Sure enough, it's been the deal. Look, these things work until they don't. Micron has obviously done similar things. You wonder if ABGO is going to be that around. I feel like it helps if it's within a couple of days within each other.
Yeah.
A week or so or 2 weeks later, who knows how it's going to play out. But that's definitely what we've seen here with a lot of these names.
Yeah, for sure. Lots of tech names to the upside. We're looking at the NASDAQ 100 watch list right now. Qualcomm leading the way. Google is up 7%. They had a big blowout move to the upside too. Pretty big relative to expectation there. And MicroStrategy catching a bid here with Bitcoin ripping higher just a little bit, but MicroStrategy outperforming in a big way. AMD up 3%, which is really interesting because if you look at the downside moves, NVIDIA is on the other side of that coin, down 4%. Meta, of course, selling off aggressively. I think they have a lot of issues with lawsuits and whatnot. I think that's obviously hindering this movement. But yeah, sad Microsoft move. I did make an adjustment. We had these positions here. We got the 500 strike calendar spread. That's still nice. Long term, though, I'm not going to close that. And then we had this Super Bowl, the 380, 370 put spread to finance the 425 call. And then I had the 1 day 450 call that became worthless overnight. And I just rolled into the 8 day 425. So I moved down from the 450 to the 425, picked up $200, and that expires next Friday. So just continuing to chip away at cost basis here on this position, the Super Bowl. And as long as we keep collecting, this will probably be my last move actually, because these options expire in 15 days. So 8 days is kind of the last stand. I don't want to go into a vertical spread here with the 425 call, but if we can get a rally back to 425, I'll just close these positions and leave the 500 strike calendar spread on for the future.
Yeah, I just have the call spread. I haven't done anything today. I still have the call spread in May, 425, similar. Well, you have the 425 just call, but I have the 425, 440 call spread. I'm not changing anything right now. Oh, I just sold out of my Apple calendar.
Nice.
My Apple diagonal 270, 285. Just getting out of it ahead of earnings. Why not? I made $300 on that. I still have the Microsoft call spread in May. I am seriously considering doing the same trade in June, which was the Super Bowl. If it drops below 400, I'll put it on. For the time being, I'm not doing anything. Same thing with Meta. I'm considering doing a Super Bowl in there as well. Yeah, I know it doesn't seem to line up the way is that credit? For the I didn't think so. I was looking earlier and I basically would have to do the 400, 390 put spread. So that's probably what I'll do, but it has to be below 400 before I do it. Meta, same deal. If it gets below 600, I might get aggressive. But in the meantime, not doing anything. In fact, trying to take off risk. And I say trying because things are working, but I'm trying to be smart about it. I'm trying to take off risk, at least as far as things that I'm paying for. As far as things where I'm collecting, I'm actually keeping those on. Whether it's EWI, which is basically on the money, or obviously the year-long strangle is a year long for a reason, not taking that off. So anything that I'm like short ball, I'm going to keep on, but anything that I'm paying, trying to get out of it. A little bit directional. I've had some directional stuff on for a while that I've talked about. I'm going to try and get out of them.
I like it. And yeah, this was the exact same trade we put on 2 months ago. The 380, 370 put spread to finance the 425, 440 call spread. We put it on for like a 60-cent credit. And to Jamal's point, if we get a move below 400, this will go from a debit to a credit because you'll get more value on this 380, 370 put spread. Right now, if you wanted to put it on, you'd have to do something like this, like a 400, 390, or maybe even a 395, 385 for a tiny credit. But the whole point of this is just having this call spread on for free. So if you get the rally, you don't care about this credit. The credit's nice to keep this neutral profitability in the middle, but it's all about the upside move on this 15-point wide call spread. So yeah, I think I'll wait on that too, but happy to get back into the same kind of structure in June, especially after this 5% sell-off here in Microsoft.
We had some macro stuff this morning too. PCE, I think, came out this morning, came higher. No surprise. Inflation is in our system. You got to wonder. I mean, look, PCE came out, that was higher. I think GDP was lower. That makes sense. And Bank of England and ECB both left rates the same. I think at some point they're talking for Bank of England, possible rate hikes. From what I saw yesterday, our 2-year yield was like 3.95%. That indicates a potential rate hike. But we got a new guy coming in. What's going to happen? It's a wild time. I mean, it really is. You just don't know where rates are going to go. And obviously inflation is higher with oil continuing to rise. I'm shocked that the market is at 7,200 and keeps going higher. Like, I really am. I'm playing it that way, but I am shocked. This is part of the reason why this is one of those times where look, I love to see markets go higher. I am a bullish person in general, but something's starting to not make that much sense. And I just kind of want to try to not have too many biases on as things are starting to not make sense, I guess.
Yeah. And really, it feels like a reluctant rally here. I mean, you have products that are kind of chopping around, but you have these products, Qualcomm, Caterpillar, Google, John Deere, AbbVie, like these products are lifting the E-minis and NASDAQ up today almost single-handedly because you have a bunch of other products that are moving to the downside, but just not nearly as much. So the upside moves in these products like Qualcomm and Caterpillar keeping this market afloat, but you can see like the rallies are kind of being sold here, to your point, and I don't think we're out of the woods just yet.
Yeah.
Other than the Microsoft adjustment, again, just move the 450 1-day call down to the 425 8-day to recalendarize that long option at 425 2 weeks out. And then Qualcomm closed the 170 calendar. It was a long July, short May. It was a $400 winner. Love that from the YouTube chat. Hopefully whoever submitted that to us is in the chat today. But I did enter a new SPX trade. So I don't have any June positions in SPX right now. So I just went with a cookie cutter setup. I've got a bunch of downside butterflies. So I basically have no risk on this iron condor to the downside. And to the upside, if you see, I chose the 7,400 strike as my short call. That's where my straddle is in my micro mini position. So this iron condor is perfectly synergizes with the rest of my portfolio because again, I've got 2 downside butterflies. One of them expires today actually, so I'll only have 1 downside butterfly on, but that will completely offset any risk I have to the downside here. I also have a 7,100 short call spread on, so I'm leaning a little bearish there with that iron condor. And then again, the 7,400 short strike up here,
I will make a ton of capital on my MES position if we end up going 200 points higher. So when you think of this individual iron condor, there's of course risk with it. But when you think about the other positions that I have, there is a lot of risk offset with the other holdings that I've got in SPX and MES.
Yeah, you laid that in well. Got a lot going on there.
Yeah, for sure. Apple earnings after the close today.
What do we think?
I don't know.
Wait, yesterday we had let's see. So Google was up, and Amazon was up. I don't know if it's down now. So Amazon, Microsoft, and Meta all kind of sold off, and Google was the only one that ended up being up.
Amazon opened.
It was open higher.
270.
Yeah, open all-time highs.
$20.
Big fade.
I guess the question is, how do you think Apple will move relative to these others, in terms of like a correlation move?
I don't know.
Apple's up a little bit today, so maybe Apple and Google are in the same boat. Maybe you get an upside move in Apple.
I feel, even though I took that, that diagonal off, I feel like it might go up, but I just wanted to have nothing on.
We could do something small. I mean, $8 expected move that brings us to 280. Could do a 280 long Monday, short the 1 day for 40 cents. That's crazy.
That is crazy.
Maybe I'll push this a little bit further out. May 8th. Yeah.
I know those 280s seem a little bid, honestly, for $2.
Yeah.
That seems a little bid.
I think I'm going to do this. $1.20. I'm going to buy next Friday and sell the 1 day, 280 calendar.
I like that.
$120, really cheap. And if we look at the curve analysis, we can take a look at this. 125. Come on. Okay,
Next
125.
Friday. Oh, yeah.
Yeah, so we look at this position, and then we kick it to tomorrow, look at the P&L Theo, and then we got to crush this 8-day implied volatility. You can see these back months are sitting around 30%. The 8 days at 40%. So let's bring this down to 30% and bring this kind of flat to where we would expect this to go. This would bring us to about $170 profit if we get a move to 180 tomorrow or 280 tomorrow. So
all-time high is 288.62.
Yeah. So yeah, just real small. I don't feel like I need to take too much substantial risk here. To your point, I mean, if we get a downside move in Apple, maybe that shocks the market. We get a downside move everywhere else. But just playing the game, keeping it, staying involved with a small debit. And
yeah, that's probably how it's going to happen, especially if I take these shorts that I have off today.
Yeah. But yeah, nice thing is with the 1 day short premium, you have tons of implied volatility value there. Collecting $2 against your $3 debit, that's 67% of the value in terms of cost basis reduction with the sale of the short option against your long. So I like that. And it just gives you a nice wide range to be successful with that trade because you just need your 280 call to be worth $125 or more in extrinsic value.
Gotta love it.
Silver having a nice move to the upside. No adjustments to be had there.
None.
Micro minis, loving this.
I know I want to reduce risk in that silver, but there's really nothing to do. I mean, it's just printing. I'm just, it is what it is.
Yeah, our break even here on this position collected $2,000 in credit. So our break even's at 67. We're just sitting at the bottom of it with all the upside potential here. I want to be leaning long in there anyways.
IVR is down to 30. So I don't know. I don't know if this is going to end up being a July roll.
Mm-hmm.
Been a great trade though, man.
We were talking about our Costco calendar. So we both have the 1100 strike Costco calendar on. Long June, short May. This trade is working out nicely. We're up $150 right now. But we were talking about this earlier. Like if the market does crash or sells off a little bit with the heightened inflation, like Costco's a position I would want to be long in, if that makes sense. Like if the tech stocks are selling off, maybe you get a bid in Costco, Walmart, Target, like those kind of ticker symbols. And we still have this out, which is really nice. So we've got the short option, the 22-day. Earnings are in the 29-day. So just rolling 1 week out, we can collect a ton of premium here, and we can manipulate this completely. So if we look at the 1100 strike, let's say we want to buy that back for $1.65 and move it out 1 week, we can move it from the 1100 to something significantly higher, given the fact that I can move just to the 1100 for a $3 credit. So plenty of flexibility there. We'll see what happens when the time comes, but we'd love to see a continued rally in Costco up to 1100. Maybe we get out pre-earnings.
Yeah, I mean, there's definitely a possible ebb and flow in that type of name in this market, and I think that's that's a long worth having for the time being. Like I said, I'm getting out of the other longs, mostly some of the tech stuff. They've worked out well. Trying not to be too greedy, but I do want to keep that on for sure.
Yeah. Speaking of greed, 6J Japanese yen.
Yeah, how about it?
Massive rally here. I feel like this is a tough position because I'm in the 8-day with the long option, but we're seeing a huge move to the upside today. This option is worthless, and I'm making back $140 today. I think I'm just going to close this because if we get any kind of chop around here or any sell-off, this option just goes right back to being worthless. Like, this is all just momentum premium, and it's only 8 days to go. So I don't
know, man. I don't want to be that guy to talk you out of it. But I was seeing this morning, they're talking about like they said for a while they wanted to do something drastic. This could be the beginning of a 2-day move. You never know.
Well, what I could do is close out of this long 8-day, get into a long 36-day, and sell an 8-day against it, because both of these settle to the M contract. So
I say this because I was looking at the USD JPY pair and Tasty FX, and yeah, that's obviously down like 2%. I was thinking about buying it, but I was like, I don't know. I don't think I want to buy that thing.
Yeah,
because I think it could get hit more. You know, and these, you know how it is with these unwinds, they get nasty.
Yeah. You're not wrong. You're not wrong.
Another interesting reason with the yen being up the way that it is, and we saw a big move like that. Wasn't that part of that unwind?
Yeah, the Japanese yen unwind. Yeah. But yeah, I got a message from Glenn this morning to not look at my FX account, so I immediately looked, obviously. But yeah, the US dollar getting hammered across the board here into these big moves here. But yeah, I think what I'll do is I'll just get into, I just sold out of the 8-day 65 just to get that value. I think what I'll do here is something like this, maybe a 65 half diagonal spread. If we get into this, it's a $400 debit or $338 debit here. But if we get the rally up to 6.5, this can be a $400 or $500 winner. This is analyzing it for tomorrow. So I kind of like this as a cheap way to stay engaged here. And if we do get that blowout move to the upside, we'll make some nice value there.
So you end up doing what?
So I bought the June 65 call, and I'm selling the 655 in the 8-day. So just slightly higher, just diagonalizing it, but shifting that 8-day really sensitive long premium to more longer term premium here. For $350. There it is, got filled. So we'll do that, and we'll see what happens. But this long Japanese yen position will offset some of those FX losses that I'm taking right now. It's very sad to see this dollar franc position just does not want to work for me. And we can take a look at the velocity here of the move to the downside. Not great. Not great at all.
Yeah, it's big move in the dollar today.
It's the way the cookie crumbles sometimes.
Happens. Yeah. I'll tell you though, the dollar has been, I mean, there's been big moves in both directions. So yeah. I feel like you'll be possibly positive at some point again because the way this thing's moving.
Yeah. But yeah, big move in the currency space. I mean, look at these moves. 2% to the downside in the dollar yen. Almost a percentage point to the upside in the pound dollar. Down a percentage point in the dollar franc. Up on the New Zealand dollar 1%. And then popular non-USD. These are big moves. The pound yen down 1.6%. The euro yen down 1.8%. The Aussie dollar yen down 1.5%. So you're just getting a big macro move in the yen relative to counterpart currencies. So crazy.
It starts in the currencies, Mikey. It starts in the currencies.
Scary.
Yeah.
Scary. But yeah, that's about it for this portfolio. I bought this MNG contract yesterday. It's working out nicely, up 76 cents. I'll probably just hold on to this, see if we get a bigger move than what we're seeing here. But target would be just like $200, something like that. If we get above 3 in this contract, that'd be great. But it's a small contract, and I can hold this risk for however long we need to.
Yeah, there's some bucket list things I want to do right now as far as trades. If this oil situation keeps going, again, I am currently short a call spread that's in the money, the 98 100 call spread, which is trying to be trying to be patient on it. But if this thing kind of keeps going and stays elevated, that's why I'm looking at those the wheat and the corns of the world. I mean, it seems to be a somewhat of a thing again. Obviously, with they're being sold off today, big. But I don't know. It's kind of interesting. Nat gas, that one, like the idea of a call spread nat gas seems cheap. Again, I got all these different things I want to do, but that's why I'm like, I'm gonna try and take risk off here and just look out the landscape and see what looks good. But there's a lot of different things you can do right now, man.
Yeah, it feels like, to your point, it feels like we had this like really kind of concentrated market, not much is moving, but now I feel like there's these big moves in either direction for a lot of different spaces, and you have a lot of opportunity if you want to take a stance now.
Currencies, commodities, tech. I mean, it's everywhere.
Everything. If you want to join us on the YouTube channel, we're streaming live there. Just pop over to Tasty Live. You'll see this video front and center. You can throw in your trade ideas and questions along the right-hand side chat, like that person did for Qualcomm yesterday. Gave us a nice big win for earnings. But yeah, let's see what the people have for us today.
You need Robert to come in and call all the new stuff fake. That's the chat. That's great. Hey guys, I have a Microsoft call calendar, May, June, 440, 460. So you, okay. The 440 in May and the 460 in June? Or is it like you're long a diagonal, the 440 in June and short 460 in May? Not sure. They paid $12.20 for it. That seems about right. It's a $20 spread.
Yeah. That'll be this.
Anything I can do to adjust?
Yeah, I mean, with diagonal spreads, all you can really do is just move the call down. So you can buy back the 460, sell the 440, pick up 60 cents in premium. If you get a rally up to 440, this adjustment's not going to hurt you because your long option is going to appreciate more than your short. But that's all you can really do. That's what I did here. I just moved my 450 call that was worthless down to the 425 and just re-calendarized the position 8 days out. But yeah, that's the adjustment to make. And the nice thing is, if you make that adjustment, you roll down to the 440, and then let's say Microsoft reverses this move and it's up to 425 or whatever in a couple weeks, you could then buy back the 440 15 days out. You could move it to the end of May and move it up to the 450, something like that, and just be offensive with that adjustment because you still have a lot of time between May and June. So if you're long the 440, short the 460, I think the adjustment to be made is just rolling down the 460 to the 440 and calendarize it.
Yeah, that's kind of weird. Somebody's asking about the SPY June 12th, 43 day. The IVX on that, saying 10.5. That is kind of weird. I mean, that's probably I don't know where we pull IVXs from. Is that a data feed type deal? The IVX is definitely weird. It's not a holiday week or anything like that. That is a trading day. It's also my birthday.
Hey.
Yeah, maybe that's why vol is low. But I mean, when you look at the expected move seems to be in line. So I don't know. I would place that implied vol probably like 18. It's probably what it should be saying.
Yeah.
I mean, the markets seem fine. Nothing seems crazy. So yeah, I'm not sure about that. Could be a data feed thing. But again, the expected move looks right.
Yeah, expected move is right in line with what you'd expect. 26 to 29 to 31. But yeah, it's definitely a data thing. Premium is there.
A lot of people remarking on how sharp we look. Again, thanks to the camera work. I mean, it's a nice little set. You guys should see it. It's really cool.
Very sick. Very sick.
Let's see what else we got. What's in the box?
What's in the box?
What's in the box? Hi, Mike. You put on a SPX neutral iron condor today. What do you think about a 50-point wide iron condor? Oh, geez. Okay. This would all be in June, but short the 6,700, 6,650 put spread. I mean, it looks to be right. I mean, what are you collecting? $14? $14. That's close to 130 with those strikes. You got the downside, right?
Yeah.
And then upside 7,500, 7,550. Should be about $14 and change.
Yeah. Yeah, I think it's fine. 6,700, 6,600. You're picking up $4 here for that put spread. You're picking up a lot more in the call spread, which is nice. 32.90, 23.80. And this is a reflection of the put skew. You can see it here. 66.50 trading for $4,200. The 75.50 only trading for $23.80. So the market's still pricing in downside put skew here, especially in these near-term options. As you go further out to December, January, February of next year, you'll start to see the call skew come in more equivalent to the put side because it's pricing in interest rates into that call side. So as it stands, you're picking up a lot more value on the call side than the put side. I kind of like that too, because that tells you that if the market does sell off, you'll make more on this iron condor because you'll get a ton of value out of your call spread. Where if the market rallies, you're not going to make as much on this put spread because it's worth less than the call spread, if that makes sense. So yeah, I think it's totally fine.
I like that.
And regardless, the setup is the classic: collect 1/3 the width, risk 2/3, pops right there, and you're outside of the expected move in the cycle on both sides. So yeah, I think it's totally fine. I just chose my specific strikes because it overlaps with my existing positions at 7,400 and then butterflies to the downside. So yeah, I like it.
I like that. I kind of want to do one. I'm going to do one of those too. I don't know if I'll do 50. I might do like 25 wide.
In June?
Yeah, in June. I suppose.
What are you looking at?
I'm looking at those same upside strikes and maybe 6,800, 6,775. Looking at that. A little tighter.
Yep.
Something like that.
7,500, 7,525.
Yep.
6,800, 6,775.
Yep. I'm going to try for 850.
Yeah.
See what happens.
Yeah, my iron condor, I forgot to mention, is more like a chicken iron condor because it's inside the expected move on the upside here. So I picked up $900, risking 1,100. So it's not the same like 1/3 the width. It's more tight. But again, I'm able to be more aggressive because I have offsetting positions on both of those sides there. So just something to call out.
Another diagonal in Microsoft. June 450, May 1st, 470 diagonal, $11 debit. What can I do? Really much.
Yeah, 470 is worthless. So you can buy back the 470 and same story. I mean, you could sell the 15-day 450, pick up 50 cents in credit, and really like you need a rally here regardless in Microsoft. But if the debit was it $11?
$11, yeah.
Yeah. So this option that's 15 points out of the money is trading for $11. So if you were to get a rally in Microsoft, you really need a rally to like 435 or even maybe 430. If you get that expected move to the upside, this 450 call will probably be trading for $11 or somewhere around there, just because you'll have a stock price that's more expensive than the current 400 price. And as it stands, the 400 relative to the 415 is trading for your debit paid. So I would imagine if you get a reversal of this move here, 23 points over the next couple weeks, you get up to 430, you'll probably be at a scratch. But yeah, that's the adjustment. Same story. Roll the diagonal down to a calendar spread, pick up a little bit of premium, and you could always roll from the 15-day to the end of May if you get that move quickly to kind of give yourself more offense on that trade.
Yeah, and somebody had a comment right below it, and they're right. I mean, essentially, the idea of these diagonals. I mean, a lot of times, the price might not go your way, but the idea, especially if you're out in June, I mean, you have a chance at a free call. Basically, yeah. Well, not a free call, sorry, but just a one leg call that maybe bounces back.
Yeah. Yeah, what was that stock? There was some stock where I had a naked call that was literally. Oh no, it was SPX.
Yeah, it was SPX.
It was SPX. Yeah. So same story. Like, I sold out of this call here. I had a 7,300 call in April 30th. I had a short call against it that was April 15th. So the calendar spread was like a $1,200 calendar spread. Then the market crashed. I bought back the 7,300 short call in April, and this call was literally worthless. It was trading for like 20, 30 cents. And then I caught the move to the upside because I just had it on. You catch that move to the upside in SPX, and I was able to sell out of this for a nice winner. So yeah, here's all the adjustments here. So that's the nice thing. It sucks when you have a losing diagonal spread on, but you've already reduced basis by selling that 470 call against it or any kind of premium against it in the near term cycle. And now you have this free call on to where if you get a move to the upside, you'll gain back all that value. You have asymmetry to the upside now. In Microsoft, we need a move. I'm in there with you, but that's the importance of selling something against a long option. If you didn't sell that option against the call, you have a lot more losses on your hands for sure.
Mm-hmm.
Wow, micro natty gas ripping here.
Is it?
Yeah.
Damn it.
Yeah. In the last like 30 minutes, look at that.
What's going on?
270.
Oh my God. It's like leaping.
I don't know what's going on, but
oh my God.
we'll
I
take
knew
it.
it.
We'll take it.
Oh, damn it. Can I still get in? Is it too
Sure.
late?
The water's warm.
Come out to the coast. We'll get together, have a few laughs.
Yeah.
Jeez. Oh, man. Yeah, maybe. You know what? I didn't even realize there was micro corn and micro wheat futures as well. I didn't realize that. It's true. You can buy those too. I'm probably. I like the extra juice, man. You know, I do. If those of you who are Heat fans out there, the movie Heat, you remember Val Kilmer's character, and he's talking about his lady, and he's like, "For me, man, the sun rises and sets with her. For me, that's options, man." And so I'd rather put on an option call spread or something. You know what I mean?
Fair.
Instead of the micro, but the micro is a good
good
thing. Yeah, rate hike sounded like a conspiracy a year or two ago. It sure did. It is definitely on the table now. And truthfully, in other normal times, it's something that obviously should happen. But I don't know. Like they said, stagflation is a real thing right now. It's tough, especially after a GDP number that didn't look so great today, and the expectations going forward too didn't look so good. So I don't know. Everything's all well and good right now. The market is definitely disconnected from the economy. It would seem a little bit.
Feels fake.
Somebody's asking about the yen. How do you do bull yen in FX? Curious why you chose futures instead of the FX. I got my answer, but you can give yours.
I don't know why I bought that spread. I think it was more to get into the options world.
Well, it's also pure exposure.
Yeah.
It's just yen. There's no dollar component to it. No, that's the thing.
Yeah, I mean this position. So I like to do this with the yen and like corn and wheat. Anytime we have, and you can see I've been doing this pretty consistently. Anytime we have two options expirations that settle to the same contract. So like these both, the 36-day and the 8-day, both settle to the M. The 99 and 63-day both settle to the U. You have the ability to create traditional calendar spreads and diagonal spreads where if you didn't have these two expirations settling to the one contract, you would have to have exposure in different contracts. So like natty gas, you can't do the same thing because if I'm long the 56-day and short the 26-day, these are completely different prices and they are subject to the yield, to the curve flipping and flopping. Where the yen, if I'm long the 36-day and short the 8-day, I'm not affected by the curve movement because both of these options are settling to the same M contract. So I like to do this for dynamic exposure in 6J, corn, wheat, what have you. Anytime I have like two different options expirations that settle here. But yeah, to Jamal's point, Tasty FX, you can get way smaller with these positions. So like the dollar yen, you could do a 5 microlot position or a 1 microlot position and have a static delta for a very small notional exposure. So that is one of the reasons why we like the FX products is because you can really manipulate your risk tolerance with static delta.
I mean, you'll almost never see me buy that future outright. I'm scared as hell to do that. I've just seen too many crazy moves in FX to do that.
Yeah.
But I don't mind trading the option because again, we just do it risk defined and you don't have to think about too much then.
Yep.
Donald's right. Yeah, it is kind of quiet on the floor today, just a little bit. There's a lot of activity, but it's a lot quieter than usual times we've been down here.
But there was a time where I know you turned around. But it was
it was big order putting up over there.
Yeah. That's how it is. Ebbs and flows.
Oh, the 50.9 Condor was an ES, not SPX, but same deal.
Thing.
It'll look. I'm sure the risk profile will look the same.
Yep.
What else we got here? Any thoughts on WDC tonight? Yeah, I got a lot of thoughts. on this one. Look, I mean, these names have been going absolutely crazy in the market. I'm rooting for them to just absolutely blow. I'm rooting for this thing to go to 600. I'm rooting for SanDisk to go to 1,200. They both have earnings tonight. I am a little nervous too that with this big sort of pocket of earnings we just had today and tomorrow that things could turn adverse as well. That said, roll the dice, man. I mean, you know, I was looking at trades. I don't know if I can find any. I mean,
they're expensive.
They're expensive. You definitely have to calendarize this thing.
Yeah.
And I mean, honestly, yeah, it's expensive. I mean,
even a 8-day, 1-day is $800 for a calendar spread. So
yeah,
there's no way you can get cheap in here if you're trying to diagonalize. Getting long an 8-day, short 1-day. If you wanted to get really small in here, it's got to be just like a vertical spread. But those are tough too, because like this thing could, like you said, it could blow out to 500 and not even in the money spread. So yeah, I think I'm just going to watch these from the sidelines.
Yeah.
And see what happens. Maybe if there's a big downside move, I'll go in and sell a put spread tomorrow, something like that. But yeah, these are tough.
They're pretty expensive.
Such huge implied volatility too. It's like $438, and then you have a almost $40 implied move. So that's a big ratio of notional value relative to a 1-day implied move. And then same thing with SanDisk. You've got a 100-point move on a $1,000 stock. So both of those products close to 10% of notional in terms of the weekly expected move relative to the stock price. And that is on the higher end of earnings trades for sure.
is there a way to erase all those flags off from the analyzed graph?
Yeah. Yeah. So
Oh, wait, before you go to that, what we already said. Well, never mind. You're already on. We'll go back.
So run analysis. So you have, if you're in the analysis mode, it's just unchecking your positions. So you can see I have all of mine checked here, which is pulling in the analysis for all of them. So if you're trying to throw on a new trade and you don't want these, just uncheck them. And then you can check the ones you want if you want to compare and contrast. But yeah, it's just the check marks here on the analysis tab. So go to the analysis on the pop out and you can check mark the ones you want to see or not see.
Yeah, they're looking at somebody was looking at a strangle in WDC. Yeah, I know, right? I mean, look, that's really expensive.
Yeah.
I actually do like the idea. It is expensive. If you're looking at if you looked at the 400, 480, look, you just need the monster move. And this thing could possibly give you a monster move, but you got to put up a G for that. If you're comfortable putting up a G for that, then, sure. But just know there's a really good chance you lose that, right?
Yeah.
Like, this is not one of those where you get a move that gets close and it still is. This is tomorrow. I mean, this literally ends tomorrow, right?
Yeah.
And I assume this is the only stranger you're looking at buying because the rest of them are even more expensive.
Yeah.
If you're willing to lose $1,000 for tomorrow for the chance that this thing maybe moves $150, go for it. But just know you're risking $1,000. I mean, it's the odds are stacked against you, but
yeah,
I love the idea because you're looking for mayhem, and I'm with that.
Yeah, I think with a trade like that, if you have the capital to buy a strangle in a 1-day, I might consider selling those options, the 400, 480, and then buying those options out in May or June. Because in this type of situation, if you're right, you're still going to make money. But if you're wrong, you have reduced the cost on these long options. You can just get rid of these and just hold the long straddle then for the next 2 weeks and see if you get that move. But yeah, either way.
What does the main strangle look like?
Those same strikes?
Yeah.
400,
Okay.
480.
2 Gs, so 2 Gs.
Yeah, 3 Gs. So you reduce your $3,500 to $2,500.
Yeah, that's probably better, honestly.
And if you get an inside move, you just buy back those 1-days, and you'll be happy that you did it. But if you get a blowout move, you'll be able to make a profit on this because these options will explode.
Yeah.
And your 1-day still goes to zero tomorrow.
Actually, that's a way better trade. First of all, if you're already thinking about buying a strangle in the 1-day, then you certainly probably have the capital to do this trade.
Yeah.
That's a better move.
It's a couple $1,000s more, but if you get an inside move, you'll be happy because all these options in the 1-day go to zero.
Yeah.
And you'll be okay for a 2-week hold after that.
That's definitely the better move because I don't think these things are done. Even if it doesn't move on earnings tomorrow, these things ain't done, man.
Yeah, buying options in the 1-day is just an impossible scenario to win over time because you have such implied volatility that you have to overcome to where even if you get a move of 37 points, you're not going to be profitable on that trade because you're going to get a massive vol crush on those options. You need a 50-point move tomorrow, 60-point move tomorrow, especially because you're buying both sides. So I like this kind of setup a little bit better.
Heat 2 is a great book, Jamal. Check it out if you haven't. Yeah, written by Michael Mann. They're supposed to be doing the movie, right? They got the cast lined up for that. Should be awesome if it's going to play out the way it's going to play out. I think, are they filming here? Can't remember. Might be.
Yeah, I've been reading a new book called The Way of Kings. It's a Stormlight archive. It's a popular book, but I basically asked my buddy Claude. I was like, listen, I need a book series that's similar to Game of Thrones, but I also need to know that it's good and that it's going to be a series eventually. So Apple TV is making a contract with them for a 5-book series or 5-season series. And the first book is 1,000 pages, but I'm like 300 pages in, and it's excellent. It's very similar to Game of Thrones. So if you're looking for something like that, The Way of Kings, maybe some people in the YouTube chat have read it already.
Claude giving book recommendations.
It was amazing.
I did battle ChatGPT the other day for an options trade, and
you go.
doing those on the regular. I got Claude is next. Claude, coming for you, baby.
Yeah,
coming for you. Yeah, Heat 2 is actually supposed to film in Chicago. It's going to be
nice.
Christian Bale.
Yeah.
Wait, what? It's going to begin filming on August 3rd this year? Oh,
yeah.
I didn't know that.
You can be on set. Just be right around the corner and be like, do you need an extra?
Hell yeah. That's going to be great, brah. That's going to be great. NVIDIA down a decent amount, call diagonal or maybe short put. Love the idea.
Yeah, let's do it.
Love it.
So definitely going to set it up like this. I'm going to sell the 15-day because you want to have the ability to collect all the value out of your 15-day and have the out of being able to roll into the earning cycle and pick up a lot more premium. So you can see here, if I sell the 210 15 days out, the 210 22 days out is trading for $3 more. So I know for a fact that even if NVIDIA chops around here or sells off, I can buy back the 15-day, roll into the 22-day.
I'm in. Oops.
Hell yeah.
Drop below 400.
Uh-oh.
Sorry, go ahead.
But yeah, let's do that. Let's just sell the 210 15-day and buy the 200. Yeah, I'll do this. So long the 200 June, short the 210 May 15-day. We're going to get all this value out of the 15-day. And even if it rallies, I can roll the 15-day 1 week out, roll it up and out to the 220 or 225 strike for a small credit, and re-diagonalize or increase the diagonal spread there. So happy to get in here. Paying a little bit over intrinsic value, 10 points here. It's not going to be a big deal if you pay $10.20. If you pay $13, it becomes a big deal because now you have, if you get a big blowout move to the upside, you take on risk because now you can only make $10 on your $13 debit. So the fact that it's just slightly over is a non-issue.
I'm already in it. I've had this on for, I don't know, maybe how long have I had this trade on? 15 days. Wow. Time flies when you're having fun. And I am long the 205, short the May. I'm long the 205 in June and short the May 22nd 220. I would have loved to sell the May 15 220, but it just wasn't enough at the time, and obviously not enough now. So I got it for $740, $15 wide diagonal, and I'm gonna again. I was talking about reducing risks. This was one prior to the day I was thinking about, but now that it's down, I'm not gonna get out now. So
I like it.
Yeah. Let's see. Closing on the bottom. NDX closing near 27,350 today. Just my, where is it right now?
27,260.
Didn't know off the top of my head. Yeah. I have a lot of WDC stock. Made a lot of profits, but options are tricky. No, that's not the same. Yeah. Let's see.
Yeah, you have WC stock.
I got a lot more options than.
Yeah, I think it's really interesting because if you have stock, it's trading at 436. You could buy a collar here, like a 410 or a 400 collar, $5 to the downside, and then you could sell the 470 to the upside and kind of just like verticalize your risk here. I might consider something like this, where if you have 100 shares, you have protection below 400 if it really falls out of bed. You have a short call at 470, you're picking up $1.80 credit. And even if you get a rally to 470 or around here, you could buy back this call 1 day out and roll it up and out to May or June to a much higher strike. As you can see, you could go above 500 easily if you get a rally up to 470. So if you have a ton of stock in WDC and you want to protect yourself, collar here makes a lot of sense. You could do a 1 day or a longer term collar, especially if there's call skew. If you go to like May, is there call skew? That's the question.
No.
25 points below, 25 points above. Yeah. So you could buy like the 410 and then sell the 470 or the 465 and do this for a scratch or a small credit and just protect your downside and not give up any or much upside potential here. Something to consider if you've got shares.
That's pretty much the bottom of the chat. But yeah, as far as earnings, I mean, speaking of WDC, we already mentioned SanDisk as well, and Apple. Reddit has earnings tonight. Haven't really paid much attention to this name in a while. Who knows what this is going to do?
Yeah, I don't know. I mean, they're making a ton of ad revenue now. It's always funny because this was like we're against ads, we're against blah blah, and now it's just like ad revenue.
Yeah. Amgen has earnings. Roblox has earnings.
Ooh.
Rivian, Roku, Riot.
Wow, Roblox. $7.50 expected move on a $56 stock.
Really?
Crazy.
Huh.
I will not be touching that. But I do think Apple is interesting. We got in with the small calendar spread here. Long the 8 day, short the 1 day. Collecting a ton of value against that long. So we'll play that. But yeah, I'm with Jamal. I mean, it feels like a weird market. I don't really want to go too crazy with exposure here. My favorite position is this Costco long, just because I think if the market does sell off a little bit, I think Costco continues to catch a bid, especially if it's inflation-driven selling. And then silver, same story. I think silver continues higher if we get that kind of move. I like buying the dip in NVIDIA here, so good call out for that one. Airline stocks creeping higher, which is kind of interesting because airlines have already said we're increasing prices if crude stays at these levels, which obviously makes sense. That'll be interesting down the road. But yeah, lots of positions in SPX here. Iron Condor leaning short, Butterfly leaning short, with plenty of value here, and new Iron Condor.
Yeah, I'm trying to decide. I think if there's any other things that I do from here, it's maybe long. I think I got to think about this a little more. I don't know if I'm like if I'm really feeling like oil is just going to keep going higher. If so, I think the long wheat and long corn plays makes sense. I like the idea of long nat gas too. I just feel like there's possibly this crazy commodity cycle that gets kicked off. It's possible. And if so, I'm gonna find cheap ways to do it. And again, I'm literally going back to the old school. If I do it, it's gonna be like upside call spreads where the pop is really low. But I mean, I'm playing for some crazy stuff here. And in June, we'll see. I don't know. I find it interesting. I mean, they are moving pretty heavy right now. And
let's do this. What is this trade for? Yeah, okay. So we were doing this before too, like the wheat calendar spreads, diagonal spreads. We had the 700, 710. We had the 580, 595 earlier. This could be interesting. Same story. If you're long 57 days, short 22 day, they both settled to the end contract. So it's a straight up diagonal spread, like traditional style setup. This is a $500 diagonal spread. Not too bad.
Yeah, it is not too bad.
What if we did like 650, 700? Huh.
Diagonalize?
Yeah. 650. It's $1,000. What if we do the 675? That's better. 675, 700 diagonal spread. We'd have.
I like the 700. I'm going to do that 700 calendar. I'm targeting the 700 level.
All right.
Let me do that. Wow, Bill.
I like it. I'm going to go with the diagonal, and we can compare and contrast. Instantly filled. Hate it.
I was too, actually. You usually don't get instantly filled in those.
What's corn doing?
Yeah, corn is the one. I think we stay away from ZS because as the dudes have been saying, like, I think you have the ability. What is it? If you're able to, I think what they're saying, they can plant more wheat and corn. Well, they can plant more soybeans, but not as much wheat and corn because of the situation, I believe. So I think corn and wheat are the way to go.
Yeah. Yeah, I'll do a 500 strike calendar spread here in corn, which is similar to what we've done previously. But yeah, just getting in. This is a $300 trade. Just getting in long June, short May. Same story. Both of them settled to the end contract, so you don't have futures curve risk here.
Yep.
In terms of being long one and short another. Will I get filled? There you go. 6375. So in on corn, 500 strike calendar spread, long June, short May. In on wheat, 675 long June, 700 short May. Both of these are under $1,000 in risk. So I like it. Lots of futures exposure. Wheat, corn, MES, crude, Japanese yen, micro natty gas.
Yeah, I'm as much as I'm still in, obviously, the year-long trade in Qs, I'm getting out of some of the tech exposure. I think it's
I think it's fair.
Yeah, just do something a little different. Roll out of that.
Yeah. I mean, when you look at this chart.
I know. I know.
I mean,
I know.
Hello.
It's yeah. I don't need to be in names and the MNQ. So the MNQ is just fine.
Yeah.
I'm also exposed to tech via this EWI short, which I've been getting beat up on, but I'm fine with it. I feel like that pulls back at some point.
Yeah. And really, I think even though we have some more bullish positions on in the Qs, these downside butterflies I have in SPX, as you can see, P&L expiration 15 grand if we just really crash. So this whole portfolio is protected by these butterflies that I've got on. So we'll see what happens. But yeah, I feel really good. I feel like this is a balanced exposure now in this portfolio. Kind of bullish, bearish, different products, different sectors, but we'll see. That's it. We're out of time. Thanks for tuning in. If you've got any future questions or further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Stay tuned, though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. We'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
Investopedia says we're the best for options trading. Stockbrokers.com.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I'm just gonna wait for the stock to dip, then I'm a buyer.
Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
What is going on, everybody? Welcome back to Risk and Reward. Today's Thursday. We got some after-hour actions in the after-hour action in the Asia session last night, and then we got a little bit more volatility into this session. I got to say, I was pretty surprised because a lot of the time, whenever we get such a big move overnight, sometimes the volatility kind of lacks in the next session. So, kind of a surprise here. But before we get into everything, my brother Gus, how are we doing today?
Doing good. I've already jumped in on a few of these dip opportunities off earnings today. Really just surprised to see that we're up today. After Meta and Microsoft both tanked, I sort of figured it was a foregone conclusion that we'd be at least a little bit down today. But very resilient market that we have going on here, up about 0.5% in the broader market, despite two Mag 7 companies being down 5% or more.
Yeah,
way more in the case of Meta, which I have now added more to of my ridiculous Meta position. So excited to get into that in a minute. But I'm good. I'm a happy camper.
After hours action was wild last night.
Yeah.
Some massive volatility, right?
Yeah. Got Rivian creeping up a little bit. Resolute is up. I know Grumpy Mike's happy about that one. If Ranch is here, I see he is. I saw Broadcom logging a good day.
I forgot about the earnings of Broadcom.
I believe Ranch was still long Broadcom, if I recall correctly. Somebody's long Broadcom. Maybe it was Jared. I'm not sure. They'll let me know. But everything moving in the right direction for me. I'm content.
Good. What's going on, guys? What's going on, Jam? What's going on, Nice Boy, Big Deal Ranch? What's going on, guys? With that being said, we can do a quick tour of the market. We'll jump into the Tasty platform here. Check out where volatility's been at. Check out where SPY and QQQ and those kind of things. Volatility. I got to say, I'm a little bit sad on my end when it comes down to volatility. I don't know if when are we going to get a legit pullback in the market? I don't know, but it is starting to feel like we're a little bit past due for a little bit of a pop in volatility, but we'll see what we get. I mean, even volatility being down over the last few weeks, a 17.35 VIX is pretty good considering what we've gotten in the market. So
you got captions. Did you write? You wrote this?
This was for a video on YouTube. I got live captions. Check out that YouTube video on the Tasty channel. Vol's kind of down on the day. And again, from what we've gotten over the last couple of years, I'll still take a 17, 18 VIX. We'll see what it is going to be on average as we continue throughout this year. We got a little bit more of a pullback from oil. I don't know if we've been keeping a little bit of an eye on oil. Oil's still surprising me and shocking me because with the rally last night and then the recovery we're seeing now, I would think oil would have been pulled back a little bit more than it has. So that one's kind of throwing a wrench into things in terms of just kind of how I'm viewing it right now and just trying to get a good read on it. And I think that's one of the more difficult products to trade right now. But we're getting a little bit of a red day on oil today too, though, about 2.5%, just below that.
Yeah, pulling back a little bit. I saw Nokia mentioned in the chat. Nokia is
I know, it caught my eye.
flying. We got meme stuff going on there.
Nokia, you know, we'll jump over to Nokia. What's going on over here? Is this going to be like another BlackBerry situation? I think Nokia's popped off randomly like this before. I think, right?
I assume that this is just some meme stock thing happening. It's been treated that way over the past number of years. I mean, 5-6 years now. We've just been playing with Nokia's feelings.
Pretty much, huh?
But hey, if you're the CEO or an employee at Nokia with a stock purchase program of some sort, you would have had some nice exits.
You would have
time and time.
You absolutely would have. Someone held on to those options that were probably worthless, forgot about them. Nokia spike, and they're like, "Oh my gosh, I forgot I had these stock options on Nokia. I thought they were gonna expire worthless." Then they come back trading $12.76 a share.
Yeah, exactly. And to your point about VIX, really surprised to see VIX continuing to collapse here. I mean, like I said, I really was shocked after the drawdown that Meta and Microsoft had, that we're not getting any pop in the VIX, any drawdown in the broader market, just acting like we don't care about 2 of the 10 largest companies in the world falling apart, which I'm content with. I'm still a little bit long biased, and I think it presents some nice dip buying opportunities. But yeah, I did get involved with Microsoft and Meta after the close, this morning at open. Slightly after open. Those trades have been posted in the follow feed now. But essentially just did the same thing on both, just getting leaps into the end of the year. December 18th is my expiration cycle on both.
December 18th.
And treating this as
my birthday.
Oh, that's your birthday?
I'll let you know when it's coming around.
Yeah.
It's like, yo, check on that position.
Please do. Yeah, I remember it was in December. It didn't occur to me as I was putting them on.
It's funny.
But yeah, we have a slow. I just think that this is a nice dip buying opportunity. The broader market showing so much resilience against these things falling off just lends me even more confidence that eventually they are going to have to catch up to the broader market. So yeah, I'm happy to get involved at these levels. My meta position is insane, and only is more insane now that I've added more to it. Microsoft much more tame. I did take a somewhat high risk Microsoft long into earnings yesterday. That was very small. Obviously, did not pan out as I was getting long. But yeah, happy to see it pulling back now, and got involved at like a sub $400 spot, which I feel like will be quite the value play here over the next few months.
Yeah, 100%. And I mean, you're right. I mean, these are some pretty good prices to get in, and they've been pretty resilient. You know, despite how aggressive the market has been to the downside. That's a really good point.
See, people are saying Nokia is not a meme. They got a contract with NVIDIA. Interesting. Nokia pioneered.
So I'm interested to see how that plays out. I mean, that would be what a revival for Nokia if it really comes around. Hopefully you could save them. But I know NVIDIA earnings is soon, right? I don't think it was last night.
NVIDIA's just throwing money at anything now. I gotta start a company and see if
hey, when you're so big, it's like you can just play the numbers game, huh? Usually, I'll buy you. You know, I'll buy your company. You're struggling, I'll buy you. I really want to buy you, but I'm going to wait till you guys are suffering financially, then we'll scoop you up. And it's like they're just a player that can scoop up whatever they want in their portfolio. And if one pops off. But
and you're able to hedge a little bit too. I mean,
it's nice.
I saw Google is taking a $40 billion swing on Anthropic, which
golly,
that's a direct competitor. But Google is just straight up starting to say, okay, we're losing the race, but we have a lot of money, so let's just make sure we can't lose. let's just give these companies money and make sure that we can't lose. And I'm sure that will work out very well for them whenever Anthropic IPOs, which I believe is also slated for later this year.
Yeah. Wow.
But yeah, it's just hedging out.
These earnings will be fun then, huh?
Buy the competitor.
Yeah, these earnings will be pretty fun May 20th with NVIDIA after the bell. So we'll look forward to that. Not too much on my end. We were able to catch more scalps today, which was really nice because I took a couple scalps in Asia, and we'll get into it here in a little bit. And that kind of put us in the hole a little bit for the day. Some stupid things happened in Asia, but we were able to recover, thankfully, because of the volatility that we had gotten today. But we'll go back over that in a moment. Micron was recovering a little bit better today. We're down about 730 right now, about 1.5%. We were down a little bit lower to about 503 on the day. So, I mean, this thing's volatile. It's trading at 511, traded at a low of 501.86, somewhere around there. But break even on the day, but the overall position has 15 days left to expiration. We had sold an out of the money call spread, and I literally had to rub my eyes when I looked at the strike that I sold. I sold the 430 strike, and then I looked at the MU chart, and I had to go back. I was like, did I sell I was like, where's 430? And then I was like, did I really sell the 430? This thing's been rallying that hard against the call spread that we sold. So we sold this one. This is what the white line, this is the call that we sold. So you can just see how aggressive these products have been to the upside. 2 weeks, I mean, an aggressive pullback in SNDK and MU, I think would help get around a year. At this point, I'm not even looking to necessarily even break even. I think right now we're just going to look to at least be able to scoop some of that back, and that'll be a W for that trade. And then QQQ, we sold an out of the money put spread. When did we sell that? We sold an out of the money put spread. When did we sell this one? We sold this 428. Oh, that was
Tuesday.
That was Tuesday. So we sold that Tuesday. Ended up taking it off today after seeing that aggressive sell-off in the market. Whenever we bounced, I was like, all right, I'm good. That one put a little bit of heat on me. So we just scooped that one off the table, especially just because we have more short delta on in the portfolio, and we're going to manage that a little bit better here. So we also have an out-of-the-money call spread that we sold. 15 days left to expiration. Is QQQ going to get down to 615? Good Lord, I think MU has a better chance to get back down to 430 than QQQ has to get back to 615. So with that being said, these two positions is just going to be defensive mode for the most part and just scooping back a little bit more. And that's going to be the game plan there. But trying not to oversize. Of course, MU is a position where it was a $10 wide, usually doing the $5 wide. So we'll see what we can get back on those two. But other than those, that's what's really been catching my eye. I know Amazon had earnings last night too. It was a little bit of a nothing burger, a little bit of a delayed reaction for most of the earnings, I would say, because I think before close, I mean, we were pretty much break even. We were, kind of whipsawing in both directions, and then the market really decisively chose one and ripped to the upside. But Amazon, a little bit of a nothing burger on the day, kind of opening up and trading around near where it closed yesterday.
Yeah, your MU just reminded me to get out of my SanDisk expiring Friday. I managed to only take a 40% hit on that position, despite it doing nothing but moving in the exact wrong direction the entire time. So I will take that.
I wonder what type of wins these things are catching right now. They're pretty aggressive.
Yeah, I mean, it was 1 DTE. It was like 3 DTE when I put it on or something, 3 or 4. And yeah, it's just moved straight up. But the expected move stays so wide because of the incredible volatility that we've seen on SanDisk that it's the premiums are just still there. So able to get out of some. If that's a typical stock with an IVR of like 30, I'm dead in the water already. That's an 80% loser. But shout out SanDisk for the volatility, letting me only lose 40% on that
100%.
one. It's strange. The premiums are so elevated that it feels like scary to get involved with SanDisk and Micron. But at the same time, the expected moves stay so wide that it's like the premiums are going to stay juiced unless there's some sort of large vol collapse, which actually, if you're a premium seller, can offer you a little bit of lower risk angles, as counterintuitive as it seems.
No, 100%. I'm with you there on SanDisk. I hope you can make some calls for us, Gus. Make some calls. Get these underlines down for us. Apparently, the JP Morgan news wasn't bearish for SanDisk or Micron. But with that being said, about the PDT. Will PDT rule change what stocks or futures you trade? Not necessarily. I don't think anything will trade except the fact that we may be trading the zero DTEs a little bit more often. Just because a lot less buying power with the zero DTEs, especially if you're taking trades especially if you're a scalper, right? I mean, if you're trading and you're getting out of positions in 5, 10, 15, 20, 30, 45 minutes, that theta decay is not going to affect you too much. And then that's when you can take advantage of that very low buying power and then the volatility and the uncapped reward that the zero DTEs do offer. And then the minimal buying power that it takes, I think, is most attractive. But it can be a little difficult to manage those trades. But we'll see how it goes. Whenever June 4th rolls around, we'll be a little bit more active with the zero DTEs. Something that's interesting, which we can take a look at just how much. I haven't looked at this yet, but I could imagine these zero DTEs from the morning have expanded so much. So this morning before the sell-off, it was around 27,505 on NASDAQ. What would that be on QQQ? We'll do just a quick comparison, then we'll shift gears here. This morning, QQQ, NASDAQ was trading around 27,000 here. Let's say 665. 665, we'll go 665. Let's look at those contracts. 665. We'll look at the puts, and then we're going to right-click on them. I'm sorry, the calls. No, the puts. 665. Is that 665 that I'm clicking right there?
Yeah.
That is 6. Is the market trading back at its opening price? Am I tripping? Am I tripping right now? We
sort of close.
We kind of are. We are kind of trading at the opening price already. Let's go back down to 665, open up that contract. I think if we're going to be trading 0DTEs or looking at them, I think clicking on the contracts and pulling up the chart for the option contract itself is one of the easiest ways to manage your risk, because something that's so difficult is just knowing where your contract is at and where you could be stopped out, and just being able to see that actual price fluctuation of the value of the contract is really helpful to see that. But let me go to the 1 minute chart here. Let me see the 1 minute chart. Okay. So this morning before the sell-off, right, we had got short some of the futures, but if you would have bought some of the puts, could have bought the puts at around 315. Let's go up a little bit. We'll give it a little bit more room. Let's say you bought the puts at 390. So let's say we buy the puts 390. Let's say you want to buy 5 puts at 390. That's going to be about $2,000. That's about the same price to buy just one micro contract. It takes about the same buying power. And then these contracts went up to about 713, right? We won't go up to the tippy top high, but let's just say 7. We'll go 7. That's already what, $4? That's about $3 per contract, right? 300 for $1,200. That's right. That's a $1,200 gain that you would have on using $1,900 worth of buying power rather than using the micros. But once again, managing the volatility can be a little bit more difficult with the 0DTEs. But let me get off that soapbox real quick. What else you got top of mind, brother?
Lots of good PDT discussion happening here. When PDT comes off, I'd expect suddenly 7% of affected folks will suddenly hyper trade and blow up in the first 30 days. I think there's definitely going to be some semblance of that. People will get too excited and will overtrade. And I mean, it's we've talked about it a number of times, but there's one side of the equation is it will enable overtrading. It will enable you to be up, and in situations where previously you would have just had to keep those profits because you don't have another day trade, you're going to go after another one, and that's going to burn you. But at the same time, I think that there are pros also in that people can hold things a little bit longer as well, or that I guess I should say people can take profitable exits a little bit more as well. If you're if you're at your what would have been the day trade cap before, and then suddenly you have a position that's 20% green that you would like to get off, there would be situations previously where you'd have to hold that overnight just to avoid taking the day trade on it and potentially get a worse exit, whereas now you can go ahead and capture those profits without the concern. So I think there's pros and cons to both, but yeah, I definitely think that that's a correct analysis, that there will be some overtrading and some blue
100%.
accounts pretty quickly.
Oh, no doubt, 100%.
But I blew accounts even with PDT, so it's like
no. I mean, but I think the point you're making too is so when someone's getting through the learning curve, especially for a beginner, like again, when I was like in my second year trading, if you talked to me in my second year trading, I would have swore up and down I needed $25,000 in my account while I was in college. I would have told you I really needed that. So I think a lot of other younger people feel the same. But in hindsight, looking back, 6-7 years now, I recognize those guardrails really helped me. I was dripping money along the way, but the PDT rule allowed me to bleed slow enough to at least get through the learning curve, so you didn't necessarily discourage yourself. So I think the rate at which you lose money matters for getting through the learning curve too. And to your point, the 0DTEs will offer another route for more very beginner traders to kind of lose course of that a little bit easier, 100%.
Yeah.
Especially with 0DTEs.
Oh yeah, and I mean, I think there will definitely be some.
Because if you you can't even bag hold it. If you bag hold it, you're cooked.
Yeah.
Right. So.
Yeah, I think there will definitely be some hard lessons in risk management learned here, because you do have to be much more cautious, because if you're a day trader, I mean, there might just genuinely be some weeks where there's only 3 good trades to be had, and it's going to be important to not force more than that just because you can. But yeah, I think all that will shake out pretty quick in the wash. I think there'll be like a 90-day learning curve, and then everybody will kind of have it sorted or have blown their account.
Yeah. I remember when Tom was teaching on the Where Do I Start series, when Tom was teaching Kay. You remember Kay? Mm-hmm. I remember when Tom was teaching Kay and I'd never even touched a futures product, which I'm glad, right? Made you trade this product, made you trade this product, made you trade this product, felt very uncomfortable. but at least you now know how to get into some of those products. And I remember he had made us put on a futures position for one of the first times. And we were so used to putting on defined risk positions. So we were like, oh, I remember I put on PLTR and it went directly against me. And I remember the other one, I forget the name. I think it was Riot. I remember it like it was yesterday. I remember I tweeted about it. And then I remember Tony quoted the tweet and was like, oh, you're good. Get back in there. But I remember it like it was yesterday. But anyways, we put on the futures contract, and it was the first time we put on a position that wasn't defined risk. And I remember we had it on. And into the next couple of days, we didn't really know how to manage these positions. And we're down it was like $1,000 like on the trade. And then I think K went down 2,000 on one micro contract. And we're like, yo, Tom. So I was like, is this contract just going to expire in our portfolio? Or like, how does that work? We had no idea, right? You have to provide your own guardrails. And that was like the second year in. So to that point, I will say those guardrails are important. Without them, I mean, your account could be cooked for sure.
It's true.
Fresh meat learns fast these days. They do. Have you seen the 16, 17, 18, 19? Have you seen social media? I'm not saying everybody's profitable on social media. 95, 98 aren't. But good Lord, I've never seen so many young individuals so in depth with the market, right? You can kind of see there's going to be 5 of them out of the group of 100 or 200 that will take it a little bit further and find an interest in it. But it's wild. I think I seen a 13-year-old trader the other day. He's creating content. I'm like, what's going on right now? This is definitely the end days.
Yeah.
I don't know.
But I do think it's good to start kids that young if they're genuinely interested. It's nice to, it's important to blow up a bunch of smaller accounts when you don't have a lot of money.
Yes.
So that when you do have
Kids,
a lot of money, you're not blowing
responsibilities.
Yes.
This, that. Yes. 100%.
It's better to learn. If you're gonna fail small.
Yes.
And early.
Yes, and then go get more hours at Walmart or wherever you're working. No, for real. You know what I mean?
It's what I was doing in high school for sure.
100%.
Yeah, go to UPS, pick up another check.
100%.
Nice show. Is there a date on the PDT rule? Yes, June 4th is when PDT comes off. And what is your thoughts on Fermi? I've never heard of this company.
What is that?
FERMI? FRMI.
A little bit of a cheaper stock.
Yeah, I don't know what this company is to give any take on fundamentals or anything like that. But this does seem to be similar. This does seem to be attractive chart action to me, at least loosely. This is a type of situation where I wouldn't mind getting long, but that's predicated on this being a strong company that won't fail or go bankrupt. And because I know nothing about them, I can't definitively say I would like to get long this. Sometimes, small companies like this can just completely fall by the wayside and go to zero. But if this company has legs, has cash on hand, isn't near bankruptcy, this seems beaten down enough, and there seems to be a strong enough support at this $5-ish range to maybe get involved with some longs in a small capacity.
Yeah.
Fail small, fail often. Yes, absolutely, Grumpy Mike. Well put.
And it is a good point. Sometimes, depending, man, it's so you're just gonna have casualties either way. But also, I think losing the money. I think feeling the sting yourself is so necessary. It's wild. One of the first things you hear getting into the market is manage risk, manage risk, manage risk, manage risk. We all know that. But I really think one of the only ways to learn is to feel the burn and the stings yourself, even though that's the first thing you get taught. And I think that changes behavior a little bit. But with that being said, we can go ahead and jump to the TradingView platform. I'll show you guys what we were talking about from last night a little bit. This was so frustrating. Literally my computer froze. I have a screen recorder and everything. My computer froze and I'm trying to manage these positions. And I think I got one contract on and I finally get it back up. And it says I'm short 3 contracts. I'm like, yo, what's going on? And it just butchered the entire short that I was trying to take yesterday. That's why today, whenever we did rally back near these levels, it was a little bit more attractive to look for the short because we were looking for the short here yesterday as well. But the reason why that was really annoying is just because we started off the day in a $250, $280 drawdown right off the bat. And the reason why that can be frustrated is because your previous trades can affect your next trades. Because we were already down in the hole almost $300 this morning, we only used a couple contracts here. But if we weren't down on the day as the market opened up, we probably would have sized in a little bit heavier because we had a lot more conviction in this trade. But the reason why we didn't was because of our previous trades that we took overnight. So you can just once again see how those previous trades absolutely can affect your mindset for the next trade and the next trade and the next trade. And the one thing we always want to avoid is tilt. It's going to look different for everybody else. Everybody's going to feel it differently and react differently. We're all different and respond to things differently. But you can kind of see it worked out in our favor. But you can see how it can affect the next trade, for lack of a better phrase. But we were able to get the short in the morning.
And caught a real nice move there.
We did. And not to say we knew the move was going to come, but the risk to reward was attractive. And I mean, I don't know. I think Grumpy Mike or Ranch or Nice Boy, maybe they unloaded their positions here to help push this down lower. So shout out to you guys. But we scaled out one contract down here. We were still pretty bearish. We have another level of value sitting lower over here. So we're still bearish, but we weren't going to wait all the way to the tick at 27,104. And then I think Big Deal and Ranch and Grumpy Mike and Jared started to load their positions back in because in the market is bouncing near these highs over here. So we'll keep an eye on it. This is a little attractive too. We'll sell one, put a stop at the highs. That's attractive. If we get stopped, that's fine. But we do have a little bit of cushion on the day, so it feels comfortable to throw that on, right? It's a lot easier to pull the trigger when you got a little bit of profits on the day. But if the market fails from here, then we will be a little bit more bearish to the lows. But the risk to reward, once again, is attractive when you see it like that. But with that being said, we'll see what we get for the rest of the day. It's been a volatile market. Earnings really caught us off guard, or caught me off guard at least.
Yeah, we still have Apple yet to report after the close today, and then Nvidia is like middle of next month sometime out there by itself. But that's obviously kind of the Super Bowl when Nvidia goes.
It is the Super Bowl, May 20th. May 20th is the Super Bowl.
Yes, that sounds right. Ranch, no apologies. Yesterday was the full hour. We are regular time slot today. I wish we could stay here longer.
That'd be fun.
And yeah, I think Griffin, you make a good point. In my opinion, you have to put up enough such that the loss will matter enough that you learn. Playing for pennies doesn't test your fear /greed /risk management. Yeah, that's definitely true. And I think, but it's always important to remember that enough is relative to, your specific situation. Like when I was, in college, blowing up a $500 account was like rather substantial and certainly enough to make you stop and think and go back over things and figure out where things went wrong and try to be better the next time. But if in my current situation, that might be more like a $2,000 account that would have to blow up to teach the same lessons. So it always enough is a relative term.
I remember, lastly, as we close here, I was shorting this small cap stock. It was called WAFU, W-A-F-U. Let's see, I wonder if it's even trading anymore. And crap stock, you see, still trading at $1.63. But I remember trading this years ago, and this thing put me in the grinder. And I think I had lost like $400 back to back. Sometimes the market will literally put you in the grinder to where like it has you reacting to the complete opposite back to back to back because you're so emotionally locked in. I think I lost like $400 back to back, and I just sat there, and that stung so bad because I was like, I really just sat here and lost half my net worth.
Yeah.
So with that being said, as we go back to NASDAQ and we close this off, I just want to encourage everybody, never be afraid to pull the trigger on these trades. Because if you look at the trade we're taking right here, whenever you just manage the risk, you don't have to be scared to pull the trigger, right? What is that? 449, 455. That's 5 points of risk. You know what I mean? You catch 10 points, 20, 30, 40 points, it'll pay for all of that. But whenever we're chasing moves, and I find myself getting stuck in that, if I miss a move and I chase it, my risk is wide, and that eats up profits at the end of the month, and it doesn't give you the cushion to take the inevitable losses that you're going to take. But with that being said, that's all I got, top of mind at least.
Yeah, that's pretty much all the time we got. Gotta go buy cigarettes, damn it. Quit.
Yeah, that was...
You guys are cracking me up.
That was me at 18. I'm just kidding, like me at 8 years old. No, anything else top of mind before we wrap for the day?
No, nothing for me. Yes, remember PDT is up on June 4th. We're very excited about it here, as I'm sure everybody is at home. No longer $25,000. We are moving it down. Well, not we, the society, the SEC, FINRA is moving it down to $2,000. But yeah,
they saw the competition coming. They saw the competition. I was like, we got to make these changes that they wanted for the last 10 years, anyways.
Yes.
Hey, look, money talks. I'm telling you.
So yeah, we're moving intraday margin requirements now. All the rules obviously in the FINRA release, but exciting times ahead.
I still think that the PDT rule, I know a lot of people lost money earlier in 2000, but I think this industry was gatekept for a long time, but it is really cool to see it getting democratized. With that being said, Ranch, Big Deal, Mark, Griffin, Nice Boy, everybody else, thanks for taking the time to hang out with us. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
We wanted to call in because recently, as some traders may have known, there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. This was
awesome.
not a paid, you're not getting paid for this advertisement.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We're back. It's still Thursday, April 30th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's your co-host, Thomas Westwater. Thomas, we're almost through the biggest portion of the calendar for this week, for this month, for perhaps the entire quarter.
Yeah, I mean, it has been a big quarter. Some big earnings yesterday, still more earnings today. We got Apple after the bell. So, I mean, we're moving higher here. Oil's pulled back a little bit, still up 10% on the week. So, you know, big gains there still, but equities are digesting it.
equities are definitely digesting it. We've had this slate of earnings in recent sessions that have continued to come up strong. Maybe some of the market reactions to the numbers hasn't been exactly the most positive thing in the world. I'm thinking about a Microsoft or a Meta, but Google up at all-time highs. You're watching an Amazon continue to do well. The chips today are on fire. Telecom is on fire. Big bounce to the upside there. We also have to talk about the Fed and oil. You mentioned briefly going above 110 in the CLM6 contract overnight. Thomas, so many things in front of us here today. Dare I say, it's not my best effort for a title, but Thomas, there have been some interesting moves. What's happening with gas prices and energy inventory levels here in the United States? I did see that AAA is saying that we're looking at all-time high gas prices in the Midwest region coming around the corner. If that's not today, it's probably going to happen tomorrow. You sent me over 3 different charts today to talk about these inventories, and I'd hope we talk through them one at a time. The first, the weekly inventory changes that we've seen for gasoline, distillate, et cetera. What's happening here? How come our gas prices continue to go up even if crude oil hasn't set a new high? It's not trading through 119, is it? How come it hasn't set a new high and yet gas prices, fuel prices keep going up?
No, I mean, we're withdrawing hard on fuel products, and we have been for a while, but it's accelerating now. More crude is coming out. Exports are running very, very high now. So all these flows that went through the Strait of Hormuz, now we're shifting these cargoes to the Atlantic Basin, the Gulf of Mexico, America, and taking them out of there. So I think we're going to continue to see this. There's a lot of fuel product exports. It's not just, you don't just export crude oil, right? So these graphs, it shows distillates are starting to accelerate with the withdrawals. Gasoline accelerating again. 2 weeks ago we had a big draw, another big draw on the latest EIA data that came out earlier this week. So there's just around the world, there's a need for these fuel products. There's a need for these for oil, and it's taken a while for all of these very large oil carriers and other ships that could handle these products to get over to America. A few weeks they have to sail across the ocean, and now we're starting to see that export pressure here. And it looks like the demand side, at least in America, it's a little more subjective on demand until hard data comes in. But it looks like there's still pressure there. I mean, we're going into peak season, the summer, for driving, for traveling. So I mean, I think a lot of the gas price analysts are right. I think you're going to continue to see them go up. I mean, crude, yes, it's down today, but we're still up nearly 11% on the week. We got RB futures, which is gasoline. Those are still up a little bit on the week too. Still up today, 0.2%. So they're not dropping like oil prices. So it's the end of the month. Perhaps this is some profit taking on crude oil. We're up 10% just on the week. So profit taking going into the weekend here. We'll have to see how it goes.
Thomas, you sent over 2 additional charts just to give people a perspective on how low inventories are compared to where they've been in recent years. Obviously, 2020 is a little bit of an outlier because the economy slowed down and stopped for a few weeks to try to stop the spread. And so the inventories definitely opened up. In some sense, we're following a typical path where we draw down our inventories more so as we make our way through the year. This is gasoline inventories, and inventories get drawn down going through the summer months, and then they start to rebuild over the winter. The fuel, the distillate, though, this is already sitting at a lower point than 2024, 3, 2, 1, name a year. Broadly speaking, what does this mean for inflation, do you think, for this new Federal Reserve that's about to emerge under Kevin Warsh? Is this the kind of situation that means we could get rate cuts sooner, or do we need to start wrapping our head around what a higher for longer rate environment means?
Well, I mean, fuel prices are inputs for a lot of things, right? Farmers, they have to run their tractors with diesel. The things you buy at the store have to be shipped on the road to the store. Those trucks use diesel. It's everything. The longer this goes on, especially because there are ways to hedge it, but the longer it goes on, the more impact you're going to see on prices. So I think it's going to have to be inputted into the Fed's calculus at some point. To what degree they do that or have to, account for this is, yet to be known. The Fed, we've talked about it before. They like to see inflation as a transitory event and an energy supply crisis. It is transitory. It's not going to, the Strait of Hormuz is not going to stay closed forever. It's when is it going to open, and how soon after that is our flows going to normalize? I mean, in my opinion, from what I've seen, this at least lasts through probably the end of the summer, right? Because you just don't snap your fingers and all of a sudden cargo ships can transport, to the Strait of Hormuz. They can get those cargoes. You're still looking at a lot of facilities that are damaged, so those have to be repaired. And then, you can't write off the chance even for that this escalates again, right? But it looks like so far the U.S. blockade is staying. As long as the U.S. blockade stays, Iran is going to keep threatening to control the Strait of Hormuz. So the war right now, at least contained, down to a small level, is about controlling the Strait of Hormuz. Iran knows it. The U.S. knows it, that this is, the way you hold the world economy hostage. So it's a big, leverage point.
Leverage point that the market continues to ignore.
Yeah.
S&P 500 here is sitting up at the highs, 72.17. The high that we had on the 28th, 2 days ago, the all-time high was 72.23.25. We almost got there overnight. And overnight, it looked like we were coming back in. There was a intervention in the market. We're going to get there in a little while. But I think we learned something important. There's a few things that we can take away from everything that's happening here, Thomas. A Fed that's going to be higher for longer. The market knows it. We can all see oil prices. The earnings that are coming out right now, incredibly strong. So strong, in fact, that whatever decrease in margins that companies may be facing as a result of higher energy inputs, at least in the tech sector, there's still money to be made, and a lot of it. Just so far, we're going to have to run the numbers again after Apple today, but coming into this week, Q1 net profit margin for tech companies was up around 29%. A year ago, it was only 25%. Only 25%. So we have a market that's sitting near the top end of its range. I'm curious, Thomas, what if oil wasn't up near 105, 110? What if it had dropped by $5 or $10? Where would the S&P 500 be? But also about that intervention. Remember in August 2024, when we had the whole, traders are deleveraging the yen carry trade, and the yen went through the roof and the Nikkei dropped by like 10%. And we go into that August 5th morning and stocks wipe out, and then they start to stabilize once the yen has washed through the system. There was a carry trade component to how traders were operating back then, insofar as they were using the yen and they were using it as collateral to buy the NASDAQ. And so when the yen started going up, they had to sell their NASDAQ in order to pay back the yen. Today, that's not really what happened in the market over the course of the day. And I think that's an important distinction here. This is not a stock market that has proved sensitive at all to the deleveraging of the dollar yen trade, the euro yen, pound yen trade. The carry trade is not poisoning the well right now. So just as a gut check here, is this S&P 500 rally, has it been built on the fact of people borrowing cheap money abroad to invest here in the U.S. stock market? No, it's not. That's a sign of resiliency here. That is a knock that we can't say the stock market has against it right now. Whereas, almost 2 years ago, the yen melting down and then reversing sharply had major implications for our stock markets, Thomas.
Absolutely. Yeah. I mean, I think a lot of this is still being driven. If it wasn't for AI enthusiasm, I still think that's holding up a lot of the market, a lot of sentiment. It's just a trade that traders don't want to really abandon, even if we're facing, this energy shock, And one thing I think, we're so focused on tech earnings lately. Caterpillar announced earnings this morning, and they said that their revenue from power and energy segment rose 22% annualized. It's driven by equipment for data centers, and now they're forecasting full year revenue growth in the double digits instead of the 7% growth rate that they were previously at. But you see that strengthening the sector. Caterpillar's up over 10% earlier. I'm not sure what it's at now. It's probably, it's still 10.5.
And it's helping lift up the entire industrial sector. I mean, I have XLI up here on the screen, Thomas. We had this just micro level late February support. We break down here on March 5th, right around 173, 175. Recently, it's been a little bit of resistance up here between 173 and 175. And today we're back into that resistance. But industrial's running higher alongside telecom, right? That's not exactly something that's considered bad for growth, not at least the way that I look at the world. Telecom here, Caterpillar's not in the ETF, but it's things like Global Star, Ciena, Iridium, VIAV, AT&T. So telecom up, industrials up, semiconductors are continuing to do their thing, holding their 1 week moving average, which I suppose the structure of this market still, Thomas, all week long we've been saying, as long as this thing continues to hold the 1 week moving average, the structure that's been in place since March 31st, when it first closed above there, is intact, and you can't get too bared up. 70, 85 is more or less your line in the sand to actually get bared up, because that's where you find lows from last week plus the former highs that we had in January. And yet we have held it. Yesterday, Thomas, we closed down at 71.68. The 1 week moving average is 71.68 yesterday. So it is held with that doji. You can see similar action here in a NASDAQ where 2 days ago we pulled back to the 1 week. The close was 27.168. The 1 week then was 27.151. Yesterday, we got a bounce. Today, we're pushing up into a relative new high as we're back to the top side of the range. So the structure here across the board for your equity markets not only looks strong, but your Russell, your domestic-focused stock market, that's a bullish engulfing bar. We cleared yesterday's low. We're putting in a potential close above yesterday's high. You think about the Caterpillar story, Thomas, and what that could potentially mean. Data centers, those are getting built here in the United States. That's a lot of domestic demand right now. And we're potentially looking at a Russell that has reversed any coming together of a top in the short term in very quick order. And this is all in the back of earnings, right? These are good catalysts. This is not the Federal Reserve coming out and saying we're going to cut rates and it's a hopium rally. This is solid improvement despite oil hanging up here at 104 now, we'll call it. We shouldn't ignore the sector rotation.
Yeah, no, I think, and obviously you can't say that, oil going higher at this point is going to hurt equities, because that's just not what the market is telling us. Will there come a point when oil rises so much, if it does keep rising, that it will impact the equity market? Maybe, maybe not. But I mean, the way you're trading this now, if you're waking up and seeing higher oil prices and expecting the stock market to be down, that was true in the first 3 weeks after the war started. That is not true anymore. And, so we are in a market regime where, energy prices, as it looks right now, they can stay high and equities can go higher yet.
We're testing those all-time highs here in the S&P 500 as we speak, Thomas. 7223.25 is that number. We're currently sitting up at 7221. So it feels like a matter of time, maybe a matter of seconds before we make the attempt to punch through there. Right now, with volatility having come in a little bit, it's a 40 IVR. It's still very high here, but we're looking at a VIX that, once again, are we putting in that bump through 20? We've had these instances over the past week or so where we've tried to make a run up at 20, a psychologically significant number, and we've been turning to the downside. And today, right now, 1723, we're basically getting to the post-war cycle lows for volatility, at least in the spot VIX. We could head over to the front month VIX futures contract, and this would be a low close that we've seen, again, since the war started down here. So from a certain perspective, Thomas, I understand if folks are saying, hey, this is actually pretty complacent. We're pricing perfection right now. 60 PE on semis, VIX under 18 with oil at 104, 105. I mean, maybe the market's wrong and it can't continue to whistle past the graveyard. I would get it if people were looking at some long volatility plays right now. Just have them in the back of their pocket. But broadly speaking, a market where volumes are solid, but not too high, not too low, kind of drifty, 1.11 million traded here in ES, and there's positive technical drift in a seasonally strong time of the year, Thomas. I don't think that, and I've poo-pooed seasonality recently myself, but I don't think you want to ignore it right now. The upcoming seasonality for the month of March, or month of May, I should say, is very, very strong. Going back to 2015, the market has rallied 91% of the time, up 1.45% on average. If we went back to the calendar year 2000, for example, Thomas, May has produced a gain of 0.67%. 73% of the time. April, May, June, July, since the year 2000, 1.4% higher, 0.67% higher, 0.07% higher, 1.45% higher. I don't know who says sell in May and go away anymore and can be taken seriously, because July is the best month in that string of 4 months, no matter really how you slice it. And it's 11 for the last 11 right now. So, Thomas, if there's any headline that indicates we're getting to an end of the blockades, the oil is going to start to flow again. I mean, the stock market here, it's looking for the excuse. It has its technical setup. Everything looks like it still wants higher.
Yeah, and I mean, we can't go away anyways. Even if that was true, we have to be here.
Yeah, exactly. We still work. So.
Right. I'm interested to see if Friday, tomorrow's trading, will bring a little bit of profit taking to the equities ahead of the weekend. Not so sure that's true.
You know what I find so interesting? Today's supposed to be the end of the month. It's like, oh, there's going to be end of the month profit taking. End of the month, it's like people are still chasing this thing higher. They're doing the window dressing. They're not, this is not a market where everyone was boatloads long at the start of April. And all of a sudden now has the luxury of like, well, I have so many 20% winners, 15% winners in my back pocket. I can sell out of them. I mean, the S&P 500 is up almost 0.8% right now on a end of month rebalancing day.
Yeah, and I mean, you look at some things like Microsoft today, and then you see that the market ripping higher. Is breadth improving here?
Is breadth improving here? That's a great question. I saw the advanced decline ratio today was sitting at 3.1, 3.2. Let me just pull up the ratio here. There we go, ADRN. It started to come back in a little bit today. I have a 2.9 right now. Most sectors are up for what it's worth. There are a few of these names that are standing out, and there is a dispersion chart that I wanted to share, actually, now that you're ringing the bell here, Thomas. Thank you for the timely reminder. Back in February, we were talking about how it was really, it had been a stock picker's market. You were getting just a lot of choppiness at the index level, but beneath the surface, you were seeing a ton of churn, okay? So let me just double check this here, open you there. That's flipped a lot, where basically everything is moving in lockstep. I have no idea why this is not letting me pop this out, but we're going to have to do this a different way. This is there we go. Okay. Thank you for your patience. There we have it. I'm going to have to use Teams to get this done because it's not letting me pull it off of Teams, even though I'm the one who sent it. Okay. S&P 500 dispersion chart here. This is a joke. Back in February, we were in the 99th percentile going back to 1995. How do we measure dispersion? The constituent average 30-day absolute move minus the S&P 500's absolute move. And that's to say that stocks beneath the surface were moving a lot more than they typically did compared to what the S&P 500 was doing. We've now had this flip where we've moved to the opposite end of the spectrum. In fact, when we think about what's going on right now, the S&P 500 is moving so much more than the average stock. It's basically, you could buy anything and it's going to go up. So you don't need to be a stock picker. You haven't had to have been a stock picker in recent weeks. But that changes, Thomas, right? So before it was just buy anything that's going higher. And if you were lucky to catch that outside of the March low, you've made a buck. Moving forward, though, what are the odds that we stay in this environment where this is since 1995, we have never seen this type of move? The dispersion is the lowest it's been in this time frame in the sample that's provided by Citadel. So increasingly selective selection once more may be the best thing moving forward. You can have a market that rallies without Microsoft playing the part because investors start to look elsewhere. They don't want to go with the concentrated name still. Breadth improvement needs to happen. There are reasons for it to happen, though, particularly if the market's going to break out.
Yeah, it's a good chart. And, if you look at things like the RSP, biggest update for the equal weighted since April 17th.
I mean, Thomas, come on, look at that chart. That's a little beautiful Morningstar candlestick cluster, little rebound guy here. Right off of that 1 month moving average, as we're going to try to get back into the uptrend from last April, we'll call it the late November swing low. There's little signs like this, right? Triple candlestick pattern that signals a turn higher up against the 1 week and the 1 month. There is a little bit of a broadening out here that we want to see, that we need to see. Triple Q is obviously not doing it today, but it's still holding up. So there's more to be done in this market to have full faith in it, but it's a wall of worry, and everyone likes a good wall of worry to climb.
What do you think? How important is Apple earnings for us going forward?
It's a good question. I mean, the earnings clearly were more important than the Fed meeting yesterday. I had to miss yesterday for various reasons, but I think at the end of the day, the S&P 500 was down 0.1% before the earnings came out. And afterwards, we're still charging higher here right now, 72.21 in ES. Apple could make the difference to getting this thing with the next leg up. They are one of the few companies that has not been doing the out of control AI spending. And if we take a look at what's happened with Microsoft and Meta in the past day, it seems like the market's back into the mode of punishing companies that are spending too much without monetizing the demand quickly. And Apple hasn't had such a problem because they haven't really made that type of expenditure so far. So I think that they could just have good numbers and show a consumer that's holding up throughout all of this. And then ultimately the market finds an excuse to give it another lift to the upside. But Apple hasn't been part of the AI story. So I don't know how fundamentally important it is to is that going to impact NVIDIA the way that a Meta or a Microsoft could?
Right. Yeah. I mean, I think, of course, if Apple does well, good for the market. I think if it's not the greatest report, we could still shake it off, keep moving higher.
Yeah, I mean, I think it's a pretty decent day when you have NVIDIA down, 4% right now, and semiconductors are still at 1.4. You're seeing that rotation. Folks aren't taking money out of the theme. They're just taking money out of the highest concentration with the theme and dispersing it elsewhere. So there's a lot of little pieces here that you have to like at the end of the quarter here, Thomas. The end of the month. There's some encouraging signs beneath the surface. We want to see better breadth. We want to see more improvement. But a market that is still respecting the technical momentum should not be ignored, particularly as we're starting to see more of these markets break out on the back of very good earnings. And to that point, Thomas, we are now, I think, 38% of the way through earnings season. Bespoke management, great little stat here right now. Only 3% of companies have lowered their guidance this season. That's much lower than the 8% that have typically lowered guidance out of the 90,000 reports that we've tracked over the last 10 years. This is another great earnings quarter. I mean, maybe that means we've raised the bar so high that moving forward, because we can't have another quarter like this, which was better than the last one, which was better than the one before it, it gets increasingly difficult to justify the valuations. But that could be tomorrow's problem. I'm looking forward to that FactSet update. I think we're tracking now at 16.2% blended earnings growth rate for the quarter, having started around 12. So earnings are just smashing it right now, regardless of what the price of oil is doing.
Yeah, and ultimately markets are forward-looking. You want earnings to be good. You want them to expand margins, things like that. So, I mean, ultimately, at the end of the day, earnings continue to improve, impress, higher market. I mean, there's things in between that can dictate prices, but overall, companies doing well. People are going to continue to have faith in the U.S. stock market, and as they say, stocks always go up.
And you get this new announcement today from President Trump. He just had this executive order come out. You talk about the structural nature of the equity market having almost a persistent bid underneath it. The pension funds are buying 401ks, all these passive flows that are constantly going into the market, DCAing in effectively on a daily basis. Trump's EO today specifically stipulates helping those working class individuals, I think making less than $35,000 a year, to get better access to retirement financial products in the retirement sector so they can begin to save for their retirement moving forward. We'll see what that does over time. More details need to be fleshed out. But we go over to the bond market, which had a brutal day yesterday. We've been talking, Thomas, the past few days about how this thing was kind of just creaking over and leaning over a little bit. And, do you really want to try to catch a falling knife and sell puts below 109.5, 109 when this thing looked like it was getting more downside momentum? Not exactly. I know you're not much of a bond guy, and with the low IVRs as well, compared to equities, compared to some of the commodities, you haven't been trading it here. We haven't seen that big of an uptick in vol, though, the past few days, despite the sell-off in price and the commensurate rebound today. Do you find any reason to start bottom picking here in ZN or ZB?
I don't think I'm going to do that yet, honestly. I only trade bonds when, you're getting really good terms in your trades, high IVR, nice volatility. I could sell premium, further out than you usually can. It's just not too exciting for me yet. US 30 yield, I think it briefly hit the highest point since like July 2025 yesterday. I think that's bad if you're trying to short things like home builders and stuff, ITV, something like that. But other than that, no, I'm not playing it.
Yeah, yields have come back in today, basically tracking the price of oil, and there's really not much more to it than that. We also have the yen intervention today. You look at when the yen is intervened with, and we're going to get there in a little while, but it's overnight during the European hours. First, Japanese officials give warnings. Traders should not be shorting the yen near 160. What are you thinking? And then a few hours later, we get these big buyers stepping into the market. Nikkei confirmed that Japanese officials intervened. But when you look at what happens in the market, right as the yen starts to rally, you get oil prices selling off and you get bonds rallying. So it's almost like this coordinated effort, so that the drivers of the weaker yen, higher rates, higher oil prices, they are undercut. It's somewhat interesting that this happens today, because just yesterday I retweeted someone who was talking about the yen, and I noted in a world where any currency that is a net energy importer is going to have problems right now, and the yen as a net energy importer, as a rate sensitive currency, really has two things that are going poorly against it. So being long the yen is effectively calling the top in rates, calling the top in oil, as it were. That's one of the reasons why I think this move that we're seeing in bonds and gold and the yen today is not something that you can take seriously, because the oil prices haven't come back in and the rates haven't come off yet, that substantially. So, Thomas, the driver needs to disappear. Oil prices are squeezing up because despite the blockade and the end of the war, the molecules aren't moving at all. And that can have the feed-through effect of pushing up inflation expectations, even if growth would theoretically sag on the other side of this, crush to Asian inventories or Asian industry. I don't have a play here right now, but if we do see any sort of end of Iran war headline or new negotiation, yields are probably going to come back in because oil is probably going to break back down. I just don't know if it's something it's worth trading.
Yeah, I'm going to stay away from myself right now. If I do anything, it's probably an iron condor, but I'm not there yet.
Not there yet. I guess we can just go over to the driver of this yen, or this then. Yen's on the mind. We can talk about oil in a quick moment, but just coming up for the treasury auctions, we're making our way now into May. Next week is a fairly light week. It's all bills. It's the week after that we care about a little bit more with the 3s, 10s, and 30-year auctions, the 11th, 12th, and 13th, that Monday, Tuesday, Wednesday. So we head over to oil prices then, Thomas, which still trading above 100 here. And there was that brief move in the European hours overnight where oil did go above 110 here in the CLM6 contract. So it is technically at the session lows. The low is 103.34. We're at 103.65 or so, and it's been a sizable reversal intraday. But oil across the curve has been breaking out. So I bring back up what Treasury Secretary Bessent said the other day about how when you look to the futures market, it's telling you that prices are expected to be lower in the future. That is not what backwardation means. It means that there's a supply problem at the front end. It means that there's not enough supply to meet the current levels of demand. And if you don't address that, then you have to see those prices roll up to spot in the future. And we're getting the roll up across the curve. You go to CLZ6, this thing, 78.83. You mentioned this going up 10% over the course of the week at the front end. It's not quite the same pace of gains here, but we are up more than 10% from where we were about 2 weeks ago, Thomas. You can see it in the N6 contract now, breaking out the July, hitting above 100 today. So pressure here, these flags, these bullish structures, they are continuing to pay dividends for those of us who are taking the view that, maybe the long calls were the right play, Thomas. I've been saying that we should be doing short puts instead. But it's working out. Long deltas are working out. Just matters, I guess, your convexity here. There is the reality that the molecules aren't moving, and so oil can't necessarily fall all that much.
Yeah, I took off 2 sets of short put spreads yesterday on the up move, one in the N6 contract, another in the M6, and I still have a short call spread in the M6 at 110, and I am holding a short put spread, still one of them, in the N6 contract at 80.81. I'm going to wait right here before I put on more positions. If anything, I'm thinking about selling a call spread in the N6 contract. I'm not going to operate or open new trades in the N contract anymore. But I see us, letting off a little steam here or continuing to until we get another escalation, whatever that is. So, I do think a short call spread. The thing is, I wasn't finding anything I particularly liked today, but I'm still hopeful on these. I think the short put spread at 81, I'm perfectly fine with that. We have 47 days to expiration on the N6 contract. Otherwise, I'm just going to hold tight here for a little bit. I took off a good amount of trades yesterday before I really get leveraged up again. Probably going to wait till Monday to do that.
One of the small notes here, not that technicals matter in a headline-driven market, but oil's giving us recently. But since the bounce back just over a week ago here, okay, we're talking about the 21st of April, we've closed above that 1 week average. And you notice this little line here, Thomas? We have just been hugging that thing. So perhaps we got a little too far away from it today. And we're going to find some support closer to 100. But just like with the equity market rally, until you start to see something of the short-term structure breakdown, why necessarily call the top here? I'm waiting for a chance to sell call spreads. I would love the opportunity to sell call spreads again. You want to give me the 148, 150 call spread to sell again? I'm going to take that every day of the week. But the volatility is just not where it was a few weeks ago. And market's in a little bit right now. So when we're closer to 80, selling put spreads, now that we're getting up above 100, we have to be looking for things to do in the selling call spread side. I'm like you. I think that we should be only operating in the N6 contract with respect to that right now. We have a lot of strikes that are coming onto the board here. Finally, we have 32 days. We have 47. More will fill out over time. But I think that's the right place to look. This is total speculation here. But in terms of your concern, given the news that you've been following and also your lived experience in life having served, what do you think the next most likely move is here? Is it that the U.S. and Iran go back to the negotiating table? Or is it that fighting resumes again, if only temporarily, to kind of serve as we've heard recently in years, escalation to de-escalate? What's the most likely path right now? Or is it something else?
Chris, honestly, I want to say I have no idea on what's going to happen. There's so many moving pieces. I think for trading wise, you just have to be watching the prices, how they react to headlines. At some point, a breakthrough or a breakdown is going to happen, right? We're in this, kind of like, not necessarily strategically, but overall, we're in kind of a stalemate with the blockade. We're blocking their blockade, they're blocking our blockade, or something like that. Negotiators, it doesn't look like they're really seriously in talks right now. There's back and forth. I don't know what happens. Honestly, I think any guess I would have would not carry much merit. I'm just going to try to trade the headlines as best as I can.
I think that's the exact right takeaway. We have no idea what's going to happen next. You have to be nimble. If you're trading oil, and especially if you're trading it on a short duration contract, right? This thing is going to move so quick. And so you can be very right, you can be very wrong. N6 to me is the more responsible way to approach oil right now. It's in a little bit today. There's perhaps a good opportunity to sell a call spread again soon. But you can just see, Thomas, back in early March when IVRs were north of 100, we've come in some. We're not staying at the same level of volatility that we had in the past. The market is benchmarking, as geopolitics typically does. We get comfortable with the risk. We know how to assess it, and we start to move on with our lives because something's always happening in the background. Natural gas here is up 5% today, Thomas. That's a little bit of a bullish engulfing bar coming together right now. I know this has been on my watch list. We haven't gotten above 290 in the M6 contract, and the N6 contract is just about 320 is where my line in the sand sits. Do you find today's action encouraging enough to start trying to pick this up off the lows, or is that 15 IVR still too low for someone like yourself when you get volatility so much higher everywhere else in the market?
It's too low. I think this is an end of month, some short covering. People are closing out their short positions. You're getting some relief. It's low, right? The EIA natural gas numbers did come out. I looked at them. I think it was a 79 billion cubic feet injection. So we're trading stockpiles this time of year. We're above the 5-year average. We're pulling away from the 5-year average. The weather very mild, so it makes sense that prices have dropped down here. I'm just not trading it yet. This is a 16 IVR. I want to be playing it when it's a 40, 50, 60 above there. And usually we do get a lot of, good volatility in natural gas. It's just, I'm not going to force myself to trade it right now. I'm going to wait.
I'm the same. Maybe this could be the low. It's a bullish engulfing bar. It's a key reversal. We moved lower than yesterday's low. We were on the pace to close above yesterday's high. I prefer the absolute level here. Give me 320. We get something to work with. We get a little bit of vol. Maybe it becomes, we try to punch maybe a lotto ticket a little bit, something out of the money, a call spread. And if you get a bounce higher coupled with an expansion of volatility, it becomes a nice trade rather quickly. But here it's a counter trend bounce still in the throes of a broader downtrend over the course of many months. We do have another day where gas futures are moving higher, as you mentioned at the start, 360. Given what we've showed on air before in terms of looking at the AAA gas prices, for example, a month ago, they were trading at 390. Okay, so a month ago, where did we have our gas futures? 330, we were at 312. Okay, so if they're currently at 430 right now, and a month ago they were, Thomas, they're still going up. We get another 40, 50, 60 cents here to the upside. People should not be surprised. That's not great news. I don't think the gasoline itself is the problem that we should be concerned about, although filling up a tank now, I think if you're looking at it like a full 20-gallon tank compared to where we were prior to the start of the war, it's another $25 or $26 per tank if Dr. Jim Bianco's research is correct, which I think it is. It's the diesel. That's the input that flows into everything else, Thomas. And those are quickly approaching the all-time highs. The all-time high is set on June 19th, 2022 at $5.81.06 per gallon. And right now, diesel is $5.49.06 per gallon. Why can we continue to ignore this? Why is the stock market ignoring this when in other instances it screams bloody murder when gas does this?
I mean, I think the stock market is going to ignore it until it can't, right? So if distillate stocks keep decreasing, the prices, of course, are going to go higher and higher. There's going to be more inflation impact as we go on. Prices, consumer goods, firms aren't going to be able to eat those margins anymore. They're going to start passing it on. So, the longer it goes on, the more potential pain. But the stock market is obviously ignoring, the pain that's already in there for consumers, because there's a certain amount of give. But I think you could start to get in trouble really, June, somewhere around there. Another thing is, Iran isn't going to want to see all the other Gulf states start exporting huge amounts of product again if they're not being able to. I just don't think they'll tolerate that. And that's when a moment where you could see them lash out or escalate this comes, where they want to definitely keep the strait closed. Maybe, the next escalation is the mark when the market no longer can ignore it. But so far, we saw the GDP numbers, that contained a little bit of the start of the war where energy prices went up. So the data we have so far, it's telling us the economy can withstand it. But distillate, like we talked about, farmers use it for their tractors. 18-wheelers use it to move goods. It's going to increase prices to some degree. We just don't know how much yet.
As we're talking here, oil continuing to come back in and settle below 104, and stocks are charging up to new highs. Thomas, new all-time high here for the S&P 500 in the futures market, 72.31. We could go over to SPX, that's 72.01 for a fresh high. Same thing for NDX, 27,433. And then NASDAQ futures here, not quite to the highs yet, but starting to press the top side of the range and break out. So you're making the case that stock market's not going to care about energy until it affects something. Did it affect earnings in the first quarter? No, not so far. If energy prices stick around these levels for a while, could they impact things? Sure. But if earnings are growing at a 4 or 5% clip compared to the previous quarter, the 1.5% knock on profit margins from oil is going to be subsumed. And it's been subsumed so far. I don't want to rule out another spike here in oil and dragging down the market, but 110 overnight did not scare these stocks that are looking at the money that's being made elsewhere. It's an interesting setup right now. Definitely has a, nervous energy to it, but you need a wall of worry to climb, Thomas. And you just get that one headline here that allows the stock market to get uncorked. Oil prices fall back. Metals are up today on a down dollar, and this is more evidence of that intervention effort that's happening, broadly speaking. Gold here is up 1.6%, silver's up 3%. They both still look like absolute dogs, Thomas. I don't see any reason to be looking long just yet. I see an inside day in silver that's still below its 1-week moving average. I see gold prices that's not quite an inside day, but we can't hurdle the 1-week moving average. What do you do here? These things they're just not looking good.
Yeah, like last week, I'm still not trading these. If anything, I'd say gold has more room to fall. If I had to pick a direction, it would be down. I just think, you've talked about it. The war goes on. These Gulf states need money. Liquidate. What do you liquidate? Your gold to get cash. I just don't like gold. I don't like silver. And if there was a lot of volatility in there, I'd sell some call spreads in gold, but I just don't love the way the trades look right now. So I'm staying out of it. And I got out of copper too today.
That's what I was about to ask, because copper had a little bit of a pullback here, but it's found support at its 50-day, at its 1 month here a little bit. Do you find copper still worthwhile trading? Apparently not.
I had the short put spread. It did well while I had it. It was 5.6, 5.7, I think. I was going to roll it, but I'm starting to not love the chart here. We broke down below the 21-day. Now we're moving up today, but we're not. We're still finding resistance at it. Overall, I'm just going to stick out. Maybe I'll get back in. Maybe I won't. But I just don't love the way the chart looks anymore. The copper supply, some forecasters are saying increasing now with all the economic stuff going on. So maybe we could be in limbo, some consolidation here. But as far as trading it, I am out now of copper. And the first time in probably like 3 months, I think. I rolled this like 3 times, and I just decided not to do it again.
I'm sticking with it temporarily. Today's giving me a little bit. I could basically take it out at a scratch right now. There's 5 days left to the end of the expiration cycle, Thomas. I'm going to hold it at the 1 month and the 50-day. Could have banked it earlier for a few more bucks, but also it literally would have been like $37 as opposed to a $12 loss. I can be patient to let this work out a little bit more. But gold and silver, they just don't look so hot. I know they're bouncing a little bit here. I just have such little faith in them, given what we've seen right now. And we need to see a change in what's happening with oil. The Strait of Hormuz reopens. These Gulf states, everyone can start making money again. And then what do we do with this extra cash and capital? We can start reallocating into reserves. That's probably going to take a little bit there, Thomas. So patience, patience, patience. If I'm stacking gold, right? If I'm just DCAing in and making a purchase in like GLD or SLV, it's a different story than obviously trying to time the next 45 and 21 out cycle in the metals. Let's talk about this yen intervention though, because it is one of the more important things, dynamics that's playing out in the market here today. The yen is currently up 2.5% versus your US dollar, which it hit a new low in the 6JM6 contract tonight. We can go over to dollar yen itself, which I suppose, Thomas, that's perhaps the better way to examine this, given the fact that it is a spot market move. That is a ringing of the bell, no doubt. Right up at the high as we move above 160. I don't have any position in here. Selling the yen at 160 as you get into intervention territory seems tough. But also, I had no reason to look to buy the yen yesterday because oil's still moving up and yields are higher. I'm curious what you think here, because they did just do this at a pretty inopportune time. And the only thing that I could potentially see, given the fact that the BOJ and Ministry of Finance typically do these things alongside US Treasury, is that maybe they have some indication that the US administration is going to do something different with the Iran war to try to end it soon. Why waste your ammunition if oil prices are still going to be going up to 110, 115, 120, and Treasury yields are going to go to 4, 5% on the 10s? Help me figure this out. Do the BOJ and Ministry of Finance know something in terms of today being the timing for this move?
I mean, you could say they did. And, if they did, to have faith and, confidence enough in the U.S. to do that, right? You said it. Japan imports a lot of energy. A weaker yen makes it more expensive. Inflation comes in. The BOJ, they really focus on, wage inflation when they make their monetary policy moves. But, this is, I still don't love the yen here because I don't want to buy something on, an action like this, a yen intervention. It shows that if the central bank had to do something, it's going against the forces of the market. So I don't know. I haven't been trading the yen. A lot of people said it was potentially coming. You'd have to wait for relief for oil prices. They did it when oil prices were moving down a little bit. But like we said, oil is still up 10% on the week. So, if they did it, they felt like they had to take their shot here. But, I don't.
It says a lot.
Yeah. I'm still not trading it. I am short the dollar via, short put spread on the British pound, but besides for that, I'm not playing the yen here.
The dollar yen selling today, it's not going to affect of broadly speaking, folks selling dollars in the market and trying to weaken the currency. So you have an Australian dollar that's sitting up here at highs. You have a British pound sitting up at highs. A Canadian dollar sitting up at highs. The British pound to me is fascinating, especially given where it's turned. We can just get rid of everything else. Tell me that support and resistance levels don't exist in these markets. 134.75, 135 resistance throughout March, flipped over and become support through April. You got to catch up to your 1 month, your 50-day moving averages. And today we bounce off of that with a bullish engulfing bar. We could be closing at a new high here, Thomas. For me, I'm looking at the Canadian dollar right now because I'm at 36 days to expiration. I'm still sitting in the midpoint of my trading range. This has been on for quite a while. It's not really doing much of anything. I need more time decay to get off the board here. The Australian dollar, similar story, but this is more about short put spread than long calls. And granted, the dollar weakening is a sign that we're through the worst part of the liquidity scare phase of the cycle. Would I be chasing this higher right now, though? Not on the back of an intervention as long as oil's holding up. But if we get that headline, Thomas, I think we're going to look back and say, that's why the BOJ intervened. They're talking with Besant to execute their intervention, and he's letting them know, no, now's the time to do it because you're going to have the market forces. The winds are going to turn in your favor. That is, I can't help but think there's a connection there. Otherwise, what the BOJ and Ministry of Finance did was incredibly irresponsible, and they've just lit yen on fire. It's lit dollars on fire to try to prop up a currency that's going to come right back in. All they're doing is buying themselves some time. And I suppose that's, isn't that what Turkey did? Isn't that what Saudi Arabia is doing, selling their gold? They're trying to buy themselves time because this thing is not getting any better. But let's go back to the stock market story here, Thomas. The yen's up 2.5% today, and U.S. equity markets are not down. Whatever concerns there are about a carry trade lifting up U.S. equity markets and being a driver of this move, this is not like what was happening in 2024. And as a bull, that has to be incredibly reassuring that this thing isn't built on stilts, because we've been, how can we get more leverage? Let's borrow that currency that's on fire right now and throw it on the NASDAQ. There is no unwind. So good news structurally. And I think that is something we don't want to ignore here either about the intervention. Stocks have not been hurt.
Not at all.
Not at all. What's your currency trade right now, Thomas? Is it a weaker dollar, or do you use today's yen intervention move, given where oil's trading? Do you use this to pick up longs elsewhere against the euro, against the pound?
I'm the British pound short put spread is all I have in currencies right now. Obviously doing well. I wish like a week or two ago I got into some more currencies on the long side. I don't think the dollar is done depreciating yet, though. I mean, it's based on, a lot of things, what happens with the war and that. I don't want to really trade too much in currencies, because I think ultimately, they're correlated. If I'm long the pound and I get long the dollar, the Australian dollar, you could get hit there. So I'm just playing it pretty conservative, and the pound is where I wanted to get long. It's working, so I'm going to stick with that.
You can't ignore the dollar move today from a certain perspective, Thomas. You're getting nice little candlesticks here, but it feels trappy right now because it's on the back of an intervention. And just because the BOJ and the Ministry of Finance are intervening doesn't mean that the rest of the world's going to fall in line. It reeks of desperation, but we're only going to know in hindsight. So follow this closely. The currency space, when it jostles around like this, it's not easy to do because it's the world's deepest, most liquid market. I'm going to keep the short dollar positions on right now. I could take a few dollars out of the market here. It's all working out so far, Thomas, in that regard. So there's nothing really to change yet. But an Australian dollar, you talk about a currency here getting ready to close up at highs. It's a commodity currency. It is a carry trade currency. It is a risk currency. Pick your narrative right now. The Aussie seems to have a bunch of things going for it that the dollar just does not. What's next on the calendar for tomorrow? Not non-farm payrolls. I thought it was the first day of the month, Chris. How come we're not getting payrolls tomorrow? That's not exactly how it works. So the way that non-farm payrolls work, just for everyone's future reference, to nerd out here for a quick second, the reference week for non-farm payrolls is the 12th, right? So whatever week has the 12th day of the month in it is that reference week. And then you get your non-farm payrolls release the third Friday after the week that has the 12th. So in this case, the first Friday is April 24th. The second Friday is May 1st. Your third Friday is May 8th. It's usually the first Friday of the month, not this time because the 12th fell on a Sunday. It happens. So instead, what are we paying attention to? ISM manufacturing and a market reaction to Apple earnings here, which matters more than really any economic data that's come out this week. Thomas, I can't believe tomorrow is going to be May 1st. Where has this year gone?
Yeah, it's a quick one. They all are now.
Days are long, but the years are going by very fast. That's what happens when you have kids. We'll be back in a little bit here. Get some coffee, some water, some food. It's lunchtime, Thomas. Tasty Live programming continues next. Catch everyone later on Overtime.
Nicky, we are back, son. And you know what that means? Time for a little bit more Tasty Live with, Confirm and Send on this Thursday, April 30th, the last day of April. And what a month of April for the market it has been. Even the S&Ps, if they close around here, it'll be flirting with new all-time highs. They're up 37, but you can see here starting the month of April Fools here, closer to 6,500. We're 7,200, 700 handles on what was probably a 200 handle expected move. NASDAQ up 200, Russell up 4, Dow up 300 and change. You can see here that the Russell is the weakest of the group. The Dow has been the weakest of the group relative on this extremely strong move higher. As you can see here, the Dow has really been going sideways, so a little bit lower the last week or two. Volatility, well, tried to keep its head above water. 2067 last night, traded right around there for most of the day. Under 20 right now, 1985, just making a new low a moment ago. Yesterday, volatility sold off early in the day and then caught itself a bid all day long. We'll see what happens today. Bonds up 10 ticks, 113 makes my put sale look a little bit better. Sold puts went down around 112 and change. But you can see here, certainly didn't catch the bottom. They were almost 3/4 of a point lower last night.
Look at you, bond trader. Good bond trader.
Not my first foray into the bonds. Not very successful usually when I foray in there. Yeah, I've had a couple of recently for option trades today in the bond options that have worked out. We'll see if this one works out too. Bitcoin up around $900, rounding up to 76,700. Ethereum doing the same on a percentage basis, a little bit better, up 36. Oil, probably the weirdest of all the markets here, trading up to almost 111 last night. 110.93 is a high. About $5 lower than that right now. A little bit more, $6 lower than that. 104.87. Just about a buck and change off of the lows, but still high relative, 105 or so. You were talking about...
If we stay around here, I got a monster of a position.
Because you had some upside butterflies that you've been...
They're all right here. The middle of my butterflies are 105.
But you're in...
CL futures, 14 days.
14 days, I was going to say, yeah. Mm-hmm.
So we stay around here in monster of a position. And the USO... like 1x2, 1x3 trades that I've been doing where I'm long June. You know, I've calls in USO that are $30 in the money.
Right, long June, June short May.
Yeah, and the Mays are 170.
Right, so if you have calls for these are diagonal spreads. These weren't short. These are short premium plays, but diagonal, where you were buying the in the money option, selling it out of
at the money. Buying the at
the money, selling it.
2 or 3 of the out of the money options.
Mm-hmm.
You've had this vol crush, which has helped significantly on the shorter duration trades, which are, you know, some of them are being tested, but my net is around 160, let's say.
Hold,
which is right, you know, like we hold here, and it'll be really good. You got a little bit of time left. I took some off yesterday, which was a good. I mean, it was a positive trade.
Sure, you're ringing the register, yeah.
Ringing the register because you got, you know, the thing with diagonal spreads or anything calendarized like that is you have the delta exposure into the up move, but you're also short the volatility in the short term. So if you got both, like that's as good as it gets.
Yeah,
a little bit of a move higher, especially a stair step higher, and a vol contraction from 100 to 70.
What were you waiting for?
That's about as good as it gets. Now it's a question of like, do you want?
How long do I hang in there?
Yes, exactly. That is the question. So I took some off just because it was getting big.
Gold's your big move to the upside, a 2% move. Silver, almost a 3% move to the upside. I mean, the earnings, we've talked all about these, but you got Meta on the downside, down 60. Microsoft down around 9. And that's it on the downside that I looked at. Qualcomm up 16, Amazon up 7, Google up 25, CMG up a buck or two, Carvana up around 35, 40 bucks, Lilly up about 50, Caterpillar up around 40. Go.
Let's do it. Confirm and send.
For a position like a strangle, do you wait to be breached before moving the untested side?
Really depends. Are we talking about a normal stock, or are we talking about like an Intel or a Bloom Energy?
That you have no.
Where they
face strip you?
The testing is day one, and then you're 40 points in the money day two.
Sound a little salty.
I tend to be less aggressive with my roll-ups in general. I like to be a little bit more directional. I find my delta, my reduction in delta via other positions. So I try to look at my overall portfolio more so than each position itself. just because everything is kept relatively small. Some of these things, they grow teeth and they become very, very big. And so it's a tough question to answer. The mechanical thing is reduced by 25%. Sometimes when something goes 30 or 40 points, like 30 or 40% in one direction in a week, there's just nothing you can do but be directional. Like you can't roll up an Intel put for $1 and be inverted. You might as well just close the position. Like selling a put, one single put for $1 against a call that's $30 in the money, it's kissing your sister. You might as well close the position, start something new, and just eat the loss. That's some of those positions have gotten to that point where you have to either be directional and lean with and hold the position, or you close it and move on and lick your wounds.
Well said. Next one, please.
Something that's at the money and you roll up and you collect a couple dollars, sure.
Next one, please.
Following an earnings announcement, how long does it take for volatility to collapse? Does it happen right on the open, or does it take time? I'm trying to decide how quickly I should close earnings trades based on volatility collapsing.
Nobody knows, but if you want to bet, right on the opening or shortly thereafter, within the first couple of minutes, when the markets tighten up, volatility will collapse. That's usually how it happens. Now, if it has a 2, 3, 4, 5 standard deviation move, then no, it's not going to collapse right then there on the opening. But around 80% of the time, maybe a little bit more, usually get that vol collapse.
I usually like to wait a little bit just to market.
Because it collapses and it collapses more. Markets get a little bit tighter, especially if it stays in its range. Sure. I agree.
Agreed. Next one, please.
I understand that with the equities, volatility tends to increase as price falls. But sometimes I have seen volatility so high that the expected move being priced in would mean the stock would have to go below zero. I guess we're talking about volatility. It's like over 100 in some of these stocks. How can that be?
Yeah, so that can be. It just means that there's a bigger distribution than what the current price of the underlying is. When you have over 100% implied volatility, it means that the stock can zero or more than double. And so you tend to see
in a year, though, usually.
In a year.
Yeah, It's not for that. Now, you'll get volatility of 100, 100 plus 200, 300 in the front month. But you'll notice that the options, the put side, is not priced that the stock goes to zero in that time frame. It has some value to it.
For sure. But, so, I mean, it's an indication of a stock that, is priced to move. That is the main takeaway.
Okay. Fair enough. Yeah, I mean, high implied volatility, take advantage of it with the strategy. If it has high implied volatility, it doesn't mean you have to be naked, but it means you can go a lot further out of the money and collect the same premium as if you could be at the money or closer to the money. So take advantage of it.
Yeah.
That's the way to look at this.
For sure.
Next one, please.
Sometimes you guys will talk about being an inside of it being an inside day. Does it being an inside or outside day influence how you trade the next day?
Sure. I mean, you have to have an assumption on what you think is going to happen in the future if you're trading for the future. Now, that future could be one day long. It could be just this day, like we did the SPX 0-day trade yesterday. We were talking about how, you know what, nothing's been going on. We think it's going to be an inside day. Volatility is a little bit more expanded because you've got Jay Powell talking, blah, blah, blah. We put that assumption fit trading the 0-day. Now, it happened to work, but when you put it on, it had about a 60%, 65% probability of success. You put the cards in your favor and you go with your assumption. So, yeah, I mean, does it influence? Sure it influences. Just like anything influences. Numbers coming out are going to influence, not because I know what direction it's going to go, but it's going to move the market and I want to react to that movement. Whether go with it or fade it. I mean,
yeah, and just quantifying inside versus outside is usually just looking at the E-minis, or you could use this SPX if you want to. You look at that expected move going into the day, or right now, like ES. I mean, it's hard right now because ES is moving, but the expected move here is 33 points. So if we were up 60 or unchanged, we would say that's an inside day at this point, just because you got a $30 expected move through the end of the session today. That's how we quantify it, just day to day, and that prices in everything: volatility, the news, the whatever.
Yep. Good job. Good job out of you. Let's take a quick 90-second break and come back. I got much more Tasty Live with Trades and the research team. We'll be back in 90 seconds. Tasty Live. Nikki, we are back, son. You know what that means. Time for a little more Tasty Live with Trades from the research team. Who is our first researcher? Proof of life for his dad.
Yes.
Shark, what's up, my man?
The weekly checkup.
How are you? The weekly checkup. How you doing?
Doing good. How are you guys?
Doing good. No complaints. Everything well?
Everything all good?
Good. The Uber Eats being delivered fine? Everything's good?
No problem. Blow. You got to go there? Come on.
It's the same joke every single week.
I know, but it works every time for your dad. It just drives him nuts, and then he'll text message me 16
It takes
times.
so little to make him happy.
Yeah. Cooking is quite the hobby, though, I will say. And the ladies, they enjoy it.
No, I'm learning a little.
Yeah.
Okay.
Nice.
It is good.
I feel like I can assemble food pretty well. Cooking I feel like is when you have your own recipes.
Yeah.
You can add spices, you can do your own thing,
Yeah.
My thing is like a recipe, I can kind of follow it. 80%,
What about the grill?
80% of it.
What about the grill? You okay on the grill?
I've not used it too much, unfortunately, because
you got to get
apartment living. Okay.
Yeah, but you got to.
I know I can go up to the to the rooftop bar. Yeah.
40 degrees and raining.
Exactly.
Not right now, but the summer's coming. You got
All right, in the summer I'll try it. Okay.
Yeah.
Yeah.
All right, what trades you got for us today?
So instead of doing bullish trades at all-time highs like I did last week, make it nice and simple.
Okay.
So it's actually a post-earnings trade. They had earnings yesterday, right?
Yes.
The IBR is still fairly high. It's like
we'll see how it is today, but I think it's going to be high just the same. I mean, it's a 100 IV rank. It'll probably be up there. Go ahead.
Yeah, so Iron Condor. See what happens.
Classic $10
Classic
wide something here.
Yeah.
The earnings were okay. I wouldn't say they were
The
particularly
reaction
great,
was
but-
certainly okay.
Yeah.
I mean, it's well inside the expected move. Microsoft had almost $30 expected move, and it's down 7.
10, yeah.
So it'll be interesting to see where volatility kind of settles in today. I think this is an interesting trade if you get it on early, because you're probably gonna get a nice volatility contraction over the rest.
Nice. Get in early, get out early. That's the hope.
That's the name of the game. That's what we try to do every single time.
Yes. All right, good job.
I like it.
I think classic mechanics. I like it.
Yeah.
Good job, buddy.
Or we could put on a put spread and hope it goes to the moon. Okay.
Which is probably the thing to do. Good job out of you, my friend. Who is our next researcher? Cool Breeze himself. What's up, my man? Gad.
I'm good. Living my dream.
Doing good. How about you? Everything well?
Love it.
Yeah, living the dream.
Awesome.
Living the dream. I like it.
Yes, I agree.
Are you living the dream?
I believe so. Yeah, all sincerity. Yeah. I got way more than I deserve.
No, you live in the dream.
Yeah, thank you, man. Appreciate
I didn't mean like of all time. I meant like just just me.
Oh my God, absolutely. I mean, working with you has. I mean, I hope it's my legacy. I mean,
It's like the second time we've had family counseling with.
Yeah, no, it's one of my proudest things. Yeah. Because I thought you were going to struggle and be in the streets. Hi, Gad. What do you got for us? I was able to save you.
I got IBM.
IBM.
Yeah,
not the greatest markets, but go ahead.
Yeah, I'm taking a bit of direction on this one. So, given that this IBM had the earnings 8 days ago, that means the IV has been already contract or crashed already, and this trade it's already down a little bit.
Yeah,
and then I'm hoping to go up. So then for that, being bullish into this and put put spreads, but also be small because you never know what's going to happen.
Yeah. I mean, it's a smallish credit there. And
you got the 210, 205 short.
Yeah, 210.
They're a little foot there. IBM.
And it's funny, IBM doesn't have like single strikes either. It's such a
IBM is building a quantum
computing
place in Chicago.
Oh, okay.
Like a mega compound.
They just need an address. They just need. I'm just kidding. I know. I'm just
It's
teasing.
going to have like 1,000 employees or something.
Yeah. No, I know. I'm just teasing. I'm making.
On like the south side kind of.
But IBM on its butt, not participating in this rally. Part of the Dow. Kind of.
I like this.
I do too.
I'm gonna look at IBM.
Good.
Right. Maybe even something for the Johnny trades too.
Johnny trade. It's
Oh, yeah,
a small
that's
one.
true.
Yeah.
Yeah, I didn't think about that.
You can go in that too. So
Okay.
maybe wait on that.
All right.
All right. Good job out of you, my friend.
Thank you.
Who is our next researcher? All right, my friend. How are you?
I'm doing
Mr.
great. How
Kai
are
in
you?
the room.
Yeah.
Again, as always.
Yeah, as always. I'm gonna give you a trade. You have to like it.
I have to like it. Okay.
Yeah.
All
And
right.
you will like it because that's your trade.
Okay.
It's a diagonal.
Okay.
Yeah, earnings diagonal Apple. I'm learning from the master.
Ooh.
I am no master. I am no master. I am just simple servant. What are you
It's
looking
okay
at?
to be a servant. I've been doing that my entire life.
Apple earnings. So selling tomorrow expiration.
Okay.
And the long June.
Okay. 280. Yeah. So.
Yeah.
It's tight.
I know. It's because from months it's not that expensive.
Yeah. This is a cheap shot.
Or do you have any other better strikes to select?
I would probably go. You're going to use a little bit more capital, but I would move this to the 75. You do the 275, 282.5, and you can do it at like $7.70 is what it's marked at right now. Probably be a little more on the open because the stock is up $1. But that way, if you print 285 after earnings, you'll make some money on that trade versus this one where you'll kind of be, scratch, maybe small winner.
Do you like to pay less than the width?
I try to
of the strikes
in something like this where you're buying 49 days out and selling one day.
Yeah,
you have a little bit more wiggle room because even if you got something crazy like the 290 strike move, you're gonna have this one is a little bit tighter, but if you move to the 75, you'd have $7.50 of intrinsic value minimum, plus whatever extrinsic value is in the long option. So if that long option has like $2 of extrinsic value, which would be low, I mean, even the 250 strike put in Apple in June has $4 of extrinsic value. So if the stock were to go $25 to the upside, $300, you probably have $3 of extrinsic value on that trade. You make $3 on the trade.
What do you say? What do you say about you want to pay the debit smaller than the width of the wings? That's not.
I mean,
when you use a 275, that's not possible.
Here, I'm usually buying a 40-ish delta option and selling a 20-ish delta option. So I get 20 deltas. Put side, it'd be short deltas. Call side, it'd be long deltas. Let's say that spread is $10 wide. I like to pay $7.50, something like that, just to give my.
But this one, you don't get it. You get
this one is more.
I'm not doing a 1 day. You're doing a 1 day.
Oh, you're talking a month.
I'm doing more like 45,
this
25 day kind of thing.
So when you think about intrinsic value on this trade, on this spread, there's a time component here. So that long option is going to have some sort of extrinsic value. We're just going to ignore that for now. If something crazy were to happen, Apple opens at 350. Something crazy, or you have an incredible move like Google over a period of time, or Amazon, that sort of thing. This spread intrinsic value is $2.50,
right,
plus whatever the extrinsic value is in the long option. So if you have this sort of tail type move in your direction, and you don't have enough width in between the long and the short, you get into this position where you might be a scratch or a small winner, but
it's very difficult to make money if it moves too fast.
You were right, but you didn't make money, which is like the worst. That's worse than being wrong and losing money. When you're wrong and you lose money, I'm wrong.
You expected it, you were wrong.
When you're right and you don't make money, that is the worst feeling ever. So that's why I try to make them a little bit wider.
Makes sense.
Let's let you go so we have time for my friend.
I like it though. I'm gonna look at something in Apple.
See?
I'm gonna do it a little wider.
Awesome. Who is our next researcher? And our last researcher. What's up, my little black cat?
What's up, Julia?
Amazing. How are you guys?
All right, awesome.
So good.
No, so good. Yeah. Nice. All right. Well, what do you got for us since we're all good?
I mean, since we're all good, get ready to yell at me. I don't know. I decided to put on a put spread in the Russell because I added a call. I know. I know. But, I mean, okay. 261, I don't want to jinx it, actually. 261 is a long way to go in 49 days. Historically,
261 was here last week.
Yeah.
I was at the money.
Yeah.
That's actually true. But I don't know. I've been holding out some love for some small caps. We did have quite the rally, but the NASDAQ just shot way past it. In the last month, the Russell's up like almost 10%. The NASDAQ's up like closer to 15. So it's like kind of lagging behind if you want to call it that, that's a bit of a stretch. I don't know. I just kind of, to be honest, wasn't comfortable putting the call side on this one. Kind of did that in the trade last week. And I just felt more comfortable, higher probability of profit trade, just putting the vertical put spread on this one. So I went with the 261, 253 strikes a little bit tighter than $10 just to kind of like keep the position size a little bit lower, collects 187 in credit. For 613 in buying power. So was reasonably high, but again, where this thing has been moving, I just went with defined risk, kept it a little bit smaller, and hoping for the small caps. I don't know. I've been a believer in the small caps for a while. It's been lagging behind the other indices so much. And so had a rally, potentially a little bit more to go.
The higher volatility of the group.
Yeah, I don't hate the assumption.
I don't hate it.
All right. Good job out of you. I'm going to let you go so we can catch.
That's all I got.
It's okay. You did good. We're going to catch the opening bell. The whole team did great. We'll be back in 90 seconds. Tasty Live. Opening bell's next.
Cool.
Nicky, we are back, son. And you know what that means? Time for a little bit more Tasty Live. That's right. What do we got coming up next? We've got market measure. E-mini S&Ps. Let's take a look at what's going around the world here. Basically unchanged, down 2 on the E-mini S&Ps. Hold on one second. NASDAQ down 85. Russell up around 6. Dow holding up 400. Volatility in by 19 cents. Really not moving. Bonds are up 6 ticks to 112.28. Bitcoin caught itself a little bit of a bid trade up to 77,000. It's 76.7. Oil was catching a little bit of a bid, 106 at one point, 105 and change, still down $1.40 or so. Gold off of its highs by about $30 or so, off of its lows by about $70. Silver up 136 or so. What'd you do?
I just bought back some calls in NVIDIA. I'm long delta net, but I've been doing like 1/2 ratios and butterflies. I'm all over the place. So, but stock is down $15 from high.
Mm-hmm.
So those calls I sold at $3 or $4. I'm closing them now. Just taking some risk off the table there.
You're doing that in Meta?
No, in NVIDIA.
Oh, in NVIDIA. Sorry. Okay. My bad.
All good.
I hear you.
Love is not having to say you're sorry, right?
Love is not having to say you're sorry.
Yeah.
It's true. There was an old cartoon on the newspapers back in the before time when we read newspapers.
Yes. Mm-hmm. Intel move is good. BE move is good.
Which are all lower, right?
Yeah. I'm just trying to go through my stuff because we got some movement today. We got some things moved.
We do. Apple for earnings today is up about $1.20 or so. SanDisk for earnings today is up around $28. Those are still keeping their wings up.
Yeah, but that was up like 60 pre-market.
Mm-hmm. NVIDIA, you close those calls at $1.41. I got it now. Sorry.
Yeah. Okay, cool.
All right. You ready to go?
Sure.
All right, let's do it. Why SPY dominates our research?
Cool, let's do it. Why do you think?
Well, I mean, liquidity. It is the market. Back in the day, I mean, if I can go so far as to say we used to talk just about the Dow, like what the Dow 30 was doing, and then the NASDAQ kind of took a little bit of precedence there too, or the NASDAQ and even the S&Ps, but it's widely, if you're talking to anybody in the business, or even if you're talking to your neighbor, and they say the market is up 5% or down 5%, or today the market was unchanged, they are talking about the S&P 500. They are talking about SPY, SPX, same product.
Yes, for sure.
They're not talking about anything else. They're talking about the market is SPY. So if you're going to do any research, you probably should do it there.
That one you're going to laugh at.
That's your MP you did, right?
Yeah. Government portfolio.
Up $1.
Has earnings coming up too.
It does have earnings coming up. It's got earnings coming up on May 7th, talking about MP.
Okay.
All right, ready to go.
Yes. Why SPY dominates our research. Let's talk about it.
Cancel crash, by the way. It seems like volatility in by 30 cents now.
Yeah. They almost had them. Look at Bitcoin. Bitcoin's having a nice little day.
Bitcoin was up to 77. It's 76.9 right now.
Most of our research that we do, we usually use SPY to display different trends. We talk about behavior, relationships, and correlation among trades and strategies. Recently, we got emails from viewers asking similar questions of why do you use SPY as an underlying in most of your research and segments? Why not Qs? Why not IWM? Why not Apple, Tesla, whatever? Today, we're going to talk about it. Tell you kind of why we use SPY in our research.
All right.
So we are going to do a study with other things. So we're going to do SPY, Qs, TLT, XLK, XLF, and XLE. So you've got SPY, NASDAQ bonds, tech sector, XLK, financials, XLF, and then energy, XLE. We're looking at data from 2015 to 2026. We recorded that daily. We recorded daily volume over time. We looked at the one-day standard deviation of daily percentage changes and the number of option expirations that were available for each. We're going to compare the liquidity of all these ETFs, the price, stability, and risk of these ETFs, and the availability of data over time. This is the important one. SPY, of course, is going to have the most data.
For sure. And clean data, too. A lot of times you'll get in an individual stock, you go through some of these charts and stuff, they get like a bad print somewhere else and then try to get it removed by one of the providers. It's an uphill battle.
And just from a P&L standpoint, like when you're looking at your positions, you're going to, when something is illiquid because you'll see swings in P&L. I get that email all the time. Like, I'm showing this position is $100 winner, but it can't be. What gives? And it's just, you have to look at the options, and that'll tell you the story of what you're seeing. And all platforms, you have to do something. Like you can either market at the bid price, the ask price, or right in the middle at the mark. The mark is usually a good spot to be, the mid price or the mark. But those when you're talking about an option that's $1 bid at $5, that price, who knows where you're trading at?
Correct.
So you're going to see that swing. So even when you consider data for the last decade, SPY has the highest daily volumes on average over time, which shows that it is the most traded product in the market. So you can see just from an average volume standpoint and even a max volume, none of these other products even come close. I mean, you're talking about the Qs at about half the daily volume as SPY. IWM is about 25%. When you get all the way down to even something like gold, which is very, very liquid and very, very tradable, it's only a fraction of the volume here. And even, now, what are gold markets looking like? Probably like 20 cents wide.
GLD you talking about?
Yeah. GLD is probably like 30 or 40 cent wide bid-ask spreads when you're looking at June.
Yeah.
So it just tells the story of like, this is the most liquid spot that you can be in the market is SPY. From a volume perspective, that's just one of our metrics here.
Agree.
So we found that SPY has the lowest standard deviation of daily percentage changes relative to the number of underlyings in its composition. This highlights that the most representative of the overall market, while its daily volatility remains low. So, there are pockets, and we've kind of been talking about this in the market, your SanDisks. Like SanDisk is not indicative of the market as a whole. It doesn't, it's moving 20 or 30% a week. That's not typical for markets. When you look at markets, and even when you think about, broad-based markets over the last 20 or 30 years, 7 to 12% is your average per year. You're seeing some stocks move 7 to 12%
in a day.
Per day.
Yeah.
And so that's not, it's not normal. You can't do studies on stuff like that when you talk about the broad market, because for every one of those 12% up moves that you see like a SanDisk, you'll have other junky stocks that are 12% to the downside. And so using a basket tightens up that volatility of the outliers. It gives you something that's more consistent and more reliable, more tradable on a day-to-day basis.
More consistent. I mean, here you mentioned SanDisk, and I think it's a good analogy. I know the markets are wide in there, but forget about that. SanDisk at all-time highs, market at all-time highs.
Yeah.
Yes, SanDisk, and by market I mean the S&Ps, among friends. SanDisk correlation is actually negative, and negative by a lot. 0.42, which means it has gone higher. It's at all-time highs, but it's done it on days random to what the market SPY has done. So you could look at a SanDisk and you would extrapolate out, say, oh, it's at all-time highs, market's at all-time highs, it must be following the market. No, it's not following the market at all. Matter of fact, it's random.
Yeah, it has no correlation. So
it has no correlation.
Doing a strangle study on SanDisk versus SPY is going to show vastly different.
Yes.
Like it's apples to oranges.
That's right.
And so here, we obviously give you a list of the number of assets in each basket, which, these are all relatively high. I mean, gold is just gold. That's pretty self-explanatory here. Mm-hmm. But here we'll look at the standard deviation as a percentage move. You'll see that, and historically, gold has been relatively tight. Even bonds have been crazy recently. But gold is generally lower volatility than SPY. Has not been the case recently. But you can see across the board, these are all relatively tight ranges, yes. But SPY is kind of your most consistent in the batch.
Agreed. SPY is your most consistent in the batch. And you got to come up with something, right? I mean, you need a
benchmark.
Right. You need a benchmark. Definitely need a benchmark.
So SPY expanded the most. It added Wednesday expirations. And when we talk about just from our liquidity and availability of strikes, it added Wednesday expirations in 2016, Mondays in 2018, and then Thursday and Fridays in 2022. It was the first one to have daily expirations of the batch here, ending up with daily expirations, which is 250 a year, roughly 252 trading days. QQQ was a little bit slower to add those, so it stayed Friday only until 2021, and then we added Monday and Wednesday expiration and finally reached daily expiration in 2022. TLT, XLF, XLE, XLK, and Gold have mostly stayed the same. They've had the Friday expirations for most of this period of time and haven't added any other weekday stuff. I'm sure, in the future we're going to have dailies / midweek in everything, but this just gives you an idea of just how many expirations you've had. The SPY and now the Qs are the only ones that have daily stuff. And when we do studies, we use, a bat. You don't just do one trade,
right,
on a specific day, because you can't. There is no 45-day. 45 days only happens perfectly a handful of times a year. You're looking at 42 days, 43 days when you're rolling and moving positions, because not every month has the same amount of days. So there's a variable there. So the way we do studies is we do, whatever that trade is, let's say 20 delta strangles in SPY. We do them every day. And then you take the cumulative position and smooth it out. So you're not looking at the occur. We can't just say, oh yeah, the trade was entered May 30th. Like that was the trade entry. We're doing one every single day and batching them together and smoothing them out together. Those trades the difference between doing the trade on April 29th and April 30th is negligible. But you need the added occurrences so that you're not stuck in a situation where that exact parameter of IVR above X and this perfect time frame of 45 days, that only lines up once a year.
Right.
You need to have kind of a variable in that. And so you batch them together and you do the study as, hundreds of trades. And so you can put it all together, smooths it out.
You're also looking on the slide, the evolution of the 0-day trading here in SPX as you look at what SPY did to add these daily expirations, weekly expirations that they had. I mean, that slide right there is everything that you want to know about how long it took and how things have come full circle where, we traded quarterly expirations, and now you go to weekly expirations, you go to midweek expirations, you go to daily expirations, and that only happens because of the volume from the customer. If there was no volume from the customer to warrant these kinds of expirations, you would never have had them. It's amazing how it's really kind of evolved.
For sure.
Which, by the way, we haven't done an SPX trade, just to give you an idea on what I know.
It was a fast market this morning. We got up.
You still have a $31 expected move in the 0-day, where yesterday at this time it was closer to $24. So you still got elevated volatility, even though it's in by 35. What's that?
Want to do something there?
Yeah, that's what I'm thinking. Yeah.
Yeah, let's do. You want to do a little tighter spread?
Sure. Sure. What do you want to look at? Why do you want to go tighter? By $10 wide?
Yeah, like $10 versus.
Yeah, sure. So like, let's say 71.30, 20, just to go to the 20-ish delta on each side, or the 19 and 205, 215.
You're looking at ES.
Oh, I'm sorry.
You're such a.
I do this all the time. I apologize.
It's okay.
Well, it's because what I look at for the.
I did 7100 and the
7090
and the 7170 on the upside. 20 delta on either side.
Oh, you did 20 delta. You didn't do 10 delta. $3.30.
Yeah.
Beautiful.
Yeah. 1/3 the width of the strikes, just cookie cutter. I mean, that's what we do every time. Just a little bit tighter on this one.
Yes, you went $10. Yes, I apologize.
Because we've already, we're 45 minutes into the open. So
yeah, I got it.
It put a little bit less risk on.
Understood. Good job.
So just a couple takeaways here. So when we research, we need to satisfy the following requirements for our studies. So you need plentiful and reliable data. You need tight markets, which means that you have to have lots of volume, lots of open interest, lots of strikes, lots of expirations. You need an underlying that is reflective of the broad market, right? So you can't look at a SanDisk and use that as your study because it's just so specific to itself, its sector. It's a very news driven type thing. You have to look at something that's very broad based. We need an underlying that has moderately low risk profile to make a conservative best case scenario. So the study in SPY is not something that you can go and put on a strangle in SanDisk. You know what I'm saying? Like you're talking about completely different products. Well, the mechanics of it and the management and all that stuff, you can relate to other specific underlyings. But just because you see something in SPY doesn't mean it's going to apply to a stock that has binary risk, that has market risk, that has a variable that isn't the same as a basket of 500 stocks. SPY has ample liquidity. It includes lots of stocks in various volatilities. You have some very high volatility stocks, some very low. It all averages out and gives you a nice little basket here and a low risk profile that enables it to be a base for studies. It's just from a liquidity standpoint, from a volatility standpoint, it's a good benchmark, but it doesn't necessarily apply to one-off stocks. You can't just say, because I saw the study in SPY, it's going to work in SanDisk. It's just that is not the same. And you should know that it's not the same because
Sure.
SanDisk,
I think it's a lot of common sense
or Apple or Microsoft, they're binary. They have their own
Totally
risk
agree.
profile.
Totally agree. We have an extra second or two here. You've got earnings in Apple. You have an existing position in Apple. Stock's up $1 and change. Anything you want to do to your existing position, or do you want to look at a new trade in Apple?
I have the 275, 280 diagonal spread. I did at 295 on May 15th, the May monthly, and the May 1st expiration.
May 1 day, yeah.
The 1 day. Does that scare you? It's a small little Johnny.
It's a small Johnny trade. It's a directional trade.
Yeah.
I was wondering if you want to do anything.
Maybe towards the end of the day, we'll take a look at it.
Put it on your list just because you have a position there. XOM.
I did want to look at Shaq too.
SHAK.
Yeah, that was Vanetta.
Vanetta with the new Shaq McRib.
Yes, I kind of like that vibe.
101.5 up 95 cents. Shaq today has been as high as around 102.5, as low as 100.
Earnings coming up.
It does have earnings coming up. It's got earnings coming on May 7th.
Markets aren't great. I mean, they're not horrible, but they're not great.
We've traded worse, but yes, I agree with you.
Some of them,
You're looking at June, or you're looking at May? What are you looking at? May is a lot worse.
Yeah, May. Why is May
May options are horrible.
Why?
I don't know.
What gives? What gives, Dad?
Yeah, I don't know. It doesn't look.
Yeah, I don't know. I don't know if I could do that.
Okay. All right. Let's take a quick 90-second break and come back. Even the S&P's basically unchanged, down $1.75. NASDAQ is your leader of the clubhouse to the downside. Down 125, although it's been about 40 handles lower than that. Russell up 16, Dow up 490. Volatility in by 35 cents, staying depressed today, has not really caught a bid at all, even with the move lower. Bonds are up 7, 112.29. Bitcoin hanging out at 76.5. Oil 105, down almost $2. Gold up 7.
That's an interesting move.
Oil?
Yeah, like a little bit of weakness in the market, you would think oil would
catch itself a little bit more of a bid.
Yeah.
Yeah. It seems like oil has all of a sudden lost its
luster.
Yeah, or at least its market movement to the market. I mean, effect on the market, I guess.
I mean, oil volatility is it's 75 right now, which is still high, but
holding on to yesterday's gains on volatility. But I think you would expect that if I told you oil was trading 105.
All coming in here
in market, yeah. Volatility is down.
We're gonna rally
43 cents. I said
did you
cancel
buy the
crash.
NASDAQ here?
I said cancel crash.
I'm gonna scoopy a little micro NASDAQ here.
Look at you being a two-sided trader.
I'm always on both sides.
I know, just teasing.
I'm not. You're
not one-dimensional.
I'm certainly not dogmatic and
dogmatic. I like it.
Like that?
I do like it.
Yeah. But I think that you have. I mean, like you. Wait.
What was that?
What did I get filled on? The other thing. Oh. Wait. Did you?
I didn't do anything.
Did I double click?
You may have.
Sold
them at
20. Am I flat?
Yeah.
Okay, that was. I don't know what happened there.
It was a good fat finger. You made 10 ticks.
Yeah, I know, but I.
Let's see. Yeah,
that was weird. All right,
weird.
I'm gonna get back in here. I think
you're gonna try.
I think I did.
Oh, you? No,
I think I did in the opposite order when I was
when you were putting in your clothes.
Yeah,
got it. Well, that's good. You caught it right.
Yeah, I caught it for a couple ticks. Now I'm back in. You don't put that.
I won't.
Just the buy.
Yeah.
That was just me being
a Johnny.
Yeah, a Johnny getting a little fat finger mistake there.
Even the S&P's up 2, NASDAQ up down 115. Russell.
I missed the Qualcomm position too. I blame you for that because.
What do you mean you missed the Qualcomm position?
I should have closed it earlier in the morning in the session. We didn't. I forgot that it had earnings and You had that butterfly, and
I mentioned it 100 times.
Did you?
Qualcomm?
Yeah.
It's at the top of my list. Let's take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next?
We got the boys.
That's right. Tasty Trade World Headquarters. We're back in 90 seconds. Let's Tasty Live.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Having trouble understanding what your trader buddies are saying? Here's what a scalp is. We love those quick profits. A scalp is a trade opened and then closed in a short period of time, usually minutes or hours. A scalp is usually done for a small profit and is typically a very directional position. Scalps are most commonly done with future products because of the liquidity and added leverage they provide. But you gotta be careful, it's not always a profit.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Hello, everybody. Well, happy end of April to you. For the bulls out there, April's been a sensation. It's ending sensationally too. Lifetime highs everywhere you look, and it's just feeding on itself. Earlier today, it looks like we might have gotten a really wobbly day, but once it kind of got its mojo, it just has been accelerating. It's self-sustaining growth. For the bears, April has stunk. April has been as bad for the bears as March was good. The sequence has been clean as can be because February, everything was going great for the bulls. March, the war had begun like immediately before, so March was generally down, although in a very choppy fashion. And that ended almost exactly at the end. It actually ended on the 30th. And things started to kind of stabilize on 31st and then was off to the races on April. And April, of course, has been just nothing but up. Even though crude is as high as ever, the war is still much very going on and nothing's really changed, but the psychology has changed and is just feeding on itself. Highs beget new highs. The one thing that saved my bacon today was Meta. As I mentioned yesterday, I was talking about the 4 earnings coming out yesterday evening, and I said, the only thing I've got options position on is Meta. Happily, that's the one that got clobbered. And those of you who watch me for a while know that I trade very, very simply. It's not like, well, this is a 5-leg position, and if it goes this way, it's got a 12.6% probability of doing this. I made $12.62. No, it's just like, I'm long puts. And if the stock gets clobbered, then the puts do exceptionally well. And I'm not selling them either, by the way. They have 141 days left on them. And these are $700 strikes, so I am sticking with these bad boys. But yeah, that's my one bright point today, in a day that really needed a bright point because everything's green in the market today. Across my short positions, I have 27 just simple equity shorts, and 24 of them are profitable. Not for the day, but since entry, and 3 have small losses. I've trimmed away to some degree. I had 43 positions yesterday. Today I've got 34, so transpose the digits. And basically, I'm merciless about getting rid of stuff that isn't behaving itself. This market is taking a blowtorch to any shorts out there. And if anything doesn't cut it, out it goes. So these are my survivors. Because if anything can behave itself in a market like this, it's got something going for it in the bearish sense. So let's look at the charts together as we wrap up this dreadful month for the bears, starting with the IWM. And that gap close yesterday was quite telling. This is the small caps IWM. Look at that, right to the penny. So there is the gap. Fell. Yesterday's low nailed it exactly, and then boom, off we go. Could be a lifetime high close today, depending upon how the next 40 minutes go. But a huge green bar. So yesterday's gap absolutely told the tale. That was support. The spiders, SPY, lifetime high. The old saw here about we had our topping pattern, we had our fall, we had our recovery, and then everything changed with this gap. This completely changed the character of the market, and that personality change has persisted to this very moment. The past few hours have fed on itself. The past few weeks have fed on themselves. There's been precious little weakness. I mean, the last even kind of decent red bar we had was way back here last week. That was it. Otherwise, just green all the way up. And the cubes, which have been particularly volatile today because of all those earnings, record high on that. Another green bar here. We're up, not massively, but about 0.4%. At the lows of the day, we're basically at the lows of yesterday, nothing. Because Google has been a very positive force for the NASDAQ. Microsoft and Amazon have been more wobbly today, and then Meta, as I said, was the one thing that just got zapped. Although it's off its lows. We'll address that in a few symbols from now. Let's thumb through those 4 big announcements yesterday. Alphabet, better known as Google, is up big. It's up almost 10%, which for a multi-trillion-dollar company is kind of a big deal. Lifetime highs, obviously. The biggest pop we've seen in a very long time. And $32 and change net change here. So just really an amazing result from them. This topping pattern turned out to be completely meaningless. It was meaningful for a few days, but it bottomed here, and since then has just been rip-roaring higher. So the big winner was Alphabet. Amazon, AMZ, and this was an interesting one from a charting perspective. Check out this trend line. So the trend line was in place, and we cut below it here. Big gap down, big fall, boing, boing, boing. We bottomed here just like everything else. It went exploding higher. Look at today's low. Isn't that something? Look at that. A perfect tag of that trend line. So even though it's been playing jump rope with that thing, it still has meaning. Sometimes it's support, sometimes it's resistance. It's behaving as support right now. Because Amazon, believe it or not, was actually down at some points today, and down pretty hard, but it found support at the trend line. So even though it's been violated, it still has meaning. So we just, like I say, kind of playing jump rope with it. Microsoft is down. Now, just for clarity's sake, I did short Microsoft yesterday, but it's just a simple short sale. The one I was really sweating bullets over was Meta, because those are options, and so of course a lot more volatile. I was short Microsoft. Microsoft came out with their announcement. It went blasting higher. I'm like, oh well, can't win them all. But after a few minutes, it started to sink again. You get these reversals, especially once a conference call is done and so forth, or once the market's kind of had time to digest what it just read. So that worked out. Even on a day like this, record high NASDAQ, NQ up 271 points. MSFT is down over $17. It's down over 4%. And I'm sticking with short and have tightened up my stop. I've simply tightened up the stop to be anchored to yesterday's low. That is to say, the price gap. And the big winner, thank you, Mark Zuckerberg, for this one, Meta. It is down $53 approximately, about 7.23%. It was down almost 10% earlier. Now, the easy choice would be to take the money and run, because it was down. It bottomed to the penny, $600 today. And my puts have a strike of $700. So the intrinsic value right there is $100 plus, with 141 days left, there's some extrinsic value there too. So it was a good gain. But I looked at the long-term history of Meta, and when there are instances of getting zapped like this, it doesn't like fall one day and then go right on to lifetime highs. It tends to fall for months afterwards. It tends to open up a new chapter. And the same goes in the other direction. There have been times when Meta's been really battered and it gaps higher, and that starts a whole new chapter there to the upside. So I'm going to stick with it unless, heaven forbid, it cross above this line here where that new price gap is. So there you have it. Sticking with it. And I appreciate the aid on this otherwise very green day. Turning our attention to precious metals for a moment. Precious is having a good day for a change. So I'm not beating myself up by my minor short. I will say I don't think it's a trend changer. GLD is up about 1.57%, but we've got a gap right here, which is still intact. Provided it stays below that gap, I think it'll resume its downtrend soon enough. And then silver SLV is up 2 2/3%. Same idea. We've got a price gap there. And I think that as long as that's respected, we should amble our way lower on that as well. Now, energy. Obviously a very big deal because of the goings on in the Strait of Hormuz and all the geopolitical uncertainties. This is a very gap-focused show today. A couple of items here. XLE, that's one of the big ETFs. Perfect gap close today. And that should prove as resistance unless something really big happens with respect to that war. But of more interest to me is XOP, because historically, I looked at I kind of compared the two charts. Historically, XOP has underperformed XLE pretty badly, so it's kind of innately weaker. And the gap, it got close to closing it, but didn't close it, which also kind of suggests some internal weakness there. So what I'm saying is that earlier today I shorted XOP with a stop just above that price gap. We'll see how that works out. As I say, these shorts are being subjected to the most merciless torture by this bull market, and some will survive and some will not. And the survival is based upon whether these stop loss orders get triggered or not. So I'm left with the survivors, some of which include the following. Let's thumb through a few of these short positions. This one I shorted yesterday because Centene, this healthcare company, they have gone up massively, especially about the prior 5 trading days. You can see there's enormous green bars. And I based the short on another price gap, as usual, and a pretty substantial topping pattern, which goes back for years. And so we're reversing on this today. We're getting some weakness, about 1.5% drop today. That's good. That's a start. So that's a new trade, and it seems to have settled down for the moment. Salesforce, CRM, down a little over 2%. Once again, context. This is a very green day for the NASDAQ. Anything that can manage to be down, something's going on. This one really bugged me, Carvana. I showed Carvana recently, and they had earnings last night, and the stock blasted higher. And that was another eye roller right there. And I did a post about this, but for whatever reason, I really can't imagine what, even though the data hadn't changed, the press release hadn't changed, it's not like, oops, this negative should have been positive, nothing like that. It went from a huge gain yesterday afternoon to a big loss this morning. It's down like a penny right now. It's barely changed at all. But you can see this huge red bar. It was down pretty hard earlier. And the main point is that where it was trading earlier was way up here. That was confined to after hours. A couple more. NET, that is Cloudflare. This is also down about 3.21%. And there's that. And there's relatedly Palo Alto Networks, which I don't think is anywhere near Palo Alto, but PANW is off about 0.75% as well. Pretty sloppy chart right there. Actually, a couple more shorts here. IoT, Samsara, which I guess stands for the Internet of Things. This is down 2.21%. Pretty decent top on that one. And finally, CRWD, which is CrowdStrike. And that is off about 1.75% off a kind of decent topping pattern like so. We'll just tidy it up a little bit like so. So not everything's up. There's a few bits of red here and there. A couple of days ago, I made a little speech about NVIDIA because it had pushed above its rectangle, and I'd said, let's keep an eye on if it just slips back into it. That has definitely happened. I mean, wow. Failed bullish breakout, exclamation point. It doesn't seem to matter, judging from everything going around us, but I thought it was worth noting. NVIDIA earlier, a few trading days ago, blasted above its long time range, and it should have just gone flying higher. The next day, it sank somewhat, but still was a green bar. Yesterday, it actually went down, and today it went down pretty decently, about 3.37% right now. It is well back within that range now. Failed bullish breakout, definitely. I'm puzzled because the semiconductor sector and the other semiconductor stocks don't seem to care one bit, but it's worth noting. SMH is the semiconductor sector ETF. It's up 1.2%. It'd be up a lot more if it weren't for NVIDIA, but it's diminished somewhat by that sinkage. But your Microns, your AMDs are supporting it, but near lifetime highs, at or near lifetime high close today. As far as my buddy Bitcoin, it is up somewhat, 1.35%. Assets tend to move together. That's okay. Still a profitable position, but I would definitely appreciate cutting below 75,000. That would help. Tonight is Apple. About an hour we'll see those results. I'm expecting a snooze fest on that one. Very big, very, very, very predictable. I have no position, obviously, but I'm expecting. It was very exciting yesterday with all the earnings. Apple, huge company, but I'm expecting to basically not a big deal. So anyway, hope you had a good April, and I'll be here tomorrow on May Day. We'll wrap the week up with a new month, and thanks as always for coming by. I'll see you then. Bye-bye.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Mikey, my friend, we are back for the last call, and boy, we got another face ripper. E-mini S&P 500 futures up 74. We were just at 72.50 or just under 72.48, the high of the session, about 7 points higher from here. Got the NASDAQ up 260, the Dow up 870, and the Russell up 55. The Dow and the Russell have been the weaker of the group. They are blasting higher today, leading the charge here. Everything up between 1% and 2% here. Oil selling off a tiny bit, 104.81, down $2 and change, a little under 2%. You have volatility futures in by 65 ticks, 1960 on the vol futures. The VIX itself at 17. Wowie. Bonds up 6 ticks. Gold and silver both bouncing. Gold's up $67. Silver up $1.92. And Bitcoin as well getting in on the fun to the upside here. 1,000 on the futures. Spot up 700 and change. Unbelievable. Unbelievable. Mixed bag from the earnings. You know, Microsoft has bounced off the lows. It got just below 400. It's at 408 here, down 16 and change. Meta as well was down like 60-ish. It was down at 600 and change. It's now at 618. Amazon actually went green, is up $3 on the session here, got as low as 256. Google has been the strongest of the group throughout, 381 and change here. Just an unbelievable move in the market as a whole. Unbelievable.
Qualcomm 15%. And what's funny about Qualcomm is if you look at Intel's post-earnings move and you look at Texas Instruments post-earnings move, now today you have SanDisk and Western Digital both reporting today after the close. So, I mean, this market's insane. It feels fake, but at the same time, like if we're getting
the FOMO is hitting,
if we're getting big inflation readings, why not just moon the stock market to offset inflation? Feels like that's what's happening.
Well, I would say inflation also applies to assets, which
100%.
I would call stocks assets.
Yeah.
So like, you know, people say, oh, inflation, it's just like grocery, you know, they think like grocery store and gas. But if you wanted to buy one share of Google last year, it cost you about half of what it costs you right now.
Yeah.
Now that's inflation too. So
Yeah.
I'm with you on that.
Crazy move. Apple after the close?
Apple after the close. You got the next big boy here. Rounds out the Super Bowl of earnings, I've been calling it this week, where we've had just all the big boys reporting. You mentioned SanDisk also having earnings today. There are a handful of others. You have Reddit, Western Digital is another big one. Roblox, if you trade that, Rivian, Roku. First Solar is in there today after the close as well. Before the market opens tomorrow, you've got Chevron, XOM. I'm long XOM here via diagonal spreads, so I have some positions there. Apple, I did a call diagonal spread too, a kind of cheap short duration one. I did a little video on that as well. You get my thoughts there. Western Digital, another one of the high flying memory stock names here too.
Yeah, it's all crazy. And
what are you doing, SanDisk? Like
nothing. Can't do anything.
I know it's
just one of those things. Like Apple, the cheapest way that you can play a earnings announcement and capture implied volatility is with like just a short-term calendar spread. So like I did one in Apple, long the 8-day, short the 1-day, and it was $1.25. But if you get a rally, my strikes are at 280. If you get a rally up to 280, it could be a $200 winner on a dollar debit. SanDisk though is already a $1,100 stock with 120% implied volatility in May. 230% IV in the weekly. So like
you really got a YOLO.
Yeah, even if you're trying to be cost effective and like make it cheap, it's just not possible because the stock price is so high. You're dealing with a couple $1,000 calendar spread for a long 8-day, short 1-day. So
I actually did a butterfly in there.
That works.
I'll push that out as well. I'm trying to work one in Western Digital. I mean, you gotta
in the 1-day.
Yeah.
Okay.
Just a shot. We'll see if we get filled here.
Upside?
Duh.
Duh. 1150, 1200, 1250.
It's just a cheap way to kind of just play into the move here. So in Western Digital, I did the 450, 475, 500. I did it at 341. I had to work my way up there. SanDisk, I did the 1200, 1250, 1300. I did it at $4.25.
Okay.
This is just one day. Just one day, just goofy.
Yeah.
I mean, why not? Everything else goes up $100. Why not this one?
Well, to your point, those are cheaper than they would be if you didn't have massive call skew in both of those products.
Yes.
And you have massive implied volatility in both of those one-day expirations. So if you get the move to the upside and you kind of just pass through that range tomorrow, it'll be a winning trade for sure. A pretty big winner.
Yeah, or even if you get an inside up move or even just a non-movement here, you would think the tail volatility would come out pretty quickly. But these things, I don't know what else you do here. Do you do an iron condor?
I would rather do the butterfly. Like iron condor, if you're doing a one-day iron condor,
you're stuck.
Your max profit doesn't offset your max loss. Like a butterfly, at least you have asymmetric returns.
Yeah,
if you get it right.
And it's a sort of set it and forget it position here. I don't know.
Yeah,
I don't plan to do anything else with it.
You've been insanely active today.
Yes,
it appears.
Yes,
I've done a bunch of stuff too in the futures markets actually.
Oh, so what are you looking at?
In the morning, Glenn told me not to look at my TastyFX account. So that I immediately looked after he said that.
Oh, the Japanese yen?
Yeah. So, but I had a long call 8 days out in 6J.
Oh,
that I just had on because it was worthless. And then I saw the move. It was like a $160 value back.
You like that? You like that? You take the money and run. No problem.
I closed that. And then I got back into a different 6J position where I'm long the June 6.5 strike call.
Okay.
And short the 8-day 655. So both of those expirations settle to the M contract. So it'll act like a standard diagonal spread since they both settle the same contract. And then wheat got into a diagonal spread, long June, short May. Corn got into a calendar spread at 500, long June, short May. Apple, I did that 280 strike calendar spread, long the 8-day, short the 1-day on the call side. And NVIDIA bought the dip. NVIDIA's at 200. Feels like something you just got to do if you want to do it. But the nice thing about this strategy is that I bought June, the 200 strike call, and I sold the 15-day 210. So the 15-day is going to expire before the earnings announcement, which gives you a nice defensive maneuver because the 22-day has the earnings announcement, has way more premium. So if NVIDIA sells off, you can roll from the 15-day to the 22-day, pick up a bunch of value in just that roll. Or if it rallies and you want to make it more offensively charged, you can buy back the 15-day, go to the 22-day, and move that call strike 20 points out of the money for a credit. So
I bit the bullet and just went right to the 22-day.
There you go.
205, 225.
There you go. Yeah.
I'm sorry, the 205, 220 at $7.83.
Yeah. I like it.
Same thing.
15 points wide for $7. The IV doesn't matter. If you get a directional move, it'll be fine.
Yes.
And then SPX. I put on a new iron condor in SPX.
Oh, I'm getting my face ripped off on a 0DT. I knew I shouldn't have touched it.
Into today?
Yeah.
Yeah.
Knew I shouldn't have touched it.
It's all right.
But
it's all right.
Okay. We're giving back some of the butterflies we've been popping off.
Yeah. Seriously. Speaking of butterflies, so I went to the June AM settled 48-day, and I sold the 6,800 to 6,780 put spread, so 20 points wide. I have a butterfly that's down there that's in a similar expiration. If the market crashes, the put spread doesn't matter because I'll make way more on that.
What do you mean the market crashes?
It's not going to. It could. Disclaimer. But sold that put spread, and then I sold the 7,400, 7,420 call spread, and I chose those strikes exactly. It's inside the expected move, but I have a straddle at 7,400 at MES. So if we climb up there, my gains on MES will offset the risk on this iron condor. So basically the Iron Condor is on in this expiration with these strikes because I know I have an upside hedge with my MES position and I know I have a downside hedge with my SPX butterflies. So it's kind of just capturing neutral premium in that range while accounting for where my strikes take on risk in this particular Iron Condor. And a lot of that risk is offset with other positions.
I think I'm going to get myself in continued trouble here.
Now what are you doing?
I mean, we're just taking lotto ticket type shots.
Perfect. Why not?
I'm going to add one of Micron too. Might as well hit them all, right? I mean, if SanDisk goes up, Micron goes up. And we just watched Seagate go banana land.
Oh, you know what I'm going to do too?
There we go. I'm going to do all these butterflies. Pick your poison. They're all the same. It's about 10 to 20% of the width of the butterfly. So if you go $10 wide, it's going to trade somewhere between $1 and $2 in debit. Same thing with like SanDisk. 50 points wide, it's going to trade around, $4 to $5 $4 to $6, 10 to 20% of the width is what you're going to pay for if you're going close to around the expected move on the upside. I just did the same thing in Micron too.
Beautiful.
Will be funny if we hit all this tomorrow, but you don't really need the move to the short strike. You can get a move to the long strike.
Yeah.
Volatility contracts as time passes too.
Yeah.
So,
I'm going to switch over here to the bat switch real quick.
Oh, you got it. Click it.
I want to just show.
You own it.
So this is one of my butterflies I have. That's 28 days out, 29 days out. So this started as a 100-point wide butterfly, 6,900, 6,800, 6,700. Into the market rally, I sold out of the 6,700 and I bought the 6,750 for like $1.50 or $2 or something. What this does is it creates asymmetry to the downside here to where now I don't have a symmetrical butterfly. I have a 100-point wide put spread and only a 50-point wide short put spread now. So as you can see, my theoretical and expiration P&L for this butterfly is significant because I made that adjustment. So I really like these adjustments because I got into this 100-point wide butterfly for $5, right? If you get the market move to the downside, you can sell out of it, hedge the portfolio. If the market continues higher, you can make an adjustment like that for $1.50 or $2 and free up another $5,000 or whatever it is of downside profit potential. So now what I'm looking at here is I can do this again into this massive SPX rally. I can sell out of the 6750 and buy the 6775 for $1.80. So what this will do is it'll cost me $1.90 or $1.80, but it gives me another $2,500 of profit potential to the downside. So all of a sudden, my symmetrical butterfly that can appreciate by a couple $100 into a 150, 200-point sell-off, now all of a sudden, if we get a 150, 200-point sell-off in SPX, this butterfly will be a $2,000, $3,000 winner. And you're only giving up $1.80. So it's a really small way to just emphasize that downside move.
Yeah, it gives you a little bit of tail protection.
Yes.
It also, into a vol move like we're having right now, it's a relatively cheap adjustment. And what I mean by that is like all else equal, if volatility was 2 or 3 points higher, that adjustment probably costs you, $1, $2, $3 more to do, regardless of where we are in the markets, whether we're 100 points lower or where we are right now. The volatility being low is helping you in that it makes that cheaper adjustment. So if you get a 50-point down move, but vol goes 2 points higher or 1 point higher, it actually is going to help you in that regard too. You don't need just the tail move to the downside. If you get a pop in volatility, it hedges you another $1, $2 maybe.
Exactly. So now if you get a big washout in the market, this butterfly by itself that initially cost me $5, now it's probably trading around $1,000 in risk now because I've moved this up a couple times. But instead of throwing on another butterfly and another butterfly and another butterfly, I'm just making adjustments to this existing one and making it heavier of a delta move to the downside, where if we do get a 400-point move to the downside in SPX, this single butterfly will offset all of my risk to the upside with all my other positions that I have. Because I wouldn't take 10 grand in losses on the existing positions I have because I don't really have that many positions because I've been closing them to the upside.
So what that's called? Trading.
Yeah.
That's called
trade management.
Trading, making adjustments, doing something that gives you a little bit of convexity.
Yep.
I like it.
So that's that. Getting larger hedge opportunity to the downside for a minor cost.
Yes.
Relatively speaking.
I do want to say we have Fast Market tomorrow. So
Yes.
tastylive.com/Fast Market. Please give us your trade ideas. We need them. We love them. They've been freaking bangers for the most part. Not all of them. But they've been great. So please, tastylive.com/Fast Market. We also, Vanetta will be out tomorrow. She will be in parts unknown, gallivanting.
She is an adventurer.
Yes, for sure.
The last IG post I saw from her was her like jumping off a cliff.
Yes.
At Torrey Pines, I believe.
Yes.
Yeah.
Yes, that's exactly where it was.
Wow.
She's not going to be jumping off cliffs, from what I understand, but she will be out in the wilderness gallivanting.
Nice.
But she won't be around in the morning, so we're going to do like a little special edition. We're going to do some market talk, of course, but we want to take some questions from the YouTube chat. So if you are on YouTube and you are around in the morning and you want to come by, nothing's off limits. We could talk sports, we could talk gambling, we could talk whatever you want. Me and my dad will be around for that. And I've got a couple spicy extra recap slides for us. They're not exactly a recap, but one of the things that's been interesting to me, and I've gotten a lot of questions about it, we've done segments on it, is kind of the difference in price action from small caps versus big tech. So I'm going to be looking at IWM and the NASDAQ, also just the NASDAQ and SPY. And then I'm also looking at just the craziness of the oil move, where we've gone pretty quickly from a negative or no correlation in oil and the market to a pretty positive correlation, which is pretty wild to see. And just really the moves, the magnitude of the moves in both oil and the market have been so strong and so correlated. It's something that I don't know if we've seen in quite some time. So I got some interesting correlation matrices for you. I have some interesting price action, price move look backs for you as well. So should be a good little morning session. So come hang out with us because we need the comments, chats, all that good stuff. Trade ideas if you got some. We'll definitely be doing some cool stuff in the morning tomorrow.
Beautiful.
As we chat here, going into, should we bring back the 10-minute ramp? I think the 10-minute ramp is back.
I mean, we just rallied 5 points.
10 points, yeah. E-minis at the high of the session here, 72.50. Who would have thunk it? NASDAQ up 267, Dow up 881. You got the Russell up 97. 57, 59 now. Oil at 105 and change here. It stayed stubbornly bid here throughout the session. Volatility as well, 1950 here. The VIX itself at 17, just unbelievable.
Yeah. TLT at 85.50.
Bonds near the lows, 112.23.
Yeah, it's very interesting to see. 10-year yield down to 4.39, half a percentage point. But vol, so the VIX is down to 17.
Does it feel like that?
Not really. I mean, but the VIX futures are still in the 20s, which is very interesting. But regardless, VIX is in the teens. Vol futures are in contango. It feels like it shouldn't be blast off mode, but I mean, we're already at 72.50 in the E-mini futures, which is wild. Just wild.
Very quickly, too.
Yeah.
Very quickly.
Yeah.
I'm going to be interested tomorrow into the close because we know that, the straight is open during the week. During the weekend, it really closes down. Like that's when stuff starts to pop off in the Middle East. So it'll be interesting to see what the reaction is to volatility going into the weekend because we've had such a big move in oil here. I'm wondering if we get a little bit of a bid in volatility into tomorrow. But nothing has stopped this equity train. The AI narrative has trumped everything. The money that is going through those pipelines is astronomical. So we'll see if that is enough to kind of continue this moving forward. But it'll be interesting to see volatility tomorrow. I lean toward volatility back above 20 on the vol futures, but who knows? If Apple comes out and knocks it out of the park, why would we have higher volatility?
I don't think we would.
Does oil matter to Apple?
I don't.
To NVIDIA?
Yeah.
Chips? Does it matter? It matters to us.
Yeah.
That's filling up the gas tank. It is quite the sight to see the prices, but does it matter to the AI revolution?
No.
I don't think
I would argue no. But yeah, I mean, some of these other energy names, natural gas popping off today. We bought a micro contract yesterday, seeing a nice rally today.
Of natty gas? What's the micro?
MNG. Yep. Yeah, sub 3. Okay. Feels like a fun buy.
I was laughing with my dad because you remember like a month ago when they were talking about the Qatar LNG facility that was like knocked offline, or the damage so much that it's going to take 6 months or a year of supply off the table, and natty gas is at the lows. You know what I mean? Like you can't.
Yeah.
The news headline. If you gave me the news, and we've said this a million times, the news headline it does not tell you where prices are going.
No,
at all.
No. And I think now even more so, like there's so many news headlines that I'm seeing now that are like the valuations of these companies is higher than the .com bubble, blah, blah, blah.
Blah, blah, blah.
Some people are saying like we're going to crash in June or we're going to crash through the summer. There has to be some massive catalyst for that to happen, because right now we're at all-time highs in the market. We have a contango through all the VIX futures contracts. That's what I care about the most. And that all says we're not crashing. We could just drift higher. But these things can change. If you get a 200-point sell-off and then another 200-point sell-off, all of a sudden your vol futures are flat.
Yes, there is a wall for you. I will give Mr. Vecchio a shout out. Please don't sell in May. You buy through July. That's the new phrase. Buy through July.
Yeah.
Don't sell in May and go away.
No.
Buy through July.
Yeah.
Then you could sell.
You should physically go away in May and go.
Yeah, and go enjoy, touch some grass.
Yeah, touch grass, do whatever.
Play some golf.
Yes, exactly.
Yeah.
But yeah, these markets are wild. They're moving, and there's nothing that says that we should expect this to stop.
Yes.
To the upside or downside.
So to recap, I actually just followed you into a natty gas.
Nice.
Position here on the micro NASDAQ contracts here, MNG. Going into the close here, volatility at the lows, oil kind of middle of where it's been trading, 105. You got obviously equities at highs here. Oil or gold and silver both near the higher end of where they've been trading. Bitcoin as well at the higher end of where they've been trading. I'm going into the earnings extravaganza with some Apple long delta, but small diagonal spreads. Kind of like yours, but I'm using the May monthly, the 275 short, the 280 in the weekly against it. I did it at like $3.50. And I've got the butterflies in the memory / RAM stocks. Because everybody was like, it's not memory, it's RAM. I'm like, all right.
Tomato. They both moon. Everything's moving.
Yeah.
But yeah, I posted that SPX adjustment. So again, moved to the long option 25 points higher, which is another $2,500 of max profit for $1.85. So a small adjustment that really frees up downside hedge with just one butterfly if it happens. But if it doesn't, that $1.85 means nothing because all these other bullish positions that I have will offset that in a big way. And then, Microsoft into this sell-off near the lows. I had the 450 one-day short call that became worthless immediately. Mm-hmm. And then I rolled it down from the 450 one-day to the 425 8-day. So now I have a long 15-day 425 call, a short 8-day 425 call, but I picked up another $2 with that adjustment. So just looking for a reversal of this move. If we get up to 425, I'll close all of that, and I'll leave on the 500 strike calendar spread that I have, just because if we reverse and the market shows us that we're in calm territory, I want to have that longer term calendar spread because it's out in January, long January, short September.
I like it. I added some long delta in Microsoft 420, 450 diagonal spread in July, June.
Perfect.
I also legged out of, I sold some extra AMD puts against my in the money call that I have at 300, I think is my AMD call. Yes. I just legged out of some of those because they went from $9 2 days ago to $5. It's not a positive trade. It's a positive trade on that specific option, but I am net short AMD here into what has been an incredible rally. Just trying to make a couple bucks back. I probably have to close out of some of these the Intel puts. I'm going to hold those for a little bit. Unbelievable. SMH semiconductors. What a move. What an incredible move.
Do you know if SanDisk or Western Digital have earnings right at the close at 3 o'clock?
I can give you the numbers. SanDisk, 5 minutes after. Apple is 30 minutes after the close. It's always 30 minutes stock. It sucks. Reddit is 5 minutes after the close. Western Digital, 5 minutes after the cose as well.
So right when the bell hits, go get your water, go get your popcorn, come back to the market, get some movement.
Yeah. E-minis here, up about 80. We're just under 42.50. The NASDAQ up 275. tastylive.com/fast market. Give us your trade ideas going into tomorrow. We'll take those at 8:40 a.m. Central Time. And come join us early in the morning. No Vanetta, so we're just going to be hanging out, chit-chatting. You going to join us?
Tomorrow morning?
Yeah.
I could.
No, it's okay.
I mean, digitally, I won't be in the office, but...
No, not in the office. I mean in the YouTube chat.
Oh, yeah. Sure.
You can come like around.
Splash around in there.
Come around the open. If SanDisk is at 1,200, give us something.
Yeah. Sure.
Very good. Well, we got E-minis here up 76 into the close. Just a couple seconds here until we close out. Volatility futures 1950. The VIX ticking below 17. Just incredible. No vol. It's been up only. We'll see if that continues into tomorrow. We're going to take a quick little 90-second break, though, and give you more Tasty Live after this. You got Chris and Ilya coming up next for overtime. We'll see you tomorrow morning in the YouTube chat. Come hang out with us. Peace.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
End of the month. Best month since 2020 for stocks. It's still Thursday, April 30th, 2026. This is Overtime. I'm your host, Chris Vecchio in New York. He's your co-host, Ilya Spivak in San Francisco. We're here to take you through the next 30 minutes as we wind down this trading day and this trading month. And it was a month to remember, Ilya. Stocks, they surged and they closed out the month with not a rebalancing away from stocks because they rallied so much, but folks couldn't get enough of them into the close. 72.43 all-time closing high here for the S&P 500. Same thing for SPX. Same thing for NDX. The NASDAQ futures are close. We're there on a closing basis now. So breakouts abound. The Russell 2000 also today, your leader up 2.2% following Caterpillar's earnings. Caterpillar talking about their double-digit margin growth rate, which guiding higher than the 7% that they were looking for previously. Utilities, industrials, name something, Ilya. It was probably up.
It's a big day.
Right down this month. So a very big day here on the other side of our earnings from 4 of the Mag 7 names. We are waiting on Apple here after hours. So we'll keep an eye on that as well as we wind down this earnings season, so to speak. Once we get through these, then it's just all about NVIDIA moving forward, and that comes in a few weeks' time. Ilya, what do you say about this today? Is the more surprising news the S&P at 72.45, the intervention that we have overnight in Europe and going into the North American morning? Is it the fact that we have oil trading at 105.60 and nary a concern in the world?
I mean, I think you look at this and you say, okay, everything that's happened makes some sense in the context of the news as it presents itself. So you have a situation where the hyperscalers told you a hyperscaling story. Their CapEx numbers are off the charts. Their earnings were fine. Most of them were lighter on revenue than they were on EPS. And all of them had tremendous spending plans. Of course, that makes sense. We can see that AI usage is surging to the point where the entire thing is starting to creak, and OpenAI is having to cancel some services because they don't have enough compute. So the Sora shutdown being kind of the obvious one. So we get the GDP numbers. They show stronger contribution from non-residential investment than they do from consumption, which is massive. I mean, consumption is 68% of the total. Non-residential investment is closer to 20. And yet in the past quarter, there was a greater contribution from that 20 than from the 68 to overall growth. And that's, of course, because all these hyperscalers are trying to build all the data centers they can because they're running out of compute. So, but none of this is new. We know all of this. The question is really, why is the market prepared to embrace it? Which part of it is new? What isn't priced in? What don't we know? On top of everything else, we also have global central banks becoming a lot more hawkish. From the Fed to the ECB to the Bank of Canada to the Bank of England. Everybody much more hawkish. Rate hikes on the board for the ECB and the Bank of England this year to the tune of 0.5%. The Fed's likelier at this point to hike than cut through October of next year, according to what the futures are telling us. They're biased to standstill, but the probabilities that that standstill resolves to some policy change is much greater that it resolves to hikes than cuts until basically the fourth quarter of next year. None of this looks likely to be resolved soon because the inflationary pressure in oil only seems to be getting worse, not better. And you can see it in the bonds, and you can see it in gold, and you can see it. You would see it in the dollar, but Japan decided to intervene and scramble the entire dollar narrative for a day. We'll get back to the dollar and whether it's going to start to re-engage later, but obviously there was a big stick in the spokes here today for its reaction function. But again, with all of this making sense and all of the headwinds out there and everything as it presents itself, what don't we know? Why is the market rallying? What is it extrapolating? And I think the thing that you have to really pay attention to here is the volumes are terrible. This week has seen some of the worst volumes we've seen since the lull on Easter. And so you look at this and you go, okay, is the market just huffing fumes here on the last day of the month before the last big announcement from the big tech earnings? It's notable that in Asia overnight, stocks couldn't really buy a vowel. They tried to rally in the wake of these tech earnings, and then all of it failed. It's really with these US GDP numbers and showing a rebound and showing this strong investment component that we get stocks sounding the all clear. But is it all clear? It doesn't look like there's anything here that's new or novel or sustainable. Instead, it looks like we're going to ride into the end of the month without hurting the high watermark for everyone. We'll see what Apple does. But tomorrow, you might get cooler heads out here. And the lack of volume behind the entire post-ceasefire in Iran melt-up seems to hint that.
Just keeping an eye on Apple's here. It's not due out for a little while longer, but right at the end of overtime, in fact. So don't expect to see the share prices jump. Ilya, we've been talking about a stock market that has positive technical drift. Mm-hmm. The volumes have been low, but volatility has come in this entire week. If it's the S&P or the NASDAQ, we've seen that same trend hold, which has been a 1 week moving average, holding us support on a closing basis every day since March 31st. It happened in the S&P, it's happening in the NASDAQ, and now both are closing up at highs after a period of chop here. I mean, bears had a chance in the NASDAQ a few days ago. You got that nice little potential topping, but the momentum never broke. And now it didn't work. It just goes to show that you can't ride the candlesticks here aren't really giving a good indication. It's the fact that this is a market that has exceptionally strong momentum.
Except for there's no volume behind it, apparently. And that's another reason to question the candlesticks.
Sure, yeah. So the volumes have been fading. The volumes have been fading, and there's no doubt about that. Unless we have a really strong volume day tomorrow, this week's volume is going to be pitiful compared to even the prior 2 weeks, which have been pretty low.
Right.
Where relative to where we were at the onset of the war, or at least as we were making our way through March. Nonetheless, seasonally strong period ahead. Low volumes, low volatility, positive technical drift. Mm-hmm. And we have all these bricks in the wall of worry right now. The Fed can't cut until late next year. Oil's at 105. Bricks. Fed independence is gone. Blah, 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 blah. So many bricks. To doesn't it inform you a bit at the end of the month, instead of people taking profits in the stock market, we were buying it up and jamming it higher into the close? It's almost
who
as
wants
if
to take
folks
profits? People want to have the month come in with great performance numbers. It has to close.
It also means
people
that they
are
were
trying to
buying
get paid on the performance.
But it also means they were also doing some window dressing here to help further push things along.
Probably.
Which I think is more evidence of this whole chase dynamic that's playing out in the market right now, where folks are underinvested. Major hedge funds have not been on the right side of the move.
Very,
so
very
they're still
possibly
playing.
so.
That's just like last year. I don't want to dismiss that psychological phenomenon, but volumes have receded. Okay. So we're getting kind of back to a normal market. We have all these issues in the background. Why does the market not care about oil at 105 right now? Why does it not care about Brent starting to trade towards 120 in the front, 110 in the July?
Well, I think the reality is that it does. I just think it's not prepared to express this view yet, and that's why the thin volumes. Because everywhere else, you clearly see the markets care. You clearly see them care in every other major asset. They care in gold. They care in yields and bonds. They care in currencies. They care. They just cannot, for the life of them, get the stock markets to play along. They got the stock market to play along at the start of the war when it locked in with everything else. On the way back, the moment stocks heard the word ceasefire, they decoupled. And you can't help but wonder whether the reason they did that is because there was a tech earnings batch immediately in front of them. And they wanted an excuse not to stand lopsided in front of that event risk. You notice that the drop-off in volumes in the S&P happens not with the initial rebound. It happens when that rebound crosses back into the congestion range before the war. The initial correction on the ceasefire news, that has good volume. And that tells you, well, yeah, it is better. It's objectively better for market sentiment that there is a ceasefire versus there isn't one. That makes sense. But when you cross into starting to erase the war trade completely, volumes disappear.
One of the concerns that the market is kind of pricing in right now, just as thinking about this from an inflation perspective, TIP is the iShares Treasury bond, the Treasury Inflation Protected Security ETF. Okay, yeah. And and 5s, 10s, and 30s are what TIPs are offered in. I'm looking at IEF here as the denominator because that's 7 to 10, and I think that's probably the best place to look if we're going to look at TIPs as a comparison. Mm-hmm. So, how are TIPs trading relative to your regular fixed income treasury, your regular product? They're outperforming by a good deal over the past few weeks, especially since the war started. We've seen that this ratio has actually moved to its highest level since mid-22. Note what happened in 22 when we got the Russian invasion of Ukraine going on. You get this big surge over several months where it peaks in April. So you get this 2-month window where this ratio surges, and then inflation peaks 2 months after that in June. And we have this ratio moving back up into that same territory right now. So just anticipating higher prices right now, to me, seems like that's something we should very much be on board with. There's a few reasons why I bring that up here today, Ilya, because bonds bounced today on a day where oil prices are looking at 105. And I can't help but disconnect the fact that this may have a lot to do with what happened in the Japanese yen and the intervention that occurred overnight. But what inspires me more and what gives me more confidence as an equity market bull, at least in the short term as it pertains to the intervention, this didn't derail the equity market today.
No, it did not.
I go back to August 24 or July 24 when the yen is rallying, and everyone's screaming and unwind to the carry trade. Stocks got hit hard. And I know that you take issue with that narrative because the yen was rallying throughout July and the stock market didn't crash until the end of July. It didn't crash. It fell like 5, 6, 7%.
It lost some steam, let's say.
But we do see that when we have that August 4th going into the 5th open, that Sunday into the Monday when the yen skyrockets, right? And the carry trade is finally wrung out of the system. The U.S. equity markets, they bottom out. They fall flat on their face. And then that's the low. And so I bring that up because I'm thinking back then you have a carry trade that's helping lift up stocks. You're borrowing in the cheap currency. You're using it to buy U.S. tech stocks. And so as the yen strengthens, you're forced to sell your tech stocks. And eventually the yen has its wipeout move, and therefore stocks, the leverage leaves the system, stocks are sold off. We clearly don't have evidence of that here in the short term.
No,
right?
In the short term, we don't.
We have rate cut odds pulling back. We have treasury yields that have been moving up. We have a yen that's skyrocketing, and stocks do not give a dang. And that probably has to be pretty constructive, right? Seeing how sensitive the market has been to these cross-asset macro flows in the past. And on a day where we have this dislocation in the yen, stocks shrug it off by the end of the day once the yen stabilizes. Once the yen stabilizes, stocks shrug it off. And now we're here at 72.44 after hours with your Russell being your top performer. This is probably an opportunity
and I think
to
this
sell
takes us
rally
to the same
bonds.
conversation.
Yeah.
I mean, this takes us to the same conversation. Is this resilience, or is this a low volume melt up at the end of a month to goose everyone's performance? And I think I don't think we have that answer. But there is a very compelling absence of volume behind these moves. Going into today, it's a very telling thing this week. The up days have been the weak volume days. The down days have been the stronger volume days.
Oh, people panic sell, they don't panic buy, right?
Well, that's right. And so maybe one of the smartest things I've heard in a while this week came from the great Paul Tudor Jones. He was giving an interview, and he was saying, well, look, what happened in 2000 was all these people in all these private companies ramped up telecoms, and the valuations of their firms skyrocketed. And when those firms finally IPO'd, those people said, oh, goody, we're rich. And they sold because they wanted to monetize their winnings. The scale of that kind of a process in the current environment, if everything goes right, could be astronomical, relatively speaking. There's so much more market cap baked into AI. That's if everything goes right. That's the good scenario. That's the everything works scenario. We're looking at the IPO, of course, coming up of SpaceX, which now envelops within it Grok AI or XAI, whatever Elon wants to call it these days. We have already the constraints that we see in compute hampering OpenAI itself, hampering Anthropic, which has had to get users to use less in peak hours and throttle it. So it's not like we don't know what the creaking is. All of this concern about the price of energy, we know how hungry AI is for energy. That only makes things harder. All of the tariff stuff and the trade wars, that makes things harder. AI is an incredibly global supply chain with mostly single points of failure. Not a lot of substitution there for Netherlands nodes or Korea or Taiwan or China for that matter. And so when you get these IPOs, I mean, Anthropic is coming up, OpenAI is coming up. Again, assuming nothing breaks and everything works, this market is vulnerable to a massive sell-off just because people want to get rich.
Can I tell you what? One of these other encouraging signs I've seen here today? That NVIDIA is down nearly 5% and SMH is still up 1.4. If there was any evidence of taking profits and winners, a bunch of folks were like, "Yeah, we're gonna rebalance away from NVIDIA, but we need our semi exposure, keeping the money in the space, capital sticking around." More capital.
We talked about this with Nick yesterday, and names like Micron and kind of the place where the shortages are. So the places making GPUs, the place is making CPUs, the place is making memory. And of course, NVIDIA has been the high flyer because those GPUs are the cream of the crop. But memory, processors, all these other things, there's stuff there that hasn't run like NVIDIA has run.
And now you're getting rotation within the sector away from the
Very possibly so.
Component and into everything else. I mean, I'm pulling up some of these names here, Elliot. It's not like a bunch of them had Micron, which has been a big runner. It was down today. But you look at Seagate or AMD or ASML, they all had nice sessions.
QCOM.
Right? We're still waiting on those Apple earnings. They're out for a little bit, but the industrials rejoining the party here, bouncing off of that trend line, Ilya, that we've had going back to the lows, April 25, November 25. We're rebounding through them. We get that bounce yesterday at the 1 month, and now we're cycling into a former area support turn resistance. Caterpillar had just tremendous numbers today, up 9.9%. There's a growth story here. A lot of it for them is the data centers. So all of a sudden, Caterpillar is now an AI story again, which is delightful.
Somebody's got to dig the holes.
Someone's got, yeah, right. The world needs ditch diggers too, Johnny, as they might say in Caddyshack. Caterpillar's still in that void. Oh yeah, I'm still optimistic. I have my short-term play for a move to 7,300 on. I hope it plans out in the next 4 days. Otherwise, it's not bad timing. Good idea, maybe bad timing. So what's another percent between friends over the next 24 hours? That would be nice. Beyond there, I think that the one thing where you and I are in agreement in the short term, it feels like Bitcoin could be getting ready to take off again.
I'm still long there for sure.
I know this is a really wonky looking chart, but just I bet.
It's really clean, though. I mean, there's the range top and the trend line, and it held.
If there was ever a place to get long,
top.
This is where you would get long. If you haven't been long yet,
yeah,
April 25
I'm long
low,
already.
50 day, 1 month.
I'm looking to add maybe here.
Me too. And this is actually the place where I feel like there could be a little bit of catch up right now. Not for nothing. I haven't seen this discussed much, but they're talking about the war going on for as long as it's going to go on. Warsh and Besant, maybe they're besties. Could you foresee a yield curve control scenario coming out of U.S. policymakers as a result to try to help tamp down borrow prices so high?
I'm not sure what that would achieve.
Well, didn't we do that during World War II? So it wouldn't be unprecedented.
Wouldn't be unprecedented, no. We know from the case of Japan, which attempted it most recently, that it doesn't work very well in the modern environment.
I think it worked fine. Once they stopped yield curve control, the problems began. No?
No, definitely not. They were forced to abandon it because it failed. And when the spreads between where they thought the 10-year yield was and where the market told them the 10-year yield was became untenable, they had to say, oh, sorry, we give up.
Yes.
So, no, it didn't work. It failed spectacularly with fireworks, pain, and mayhem. But when we look at the current situation, you sort of wonder why they would need to do that. The issue, ostensibly, is that Kevin Warsh comes in and he's not going to be able to cut. He's also going to have a really great excuse. He's one voice on the committee. So once he's in, he can tell the president all kinds of things. But once he's in, he can go, hey, listen, man, I'm voting for the cuts. These guys won't come along. I've got to build consensus. Otherwise, I can't do anything. And it doesn't look like the markets really anticipate a dovish Fed. You look at Fed funds futures, and again, the markets think stand still for the rest of this year. The likelihood that there's no changes in the 90s all through the rest of this year, 90%, 90 odd. Once you get into next year, January through October, there is about a 30% chance of a hike at each meeting, less than a 20% chance of a cut, favoring standstill. So you look at the mix and you go, oh, well, the market doesn't know what's going to happen, but it thinks the likelihood of a cut is maybe, or a cut or hold, let's say, is about 50%, and a hold or hike is about 70%. So if anything, Fed's going to hike, is what the market thinks. They think they're going to get vintage Kevin Walsh.
If the Fed hikes and oil prices come down and inflation's contained, what will the impact on S&P 500 margins be that are growing at astronomical rates compared to history right now?
Awful.
2%, 3%. I mean, this is part of,
think
Ilya, think about the last year.
Keep in mind the sort of sum total of what that would mean.
But over the past year, we've seen like tech earnings go from a 25% net profit margin to 29%.
Yes.
So let's just say the Fed not being able to cut, and maybe they actually have to hike coupled with oil prices, right? Because the oil price impact would filter through.
Yeah.
It's going to have to be strong enough to cancel out that additional 4% growth that we're seeing year over year.
Assuming that growth exists.
It does exist. We're billions of dollars.
Not if you hike interest rates and you pass legislation in 10 states now in the works saying that there's a moratorium on data centers. From the lovely world of politics, the main governor that vetoed the ban on data centers just abandoned her Senate campaign.
Well, Janet Mills.
Oh, well.
Would you?
Oh, well, Janet Mills is right. I mean, but you look at this situation and you go, 10 states want to do this, and the governor that vetoed it had to drop out of her Senate race. That's how well the people have received her doings. And so you look at all this and you go, okay, this is what happens. This is what happens every time, which is what we've talked about before. You get a new technology, there is a feverish hype cycle. Eventually, that hype cycle meets physical reality. And there is a washout. We have a deepening war on trade, a deepening problem with energy, a deepening resentment domestically, and no easy end to the bottleneck that these companies are already experiencing because they don't have enough compute for all of this, and no easy way to build it. You can see where the wall is. The question is, when does the market understand? Oh, and Apple is getting whacked.
Yeah, Apple's out here. 194 versus, 201 versus 194 expected. So it beat by 4% on the EPS. Revs came in at 111.18 billion versus 109.58 billion expected. So EPSs are up 22% year over year. Revs are up 17% year over year. If I'm also looking at this correctly, it means that EPS is down 29% quarter over quarter, and revenues are down 23% quarter over quarter. Nevertheless, Ilya, 270 here and a lot of jostling around. We're going to have to see what their AI plans are and if the market punishes them for it. But that's something that we're going to have to talk about, not necessarily even now or later, but probably tomorrow, because overtime's out of time for this Thursday. We'll be back on Monday, same time every Monday through Thursday, 4 Eastern, 3 Central, right after last call. So for Ilya Spivak, I'm Chris Vecchio. Good luck trading. Hopefully you got a good month. It's been a hell of a month.
Yeah.
Ilya's back with Macro Money up next.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
We built tastytrade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity,
and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Pay for back testing? No. Pick from hundreds of symbols.
One foot in front of the other, put your best one forward. You've got everything that you have ever wanted. It's already the best day, it's only the rest of your life. You've got the hair, you've got the style. Don't even care, you've walked the mile in those high-heeled shoes and your velvet suit. Two eyes on the prize. Once you win it, then it's yours. You've got all the time in the world to make a score. It's already the best day. It's only the rest of your life. You've got the hair, you've got the style. Don't even care, you've walked the mile in those high-heeled shoes and your velvet suit.
What an end to the month this is. Stocks are surging, and yet a war continues, and the AI narrative you might think looks creaky. So what's going on here? That's what we're going to try to figure out. as we look at the price action and break down what's behind it. This is Macro Money. I'm Ilyas Pivak, head of Global Macro here at tastylive. And we're going to update first and foremost on where these markets are positioned. And from there, see if we can't figure out how it is that the stock market continues to live on an island, whereas everywhere else, all the major assets, they seem to be thinking something entirely otherwise. Of course, the story for this run here has continued to be about the war and its implications for inflation and for policy, basically since hostilities began in late February. And in that initial phase, everything seemed to line up. Oil went up. That was going to mean inflation. Excuse me. That inflation was going to mean higher rates. Higher rates were going to mean weaker gold and a stronger dollar and weaker bonds. And not surprisingly, it was going to put pressure on stock markets. And all of that played out. Then, in early April, as news of a ceasefire first came out, everything corrected, but only stocks fully erased the war trade and then some. Everywhere else, the problem continues. And the question becomes, well, why the divergence? Here's what the S&P 500 looks like today. Many of the same technical problems in this run-up remain. We continue to see very weak volumes. In fact, we can see here in a very poetic way, here's the start of the war. When we break this level, we take out the range that was prevailing since October of last year. That was after the Fed chastised markets for over-extrapolating rate cut expectations. Here was that range. We seemingly crossed the Rubicon right here as the war set off a sell-off. When we retraced to retest this level, markets seemed like they thought that everything made sense. I mean, you'd think a ceasefire is better than not one. And so volumes hold up here on the bounce. But then as soon as the market crosses into territory where it begins to erase the war trade and extend higher, volumes fall off a cliff. At the same time, the relative strength index, a measure of momentum that I like because it's very simple. The arithmetic behind it is about third grade level. It is very clearly pointing to negative divergence. The price is setting higher highs and the index is not. That suggests that momentum is fading behind these moves higher. Now, that need not precede reversal, but it often does. So interesting to keep an eye on this. But nevertheless, we are at record highs and the war trade is nowhere to be seen, except for everywhere that's not the stock market. In oil, we're back basically to the top of the wartime range. In the bonds, we've moved sharply lower because yields are back up as that oil move has played out and as global central banks this week have reacted to that move. More on that in just a second. Gold is, of course, reacting to higher yields. It yields nothing. And so its war trade was a sell-off. Here was the bounce after the ceasefire. The sell-off has resumed. The US dollar benefiting from higher yields, of course, because that means that it confers more yield on its holders. One person's borrowing is another's interest income. And so as interest rates rose, so too did the relative appeal of the dollar. So in the same vein as gold declined, thanks to yields going up because it doesn't confer interest income, holding the dollar does. And so the dollar rallied here. Here was the ceasefire sell-off. We only came back about halfway, certainly not the full about face we saw in stocks. And we get a little bit of fuzz here today because there's an outsized move higher in the yen after the Bank of Japan and the Ministry of Finance there intervened against yen weakness. Of course, that yen weakness coming from higher yields because the interest rate differential between the dollar and the yen is particularly wide. Interest rates in Japan are very low. So when interest rates everywhere around the world are surging, thanks to what's going on with extrapolating inflation expectations from oil into policy, not surprisingly, the yen gets battered. Well, that also hurts the purchasing power of Japanese consumers amid that same energy squeeze and that same surge in input costs for everything, be it food or energy or plastics. All of those things disrupted by the closure of the Strait of Hormuz as part of this war. And so we get to a situation where Japanese officials basically say we've had enough, and they intervene. So there's a big knock-on effect here outside of the macro narrative pushing the dollar down, but the trajectory is still higher. This is a one-off, and we're still holding this level at which the sell-off has run out of steam in the past. Bitcoin seems to be marching to the beat of its own drum. It was down significantly, of course, in the fourth quarter of last year, even as stocks were looking much better. But now it seems like it's trying to turn a corner. And it seems to be, for now, somewhat oblivious to what's going on. Now, a big part of the story today, a big part of what got stocks in a better mood was the U.S. GDP report for the first quarter. And here we see a rebound, 2% annualized growth for the quarter. It's not the greatest reading. It's certainly an improvement on the 0.5% that we got in the fourth quarter of last year. But likewise, that was a quarter where we had a government shutdown. That government shutdown has since been resolved. So this was not a normal decline. This was much more a one-off type of a quarter. And we see that we don't come back roaring to where we were before the shutdown. We come back maybe about halfway. What looked normal after the tariff scare of the first quarter of last year is growth at about 4%. This now is much more analog to where we looked at the end of 2024. And so certainly not keeping pace, but likewise an improvement. Where markets probably took heart, at least looking at stocks, is the makeup. Now, it's interesting and perhaps it's somewhat easy to be near-term optimistic looking at these numbers, but unusually fixed non-residential investment outperformed consumption in these numbers, contributing 1.39 percentage points to those 2% that we saw at the headline number. So again, here's 2%. Of this, 1.4 roughly percentage points was fixed non-residential investment. Only about 1.08 percentage points, so meaningfully less, came from consumption. Government spending, of course, turned back on after the shutdown here. We can see in the fourth quarter of last year, it was negative. Now it's positive again. On the trade side, net exports shaved about 1.3 percentage points from the total because imports jumped much more than exports grew. Thank you, tariffs. That, of course, means that there was a sales tax on all things imported, and we can see that work its way through these numbers. Residential investment down, private inventories kind of a non-event here, only about 0.4 of a percentage point contribution. The real story is that the growth rate quarterly in business investment, and this is, of course, AI data centers, absolutely surged even as consumption has been slowing in recent quarters. Here was the very weak consumption of the first quarter amid that tariff scare. We rebuilt into the second quarter. Since hitting a third quarter high, consumers have been decelerating in their capacity to keep things going. But this is where the offset has come. And of course, we've just seen the earnings from the major hyperscalers, or at least 4 of them, over the past 24 hours. And we can see that although their earnings numbers didn't necessarily merit the greatest or at least the most consistent response, Google rallied, Meta got absolutely shellacked. The others landed somewhere in the middle. But we can see all of them announced major capex intentions to keep building these data centers. And that makes sense because use has absolutely skyrocketed. We can see traffic to the major AI tools is surging, and use of tokens as tracked by OpenRouter, it is clearly pointing to increased use and increased adoption. And what's interesting at this point is, of course, not only do we need all these massive data centers, but we are already seeing the industry creak. We're already seeing, for example, Anthropic impose usage limits at peak times because of this surge in use. We're already seeing that OpenAI has had to shut down Sora, its video generation engine, to use compute elsewhere because it didn't have enough. So we already see that what this explosive growth is doing is starting to strain capacity in the sector. And so it makes sense that the sector wants to build more data centers. We're also seeing, of course, that the price of energy is surging, that this is feeding into inflation, and that there is increasing opposition to these data centers being built politically. At least 10 states are mulling various moratorium measures on data center construction, and the governor of Maine that just vetoed a bill that was a moratorium on data center construction has just had to drop out of her Senate race. So there's clearly now emerging constraints on what this industry can do. And of course, it needs to be building tons of data centers to try to address those constraints. But the real question will be whether that build out, or at least the plans for that build out, because of course this is not money committed, these are the plans announced. So the constraint on all of this will have to answer the question, can investment, which amounts, as we can see here, the non-residential investment line here is this yellow one. We can see here that maybe somewhere on the order of 15%, 16% of GDP is accounted for by that component. 68% of GDP is accounted for by consumption. And so whether these results, modest though they are, because again, we're only about halfway back to GDP growth before the government shut down, 2% versus about 4%. But the question is, can we continue to drive the economy without the consumer? And does this explosive growth in data centers, does it really have the ability to materialize in a way that keeps this going near term? That's given all of the constraints, like more expensive energy, like tariffs and trade wars, which of course give us the negative net export numbers that we just saw, so on and so forth. Because the consumer does not seem to have a reprieve forthcoming near term, and so is understandably annoyed. Hence the efforts to put a moratorium on constructing new data centers. here is that constraint. We've heard it from the Fed, of course, yesterday, as well as from the ECB and the Bank of England overnight. But core inflation, we can see here, has been rising. This is outside of energy. It's been rising for goods. It's been rising for services, where the disinflation from mid last year is effectively over. Looking at the magnitude of these rises in service sector inflation, housing is building again, highest inflation there in 3 months. And of course, then there's the energy shock, where, as we've talked about, it takes about a month for big swings in oil to appear in headline CPI. So far, it looks like we've only baked in this initial rise, call it January and February, not the explosive rise thereafter. And that probably has some room to go. Certainly, bond markets would suggest as much. We can see that as crude oil rebounds back toward the top of its range, so too the bond market's measures of inflation are surging. In fact, we can see that what we saw as the disappearance of disinflation in CPI numbers, so here was the run-up in goods, that lasts essentially until about September, and then inflation starts to cool. And now, since the beginning of the year, it's rebuilding. Well, you can see in these break-evens from about mid last year, these break-evens are trending lower. Toward the beginning of this year, that's when crude oil starts rallying and inflation expectations move with it, and of course accelerate sharply higher when the war takes oil on a parabolic run. We've had a lot of major central banks report this week, and all of the ones where things were actually on the move as far as policy expectations were concerned came out with a hawkish message. Certainly the ECB and the Bank of England are in that camp now. The ECB is priced for 70 basis points in rate hikes this year. That's at least 2 hikes. The Bank of England is now priced for more than 50 basis points as well. You can see that right here. You can see expectations for the Bank of Canada have become more hawkish. Expectations for the Fed have become more hawkish, although here at least we're looking at standstill. But the likelihood, basically from now until October of next year, is baked into expectations such that the markets think the Fed is likelier to hike rates than cut them. Now, the baseline is still that the Fed is going to do nothing, but unless we get some sort of incredible change in the demand destruction story, unless what we're seeing in GDP starts becoming meaningfully worse, we're looking at a situation where inflation is elevated, interest rates are having to stay elevated accordingly. Most of what's been going on in growth, the biggest contribution is coming from building data centers. And although there's a ton more money that's set to pour into that effort, there are tremendous physical constraints from the supply of energy, from political will, from the supply of all manner of other inputs like helium, aluminum, plastics. The political will is not going to get any better because of a shortage in fertilizer and a rise in the price of food that's likely to follow. And so we're in an environment here, it seems, where the market is prepared to believe the shorter term story, but where the longer term one looks increasingly ominous. And the question starts to be, well, when does the stock market realize, or at least when does the stock market reconnect with what seems to be going on in other markets, which are betting on higher rates, higher inflation, higher energy prices, all of which crimp consumption and put spokes in the hyperscalers' data center build-out plans. and all of which are likely to become worse if they push through those plans anyway. If they try to force it with more money and just say, well, okay, we'll just get less data center for the money, but our money bucket is bottomless, we'll go and pay out, well, that's just more inflation and higher rates and a vicious cycle. For now, anyway, the stock market continues to live on the moon, whereas everybody else around the major asset classes seems to be embracing this idea. But at some point, and where that point is, we will know perhaps only in retrospect, sentiment seems vulnerable. And so with that in mind, I'm still short gold, long the US dollar, positions that are not doing that great today as we get this intervention move, but one would think that's a shorter term influence rather than something that derails the structural narrative. Still long Bitcoin, which again seems to be marching to the beat of its own drum and aiming higher. Still sitting on this short exposure in stocks. There is a ton of duration in it, and the risk reward was locked in. So at this point, these positions aren't really getting worse in terms of P&L because they're all risk defined. A short call vertical in the Russell via IWM, put verticals in the NASDAQ and the S&P via the Qs and SPY. At this point, these trades are effectively at max loss with still lots of time on the board. So if what we're watching here is a low volume meltup, mainly front running the earnings season and the end of the month, well, then the passing of Apple's earnings today and the shift from April into May could well give us a change of character in these markets. And that'll be important to watch. But at this stage, the structure of the trade makes watching what's going on effectively costly. And of course, I am still looking for higher rates as all of this continues to unfurl. And so I'm still short the longer end of the yield curve via these put verticals in TLT. And that is macro money for today. As ever, we are here Monday through Thursday. That's right after Overtime, a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things might go therefrom. I'm also writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money returns next week. I'll be back for Futures Power Hour and Last Call tomorrow. In the meantime, happy trading.